Good morning, everyone, and welcome to Traders Corner's July Investor Summit. The recent CPI report showed inflation is on the decline, and we've seen quite a rally in July. On our panel today, we've handpicked 7 professional trading experts of the highest caliber, and they've agreed to share their most consistent and profitable strategies to use in the current market environment with us today in a free online educational forum. In today's summit, we're going to learn from a wide range of topics, from dark pool hybrid indicators to how to leverage artificial intelligence into an automated strategy. So let's not waste any more time. Today's show is packed with great information. Our first presenter is a contributing author for Stocks and Commodities magazine and many other financial services periodicals. She's been a guest speaker for TradeStation, Metastock, TC2000, Money Show, and a lot more. She's a member of the CMT Association and earned her charter market technician designation. Since 1998, she's been the CEO of TechniTrader, an educational company dedicated to teaching aspiring traders and investors a complete trading process. Ladies and gentlemen, here to present Dark Pool Hybrid Indicators is Miss Martha Stokes. Welcome back to Traders Corner, Martha.
Thank you. It's great to be here again. I always enjoy talking to people who want to learn about the market. We're going to talk about dark pools today. And as always, I'm an educator. I don't recommend stocks because I feel that that is kind of manipulation of the market. And my goal in my early retirement was to try to help the retail side as well as those who wanted to become professionals, how to get to achieve professional or semi-professional status in the market and make that 6 or 7 digit income that is natural and normal for all the professionals that are in the market. And he has just talked about me as my CMT. I earned my CMT from cycle evolution theory, how to identify evolutionary cycle deviations, which altered the whole concept of cycles. And my second doctoral thesis was relational technical analysis. And I'm going to present a little bit of that today for you. So let's get on with it. The Chartered Market Technicians Association is a professional designated association for technical analysis at the highest degree and level for professionals. In May 2015, I was asked to present my new method of technical analysis called relational technical analysis to the membership of the CMT Association, of which there are many thousand people worldwide. My work has advanced the use of new hybrid leading indicators that reveal the dark pool buying and selling zones, which create powerful momentum energy because they are pulling huge liquidity out of the market into long-term investments. And you are no longer able to see them on the level 2 screen, and I will explain why. Many CMTs have adopted the use of these methods for using hybrid leading indicators. Many professional traders have come to me, many professional floor traders, to learn how to do this. So today you're going to learn the professional side of the market, which you rarely get an opportunity to do. It's an introduction to the dark pool indicators. It is not a full course. This webinar assumes you have some knowledge of technical analysis. If you don't, if you're more in a limited experience with stock indicators, you may feel overwhelmed at times. Take one aspect of the training and learn it well. Just one aspect. Do not try to learn everything in one brief hour because you can't. Take notes. Most people only retain about 20% of what they hear. I have an educational background. My family's in education, and I know we have learned over the years that people only retain a small amount of what they hear. Take notes, please. This webinar is an introduction to hybrid leading indicators that reveal the hidden dark pool activity before a huge momentum run. I know that most of you are chasing runs. Most of you are using all kinds of interesting new features that are out there, AI and all the different things that are happening, but you're also getting in late. The most amount of money that you can make is getting in early rather than late. It is not a complete course on trading stocks with dark pool activity. It is an introduction. What is a dark pool? For the financial markets, a dark pool is an alternative trading system venue, an over-the-counter venue that provides huge hidden liquidity for large lot transactions. Basically, the large lot buy-side institutions who manage all these different funds for you trade against each other and trade with each other off the exchanges entirely. And it is dark because you can't see into it. Dark refers to the fact that the orders in the ATS venues are not on any market maker book, not lit, meaning invisible on the exchanges. You can't see them on the exchanges. So your level 2 screens that you day traders are using, they does not show up. And I was asked if there's any way to see it. Is there any way to get it on the retail side? No, it is hidden, and the SEC has it designated that way so that you can't front run those large lots. Pools refers to the vast depth of the liquidity, also known as huge share lots offered for sale or purchase on these exchanges. The giant buy-side institutions will hold somewhere between 4,000 and 5,000 different stocks, company stock, and they will hold anywhere from 40% to over 100% of that stock. So it's a vast amount of stock that they are holding for investments, mutual funds, ETFs, and so on. You can't see dark pool orders even on level 2 screens during the day. If someone tells you you can, they are either misinformed or they're not giving you factual information. This is the facts. I know it's hard to accept, but that's the reality. The reporting of the dark pool orders is delayed when they are trading during the day. Usually they trade before the market opens, but they often will be trading during the day if they're trying to acquire rapidly. Mostly settling the market after the market has closed. So their orders are allowed by the SEC to be delayed so that no one can see or check them and front run them when they're quietly accumulating. And they use a penny spread or so. So it's not going to have a huge thing, and they're going to be holding a long period of time. So you can identify dark pool buy zones if you use end of day data charts to look for them. There's a specific pattern that you can find that shows you that there's a dark pool buy zone going on, and then you can prepare for the momentum run that happens thereafter. Dark pool venues or ATS venues started with a few giant funds. The off-the-exchange transactions in 2005 accounted for less than 5% of the activity of the stock market. It was approved in 2002, and then they started having the off-exchange ATS venues developed, and by 2002, 5% was there. In 2010, that had risen to 39%. The relative average at this time is about 40 to 60%, and it's around 60% right now at any given time, depending upon market conditions and market participant groups active in the market. There are about 50 dark pool venues currently, and this is a list of a few of them, and they are not accessible to you at all. And you can see that even the large exchanges have an alternative trading venue that they use and they make money on with the dark pools. Who are the dark pools? I call the most important market participant group trading in the financial markets today the dark pools. They control $100 trillion of assets worldwide. It fluctuates between 90 and 130 trillion, depending on how the market's going. And they are accumulating right now, big waves of accumulation, and you can't see it. I'll show you how to find it. They control more. They could easily pay off the US national debt and not even blink an eye. The dark pool group consists of giant buy-side institutions, which are mutual fund and giant pension fund companies for the Fortune 500 companies. Derivatives developers of ETFs, REITs, ETNs, ETPs, ETCs, and the digital assets that will be available to you probably early next year. Large buy-side institutions, the second tier group, who are not giants but are very large, who qualify to trade on the alternative trading venues because of their liquidity and the billions and billions of dollars they have under assets under management. They're second tier down of the buy-side institutions. All of these companies are huge corporations or global conglomerates. Banks are not part of this group. Banks are sell-side institutions. So you have the buy-side institutions and you have the sell-side institutions. And there's a war going on between the two of them since 2008. And right now, the buy-side institution dominates the market. Your broker is required by SEC regulation to fill your order in 1 minute or less, and it often looks like a blink of the eye and it's filled. Most dark pool orders average a 10-minute or longer fill. They're that huge. So they're gathering up all these smaller lots and then filling that order. When they can't get it on the exchanges, they pull from other areas. It can take longer as they gather vast quantities of shares to fill a large lot order. Dark pools are permitted to delay reporting and are usually not sent to the national clearinghouses until well after the market closes. Your order is sent to the national clearinghouses immediately after fill. So everybody knows what's going on, except you don't know what's going on in dark pools. This means that if you are day trading, you can't see any of the volume or activity of the dark pools on your charts. Dark pool orders are a minimum of 100,000 shares to block orders as large as 20 million shares. Dark pools were started in 2002 after the legislature of the US at that time changed the pricing structure of stocks from fractions to decimals. It was a very sweet and cute idea. Some people decided that it would be we would have a more efficient market if we went to decimals rather than have fractions, because the average retail person couldn't really figure out a fraction. I know that retail people can figure out a fraction because I was teaching during those years. Dark pools provide the most important market participant groups a place to buy and sell huge lots without being front-run by HFTs and others. They manage the bulk of the wealth of the US and other nations. Protecting the wealth of the middle class of America and other nations is their priority. They promise a certain or say they can do a certain return on investment, and they are trying everything they can to make sure that they meet that objective. Dark pools are an integral part of all financial markets worldwide. So their status is critical to the global economy. The stock market grows, then the economy. The stock market grows, then the economy. It's not the other way around. And you need to stop believing the news that tells you that the economy is getting better, so then the stock market will get better. And the market is not volatile, it's choppy. And there's a huge difference. So you have dark pools quietly accumulating over a period of time with the hybrid leading indicators showing that they are accumulating. And then at the end of this, you have a huge gap up. This is HFT activity. It is not dark pool. So this is SEC minus. I invite all of you to visit the SEC website. It is there for you. It tells you all kinds of things, and every day I get a list of all kinds of things that the SEC is doing and FINRA is doing. I keep track of the retail, professional side, and I help my students by telling them the most pertinent information. These are the dark pools. It's hitting on a penny spread, a very tight, orderly price range that they buy in. These are HFTs spiking price up, and the retail groups chasing are the beige or orange colored ones moving up. So the SEC has all kinds of charts that you can look at and understand the market better if you take the time. So I encourage you to do so. So we have a dark pool buy zone. We have another dark pool buy zone, and you can see that it pops up. These are called platforms. Platforms started to begin to be developed in the 2004 to 2005 era. And I realized that this was a totally new sideways pattern, very controlled, very precise. It's quite accumulation going on. And then a little bit of information gets out, pro traders or others push the price up to a new level. These levels correspond with earnings season. How long is an earnings season? How many months are in each earnings season? 3. So there's 4 earnings seasons a year. And those earnings seasons are in between. The dark pools are quietly accumulation. The dark pools do not have huge volume spikes. They have quiet hidden accumulation that goes on. And then after they have filled their needs and they're done over a long period of time, this is an extended period of time, 3 months, 3 months, 3 months. Now they're done. Okay. And so all of a sudden the HFTs take action. This is an HFT gap, and this is an HFT volume spike right here. High volume is followed by smaller funds VWAP orders. Smaller funds are not part of the professional side. They have been designated as retail by the SEC a few years ago during the pandemic. So you have an HFT spike, and all of you who are day trading will chase this because it gaps up and it runs up within milliseconds. HFTs trade on the millisecond. You trade on 1 minute scale. You cannot chase them. You chase them, you get in, you make a little itty bitty teeny tiny amount of money, and then it starts to go back down or it reverses the next day, and you have a whipsaw action and you say, gosh darn it, I don't understand. This market is so against me. I don't know why I can't make money. Because you are not understanding where you need to get in. You're told, oh, this is a dark pool. It is not. It is HFT. I know this is hard to believe because you've been told and told and told. Misinformation, manipulated information. You've got to get out of the retail news and learn more about the professional side. So, dark pool buy and sell zones, they have both. Instead of being fixated on finding a stock to trade, TechniTrader students learn what a dark pool zone looks like, what a dark pool sell zone looks like. They look different. Where these zones are located on each stock chart, how these zones impact your trading. In any given market condition, there is a profit zone where most of the highly lucrative trades occur. And I know from answering questions on Quora and asking questions all over the place and having a lot of people come and ask me for help that you are losing money. You're here today because you're not making the money you deserve to make, or you are losing money more often than you are making money. If you were making the money that my students make, you would not be here in this course. You would not be here. You are looking for help. You are not as successful as you deserve to be. The buy zone is that place where the giant lot institution seize control of price without disturbing the trend. It's a tight range that happens in a significant area. And what is that significant area? It's related to fundamentals. The buy-side institutions use quantitative analysis to determine the true value of the stock based on the prior or current fundamentals before an earnings season begins. They already know. They already know what those revenues and earnings are going to be for every one of their 4,000 or 5,000 stocks that they hold in ETFs or mutual funds or index funds or whatever they're doing. They have already sent people out, and they've sat with the CEOs and the CFOs, and they've walked the offices and the plants, and they have a very good idea of what every single one of those earnings reports is going to say. They already know. They've been accumulating quite a bit recently, which suggests that they believe that certain companies are going to have very good reports this time, and some of the companies they've been rotating out of because they know those companies are not going to have good reports. Wouldn't it be lovely if you could see those zones and understand what they mean? That's what I teach. So it is the HFTs and professional traders who create the momentum runs that retail groups chase with speculative runs. This is a dark pool. This is a millisecond trading venue. And all of the dark pools, all the professional sides are trading on the millisecond. You trade on the 1 minute. That's very unfortunate because you are way behind what is going on. So by the time it shows up on your screen, even real time, you're behind what's actually going on because they're trading on the millisecond. That's 60,000 times in a minute. So you have, not a second, I'm sorry, 60,000 times a second. So you have dark pools, you have pro traders getting in, making a little profit. Buy zone goes up a little bit. You have pro traders tickling the fancy of the HFTs. They push things up. There's a little selling. Smaller funds are selling because they think the world is coming to an end. And then all of a sudden it takes off like a rocket because of HFTs. This is a millisecond scale. You don't have millisecond scale. You can't afford millisecond scale because it's a $100 million computer system. And so you have to learn to read your stock charts better. Okay. Why most retail traders miss the buy zones? Retail traders miss the buy zones because they use outdated price and time indicators most of the time. And your AI and your red light, green lights, and all of your automated systems, as they are called, mean that you are trading late. And so you miss out on some of the big runs. You miss out on some of the huge gains. Price and time indicators were written prior to the dark pool ATS venues, all of them. Indicators that rely on price movement do not reveal dark pool activity because dark pools do not disturb the price range. They hit their traders. I have been on the floors of many of the buy-side institutions, and I have watched their traders and all of that activity. They are so fixated on hitting the penny spread and routing it. They use AI for routing. They do not use AI for trading. The floors are becoming larger and larger with more professional traders trading for the buy-side institutions as the buy-side institutions are growing and expanding and reaching out into more areas, and there's more and more technologies available, more assets and different types of instruments they can sell. They're expanding. So the floor traders actually are told the range that they can penny spread, and then they work on getting that penny spread. Dark pools do not move price in huge gains. I know this is hard for you to accept because you've been told otherwise, but this is the truth. I'm a buy-side retired person, and I know what I'm talking about. Most retail traders chase HFTs and professional traders after price has already moved significantly. So you're losing money, and you're also buying right into their selling. They're selling for profit. Hybrid indicators reveal dark pool activity. These indicators incorporate more data in a sophisticated formula and are more recently written. They define which side of the transaction the large lots dominated. Are they buying in accumulation or are they selling in rotation? You need to know, and you can't always tell because they're striking the penny. Where are the buy and sell zones? Each market condition has a specific location for the buy or sell zone. There are 6 market conditions. You have a bottoming market condition, which we've just come out of. We're now into a platform to moderately trending. There are trading ranges, and your indexes are in a trading range because they always are when we're in a platform market condition. They don't reveal platforms. The platform market condition is relatively new. It's been around for about 15, 20 years. That is the buy zones from the dark pool ATS venues. Moderately trending markets are when you get more smaller funds in there buying speculatively and actively trading their accounts, and some semi-professional retail traders getting in there, and a lot of foreign countries buying our stocks because it's starting to move and everybody's getting excited. Velocity market condition is pure speculation or gambling. Topping market is when the market has gone so far beyond fundamentals and rotation has begun sometime earlier by the dark pools because they realize that the fundamentals are far below the current price value. So they're going back and looking for stocks that are in bottoming formations or in platform formations so that they can accumulate a stock at where the fundamentals are slightly below price rather than above it. The dark pools are bargain hunters, they don't buy cheap stocks. Cheap stocks means that that stock is at risk of going out of business or merged or acquired. The dark pools are bargain hunters during moderately downtrending market conditions and thus create bottom formations. Who creates a bottom? Dark pools. They are selling in slowly steady rotation as a stock goes over speculation in price, contributing to the top formation. They do not create the tops. HFTs and pro traders drive the euphoric feeling of the stock market's going to go on forever. Oh, it's going to go up, and it's never going to go down. It goes so far beyond fundamentals, and then it will correct and have either a topping market for a bear or intermediate term correction. It will not go up indefinitely. The dark pools create the hidden liquidity draw that initiates the huge momentum price action of the velocity market condition prior to the topping market. So, platform market conditions. This is a platform, and as it starts the bottom, so the bottom formation is developing, and we have these indicators that confirm the activity of these quiet accumulations. As it starts to gain, pro traders step in and they're holding because they know that if they push the price up above the buy zone, that the HFTs will see that and trigger on it, because they're using, HFTs are programmed computers. They're not human beings, they're computers. And so they will trigger on this potential gap. And so the HFTs gap price up, because that's their job in the market, to provide heavy liquidity. When there's a lot of buying going on, they'll push more buying in to push it up further. Then we go into the next level of platform. Institutions pause for a little bit and then they resume their accumulation. Why? Because this company is growing and developing and having a stronger growth pattern. It's getting higher revenues, and that's going to result in better earnings. And so they're accumulating at a higher level because the fundamentals are now above that price range. HFTs gap it up again, and you can always tell when it's an HFT gap up. Why? It happens at market open and volume is huge. So that's a little secret trick. You want to know all the little secrets of the pro traders? This is one of them. Sudden spike of volume and a gap is HFT action. So there'll be another platform when it settles down, which it does. Then we have another platform. We have another HFT spike up. Wouldn't you love to be in a stock within this price with the pros? And then as it gaps up, you are in that stock. Now, pro traders are going to start taking profits, because what has happened? The stock has gone beyond its current fundamentals, and so it's going to drop back to its fundamental zone, and then it's going to gap up again. Sorry, I have my cat that's come in to visit me. So you see that over time, we have platforms that build and platforms that build and platforms that build. This is a platform market condition. Platform market conditions occur when? Write it down. When retail investors and retail traders are afraid that the economy is not growing. They're afraid of inflation. They're afraid of a recession. That's what you've been hearing all year long. There was never going to be a recession. There was never going to be a recession. If you want to know why, you can email me and ask why. The why is because there were so many job openings. Inflation happened and it was going to go back. It's down to 3. 2 is below average inflation. 3 is excellent inflation, because that means the economy is expanding. Inflation means expansion. You can't have an expanding economy unless you have some inflation. Inflation starts with payrolls. More people are earning higher income and higher wages, so inflation happens. That's just the natural way of things. We had a long recession after the banking debacle of 2008 and 2009, the sluggish economy, because there was no inflation. It was deflating at times. So that's not what we want. So where are the buy zones? I think I went backward. Okay. Beyond the basics of chart analysis, you can learn every strategy there is on stock or option trading. You can learn every indicator, candlestick buy or sell signal, short signal. You can take every seminar, webinar, and read all of the information available for free on the internet, and there's tons of it. But you will not be as successful as you deserve to be until you understand the catalyst behind the technical patterns you try to find to trade stocks. We have a dark pool buy zone, very tight compressed pattern. We have pro traders pushing this up. We have taking for profit. However, there are smaller funds who are trying to sell on the bounce because they think this is a bounce. They think the trend is going to continue down, but it's not going to. Another professional entry signal, a little bit of buying going on by the accumulation, but it's starting to slow down. Pro traders push it up again. We have a attempt to sell down by smaller funds, but it's pushed back up. Pro traders are in control of price. They're in control of price. There's a little, it comes out of the buy zone, and so there's a little bit of selling going on here. Again, smaller funds selling. Then we have another pro trader attempt, tickles the HFT program, and the HFT runs it up. That's what you need to learn to read. The catalyst behind sudden price action is most often dark pool activity that began weeks before the sudden move. You need to identify the buy zones before price moves with momentum and get in with pro traders. You want to nestle in with the pros. So you have that little area, that's the buy zone, and you have HFT action. You should have that memorized by now. Dark pool accumulation happens over an extended period of time, And in between, there are gaps and runs. So you want to be in before the gaps and the runs so that you can monitor what's going on. At some point, you're going to have an HFT spike that's so huge that it will tell you we're coming to the end of this run. We're coming to the end of this movement. There's going to be an intermediate term correction because we are in a baby bull. For this company, it has gone as far as it's going to go because fundamentals are probably right around here or down here. I would say they were down in here. We have a topping action because there's rotation going on while you are buying and buying because you think the stock is going to go on forever. And you keep buying, oh, and let's buy on the dip. And the professional traders, they settle into sell shorts. They don't have to push the stock market down. They don't need to drive prices down. They're not forcing prices down with sell shorting. They would go to prison if they did. They just have to sell short early and wait. And then as you buy on the dip and stuff, and then more selling happens, rotation down, and then all of a sudden it will plummet down. And then when it plummets to a certain price that's convenient for them, they will buy to cover and make a huge profit. Selling short is all about getting in at the right time and being patient and waiting for the stock to plummet. Stocks need more and more buyers to keep the movement up. Stocks can fall because of a void of buyers. If there are no buyers, the stock will gap and run down just because there aren't any buyers. As long as there are buyers, it will continue to move up. So you need to understand when the buyers are evaporating, and they evaporate when the buy side starts selling. Okay. In the Methodology Essentials course, you will learn the shift of sentiment pattern, and I'm going to show you it here. There's a selling going on as the smaller funds late start selling and dumping out. And then there's a shift of sentiment as the dark pools start buying, and that is your bottom area. That it means that fundamentals have dropped below the value of the price of the stock. When fundamentals drop below the price of the stock, the dark pools will step in and they will buy in a certain range. This is a range right here. Pro traders get in, push the price back up to the fundamental level, and then there's a little consolidation before you have a huge run up. You need to understand this pattern in bottoming because we still have a lot of stocks that are bottoming. You need to understand topping because there's going to be some stocks that top soon. And it's all about the buy zones and understanding where they are. This is a combination of candlestick patterns and large lot hybrid leading indicators. You need to use both. The shift of sentiment pattern occurs as HFTs search for dark pools liquidity draw. They make mistakes. They see the dark pool activity, but they are unable to determine whether the dark pool liquidity is rotation or accumulation. So they often see a high liquidity activity, and so then they gap the stock down against the buying. Happens all the time, see it all the time. At times, the HFTs trigger orders accidentally trading against the dark pools. It happens quite a bit. This creates a temporary one-day sell down or 2 days, which often reverses the next day. Why? Because the dark pools go, wow, this stock isn't just at a bargain, it's at a real bargain. Let's just move in and push it right back up to where it's still below its fundamentals, but still a bargain. Extreme price action is caused by HFTs. The shift of sentiment occurs prior to the HFT action on the upside. Candlesticks have a specific pattern and formation on the chart that is easy to recognize once you have seen a lot of charts. I study about 1,000 charts a day after market closes, so I want to see get the feel for the market overall and what the professionals are doing. Students can just check 10 to 20 charts and have some good stocks to buy that next day, and it gives you a feel for the market. Bottoming stocks, who controls price? We have a shift of sentiment that occurs as the HFTs gap it down on huge volume. Then we have a dark pool accumulation. We have some pro traders running it up. Pro traders will be in this bottoming market and will be very choppy and indecisive over an extended period of time. Why is that? Because smaller funds waited. They held. Dark pools got up way up here. Pro traders started selling short, waiting for the stock to collapse because there would be no buyers. People just say then go, oh, the market's collapsing. Oh no. And they just stand there and watch their stocks go down because they're not using proper stop losses even on their long term. And at some point, they can't stand the pain anymore. They've lost half their or more of their capital and their investment. So then they sell. HFTs gap it down. And then the buy zone forms, So we have this little buy zone going on right here. And they quietly accumulate intermittently. And as they quietly accumulate and fundamentals start to improve, the lower end of the buy zone moves up slightly, and pro traders can push it and cause some gap ups by HFTs. This is something that you need to learn because there are many types of bottom formations, and so there's several that you need to learn. And this is a very good way that you can improve, even if you use AI or recommended stocks, or if you use red light, green light, or all these automated systems, you still need to check the chart yourself, because the AIs and red light, green light right now that I have studied, because I need to be able to recommend them if I feel that they're worthy of my recommendation, go buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. You can't make any money that way. So I'm not recommending any at this time. Your indicators and settings. Most retail traders have an incomplete set of indicators. There is nothing wrong with using indicators that you wish. However, TechniTrader students excel at trading and have more profitable trades because they are taught to use a complete set of indicators for identifying dark pool activity. When I do trader consultations, the most common mistake I see is an incomplete set of indicators. Most of the time, the indicators you choose are using only half of the data you need to study. The net result is you make lower profits. I do not care what indicators you choose to use, so long as they make sense to you. The indicators should be easy for you to understand. However, you must have indicators that include all of the data you need to analyze. In the Methodology Essentials courses, we teach the 5 leading hybrid indicators that reveal where dark pools are buying or selling. This gives TechniTrader students a decided advantage over traders who only use MACD or popular price only indicators, and we have scans that search out and find dark pool buying and selling for you. So you have the scans. Let's quickly go over data for indicators. Using indicators properly. In order to use any stock or market indicator properly, you must understand the indicator category. What market data is used in the formula? What market conditions was underway at the time the indicator was written, and the intent of the writer. He intended it to do something. What are the limitations of the indicator? Everyone has limitations. Is it for short-term or long-term analysis? I see a long-term analysis indicators being used short-term. Bad idea. What indicator patterns form and what each one means? Under what trading conditions does it work ideally? There are specific conditions that it was designed for. Which sub-indicators to use within indicators of any, you should always use subordinate indicators with your primaries. The exact formula is only useful if you are a mathematician and wish to alter that formula for your own use. You have period settings. You don't need to know what the exact formula is. All you need to know is what you need it to do. When you alter an indicator, it becomes a proprietary indicator unless you release the formula. Some of you may want to do that, and that's fine. But that's really a waste of your time if you just want to trade and make money. If you're busy writing indicators, then be an indicator writer. If you want to be a trader and make 6-digit income, be a trader. Don't try to do both. It's impossible. Data used in price indicators. Price, time, and quantity are the 3 primary data. 2 data are needed to create a stock indicator. You have to have 2. Price and time, quantity and time. Price and time indicators lags to some degree. Quantity and time indicators sometimes lead. Price, time, and quantity indicators lead most of the time, and they're called hybrid leading indicators because never before, and it's been a few years, but before this time when we started combining price, time, and quantity, they didn't exist. So they're hybrids of price and time and quantity and time, and that's why they're called hybrids. Why do they lead? Because hybrids reveal dark pool activity. And we have that in quantity. What side of the trade are they on? The buy side or the sell side? So you have time, you have price, you have quantity, you have price, time, and quantity in these certain indicators. And that's what makes the difference. Trend indicators are let's go. Categories of stock indicators. There are many categories, and most of you only use one category. You need to switch it up and move a variety. Trend, trending or non-trending, direction, continuation. These are usually simple price and time indicators, the oldest indicators. These are not as useful as they were before dark pools existed, so be careful using them. Velocity, acceleration, deceleration, volatility, momentum. These are also mostly price and time indicators. You can use one, but use something else. Quality, strength, continuation, durations, and sustainability of the trend or run. These are value indicators revealing the strength of the price action in relation to volume. Oscillators, overbought and oversold are what you're using, overextended, increasing or decreasing energy are what you're not using. There are volume oscillators and price oscillators. TechniTrader students learn to use both. You need to use both. Flow of funds is money flowing into the stock or out of the stock. The best are cumulative and formula construction, and there's also one for a percentage of shares held by institutions, which I use all the time. It's accumulation distribution indicators, large lot activity versus small lot activity, quiet accumulation, quiet rotation, or quiet distribution. They reveal where the dark pools are slowly acquiring millions of shares of stock or when they are slowly rotating out of a stock to purchase a different stock. So there's rotation, the money stays in the market. There's distribution, money is going out or flowing out of the stock or the market. Right now, it's only accumulation and rotation. There's no distribution going on whatsoever. Categories of indicators. Hybrids. Indicators provide more than one confirmation and or include all three pieces of that market data in a more complex formulation. These lead price. In other ways, they show a signal before price moves. Cycle reveals cyclical patterns in some stocks. Cycles can warn of an impending topping formation before the price collapses. Cycles lead. Cycles also show when a stock is about to bottom. These are part of the dark pool indicators. Specialty indicators are detrending, relational, comparison, deviation, harmonic, pivots, and stops. Subordinate indicators applied to primary indicators, don't use them by themselves. Price on a chart is a primary indicator. These include moving averages, which you can apply to price, linear regression, moving linear regression channels, and bands, and I use those and teach those. Subordinate indicators make analysis faster and easier with simple signals that are reliable. TechniTrader students receive a customized set of indicator tools set up for their specific trading style or styles with detailed instructions on how to analyze and use each indicator for fast analysis and quick stock picks. Doesn't take any time at all. So dark pools show that we have a shift of sentiment, and their accumulation started right in here after the HFTs gapped it down by mistake. We have a bottom signal here indicating that they have gone beyond fundamentals, and so the dark pools start accumulating. Smaller funds are selling, and the quiet accumulation begins, and the bottom commences. This is what you're going to see in the patterns. So that is a signal, pre-signal, that a bottom is about to commence. And you can see that this is a higher low, higher low, higher low as they accumulate, and it starts to push price up. And this is the result after that. The bottom completes quickly. We have pro traders settling in waiting, and then the HFTs and others run the stock up. And so you're in early, and you can just enjoy the ride of 10 or 15 points. It's a lot of money. Dark pool buy zones and momentum surges. Dark pool buy zones are not a momentum price action. The dark pool's intent is not to move price, but to strike a penny spread to achieve a desired price within a set price range. As the dark pools buy over many weeks and months, they slowly drain the liquidity for that stock. It's still available for short-term trading and selling short, but they are drawing out. They create a liquidity draw that professional traders can identify with relational technical analysis that I have taught them. When pros find the liquidity draw, they begin buying the stock for a short-term trade. Most professionals swing trade. Very few professionals day trade anymore because there's no money in it. It's too hard. There's not enough liquidity during the day because all the liquidity is on the dark pools. This creates more demand and volume increases as the pros do their swing trading. At this point, the stock is poised for a sudden huge gap or large up day by HFTs. The dark pools cease their automated buy zone orders because they can turn their TWAPs on and off at will, waiting for professional traders, HFTs, then smaller funds, and then the retail crowd to start buying the stock. So it goes in this order. Dark pools buy, professionals buy, HFTs gap, smaller funds buy, retail buy, and there you have it, creating the speculative momentum runs that always follow dark pool buy zone completions. So you're the last guys in. Don't be the last guys in. Dark pool hybrid leading indicators. TechniTrader has developed a unique set of indicators that you can use with your preferred charting program. You do not need to change your charting software. Whatever you use is great. However, these tools are only available with our comprehensive courses because you have to learn how to use them. They're more complex than using a moving average or a MACD. The indicator tools require training and skill development, and you will get that with TechniTrader. It is not just about a crossover signal or a candlestick pattern. It is learning to recognize subtle footprints on the chart using all of the data, price, time, and quantity. So what we have done is incorporate our IAI in our program. So there you go. You have it already once you become a TechniTrader student. Hybrid leading indicators. Learning how to use these indicators is not difficult. I have taught all kinds of people with all kinds of disabilities, even people with autism. Anyone, including someone who has never traded before, can learn with practice how to find dark pool and sell zone, buy zones and sell zones before price moves with momentum up or down. The difference between how you trade right now and how you will trade when you become a TechniTrader student is the profits you will make. Instead of pulling 10 cents or 20 cents off and being so happy about it, you're going to be pulling off dollars. The ability to enter a stock before a huge momentum move provides the lowest risk and highest profit potential trading. So you're minimizing your risk and you're expanding your profitability. Whether you want to swing trade, day trade, or position trade, the Methodology Essentials courses is what you need to succeed. I wish to God I had gotten here 17 or 18 years ago. This is Ernest, a longtime student. I hear comments like this all the time from my new students who have spent years trying to figure out how to trade. The single biggest mistake that retail traders make is to assume they can figure this out on their own. You have 20% of the information you need on the internet. The 80% that you really need comes from TechniTrader and my training. This is why I do this in retirement. I get a blast teaching. I love it. A supportive, comprehensive training course is mandatory if you want to succeed in the modern automated market and make the kind of money you deserve to make. Without a trading process that gives you a complete step-by-step detailed roadmap to consistent profits and results, you will lose money more often than you make. Do not struggle for years and years. All you do is erode your capital and destroy your confidence. It is far more difficult for me to get rid of very bad habits that you've developed over many years than it is for my new people to learn how to do this correctly in the first place. My beginners start out making money. They don't go into the market and lose money and then save more money and come back and try again and save more money and try again. They start making money right away because we have practice on a simulator and they have the skills and the knowledge. Give yourself the gift of a good education because you deserve it. Everyone who wants their kids to have a great college education, you deserve to have an education too. We have a 24-hour bonus for all of those of you who have stuck through my long study here, how to exploit high-frequency trading. You learned about dark pools today. Now you can learn about high-frequency trading activity. It's a 1-hour video that we sell for $99 on our website. It's free for 1 week. All you have to do is, can you put this in their little chat box so they can have this, so they can click on it if they want to get this. And you use their coupon code Traders Corner Gift. This is my gift to you. We give out a lot of free education on our website to help you get started. And when you're ready to get serious and start making real money, then you can contact us and we will get you started. Thank you for having me. I appreciate being here, and I really enjoy talking to all of the traders, from the brand new beginners to those of you who would like to become semi-professional or professionals with SEC licenses.
Thank you so much, Martha. Very interesting topic. This is the first time I remember seeing you on the show. You had me on the edge of my seat, and I think it looks brilliant. Great information on dark pool trading activity. Your tools on identifying the dark pools look amazing. Ladies and gentlemen, if you want to learn from a longtime chart holder and member of the CMTO Association on exactly where to enter and exit a stock to capitalize on huge momentum runs in either direction by identifying these dark pool zones, then Martha Stokes of TechniTrader has a solution for you. I'm going to type Martha's link in the chat box in a minute, and I want to thank you again for being here today, Martha. Happy Saturday. Have a great weekend. Thank you for making such a generous offer to our audience.
Thank you. Bye-bye.
Be well. Ladies and gentlemen, I told you at the top of the show that we had a great lineup today, and our next presenter is no exception. He began his career in 1980 and was one of the original market makers in the OEX trading pit at the Chicago Board of Options Exchange. He has traded all the major exchanges in Chicago and is currently a member of the CBOT. He's spent the last 8 years as a mentor and educator to traders of all levels. He's also developed a program for high school students that allow them to learn to trade the financial markets. Ladies and gentlemen, it is my pleasure to introduce a seasoned pro who's always entertaining, never bashful, rarely filtered, and a monster at the poker table. Here to present Saturday Options Call Weekly Options Trading is Mr. Todd Bubba Horwitz of BubbaTrading.com. Welcome back, Bubba. Check your mic, brother.
What's up, brother?
Hey, there he is.
I thought you were going to unmute me since you muted me when I got in here as I was listening.
It auto mutes people, and I'm concerned we might have the wrong screen on. It looks like you're in a Discord window and you got a Word document open.
Hold on. I don't. Who can tell? This is very, very complex for me. I'm a simple guy.
I noticed the year you started your career was the year I was born. So
is that the right screen?
There we go. It looks like your PowerPoint. Take it away, brother.
I want it clean, I think. There we go, right? Okay, we good? All right, anyways. Yeah. Well, what's up, everybody? Good morning, or good afternoon, or good night, wherever you happen to be in the world. And I am Todd Bubba Horwitz, and of course, we talk about options. I actually trade everything, and I have done so since 1980. But today we'll talk about options and derivatives and how to make the best use of them for yourself and how to cut down on past losses and start to put yourself on the road to victory. In the meantime, nothing can stop the man with the right mental attitude. Really politically correct to be man or woman, but you know what can I tell you? This is Thomas Jefferson. It was before all this political correctness. Right mental attitude from achieving his goal. Nothing on earth can help the man with the wrong mental attitude. And of course, that a lot of trading, a lot of what we do is about your head and about your mind. Because if you can't get your mind right, as Southern Martin said to Paul Newman and Cool Hand Luke, then you got problems. You got to get your mind right. So in the meantime, obviously you've seen these before. The disclaimer: there is no guarantees that you'll make money tomorrow. And if you're here to think you're going to get rich tomorrow, you're not. So you're in the wrong place. This is an education and how to make money and how to grind it out. And the way that you make more money is by being able to trade bigger size. Okay, and you get to bigger size by being successful. As I said, I am Todd Bubba Horwitz, 44 years in this business. Obviously, I was a floor trader for over 30 of those years, all the way through the 2008-2009 crash. I was one of the original market makers in the SPX, and I do trade every recommendation that leaves this office. I am in there with you. Okay. In the meantime, I think this is an important section. Trading is not a straight line up. You might read a lot of the bullshit out there that tells you that you can make nothing but money and you're going to get rich. I'm here to tell you that there's going to be drawdowns, and it's how you handle those drawdowns that will make you successful. It is how you deal with adversity that will make you successful. There is no straight line up, and anybody who tells you is full of shit. So excuse me for my language, but I get very frustrated when I hear a lot of the crap that's out there. In the meantime, all trading starts with a plan, okay? And again, within a plan, first thing I do is set goals. And if your goal is to turn 1,000 into 1,000,000, you have no chance, okay? If your goal is to try to increase steadily and turn 1,000 to 2, and then turn into 3, and then 3 into 6, there's a real possibility that you can do that over time. it is not going to be a one-day event. Okay, I mean, there's always the chance to get lucky and catch a miracle, but overall, it is not a one-day event, nor is trading. Trading is about preparing yourself for everything that you need to do. So be prepared and to be successful. Okay. In the meantime, I'm just going to get this chat window open in case there's any questions. And then you got to manage your risk. You got to set some goals, and the goals have to be reasonable, because again, attainable goals give you the opportunity to move forward. Okay. If you make them unattainable, it only creates frustration. When you satisfy or reach one of your goals, do a little bit of celebration, go to dinner, go buy something, do something. Okay. Make yourself happy. The strategy that you're using is important. The entry, trade management, and trade analysis. And again, there are things that we do to make that a lot easier, and using what we call the phases of the market and how we trade it. But again, the first thing you got to remember, okay, trading is hard. This is not easy. Nobody is out there handing $100 bills on the street corner, okay? There's probably not a single profitable trader that will claim that trading is easy. Instead, he or she will most probably say that trading is tough and competitive, that it requires constant work if you want to stay in the game. So why is trading so hard? Well, again, you're trading against others. Realize one thing, you and me are friendly competitors. Market makers are your friendly or unfriendly competitors. Okay, this is a competitive business. And when I traded on the trading floor, it was ultra competitive because you're trading live without charts that you had to make decisions in markets in under seconds. Okay, it's hard because there are so many aspects of trading that you need to know. Some of those are the quantity of misleading information out there, but your own biases and the necessity of striking a balance between risk and return. Okay, so again, if you study, if you work at this, and I don't mean you're going into a full-time class like college. I'm saying that if you keep yourself and understand what you're trying to accomplish, then it's still hard because there's still disappointment. Just like when I got my pocket aces knocked off yesterday for about $2,000 with a guy who called with a pair of nines, but that's another story. In the meantime, it's about making decisions. Okay, are you decision making? Are you chasing the market? Are you trading what's available? Are you setting yourself up with the right position? Okay, and that's again, nobody knows for a 100% certainty what is the best, but if you can read and understand what's going on in the market, you can give yourself the highest probability. And at the end of the life, all you can deal with is probabilities. You're going to be like an actuary, which is who determines what insurance rates are, life insurance. Again, everything is based on statistical numbers, and the numbers are relatively easy once you learn how to read the market a little bit. Now, if you don't know what options are derivative contracts, okay? They are derived from the stock or from the future or from the commodity. They are giving you the right or the obligation to either buy or sell. In the equity markets case, 100 shares of stock, okay? In commodities, there's different quantities. Obviously, we're not talking commodities today, but they do have options as well. But you're buying the right or taking the obligation to buy or sell 100 shares of stock at a certain time at a certain date. Okay, but in the meantime, you can make money trading that back and forth on either side of the market. And of course, for that right, you are paying a premium or you are collecting a premium, depending. There are two types of options, calls and puts. But again, there's really millions of types of options because, of course, if you learn how to create different types of positions, okay, you can create your own derivatives. All right, remember, derivative products are exactly what they say. They're derived from something, and then when you have different derivatives, you can then start to create your own derivatives through those. So you can start to create neutral trades, bullish, bearish trades. There's all kinds of ways to create, and you can create trades that get more bullish as the market goes up or more bearish as the market goes down, but start off neutral. So again, you want to make sure that you're putting yourself in the absolute best position, okay? And trading options may sound risky or complex for beginner investors, and so they often stay away. Well, again, they can be complicated, especially if you're getting involved in the con game that is out there that makes the ridiculous promises that is preying on hope and lottery versus actual work and understanding. Basic strategies using options, however, can help a novice investor protect their downside and hedge market risk, which we've done for years. In fact, my entire equity portfolio is hedged and protected, and I love when the markets go lower because it lets me buy more stock on the way down. But that's a mass derivative around my entire portfolio. We look at 4 strategies: long calls, long puts, covered calls, protected puts, and straddles. Now again, some of those positions I would never use on their own, but in combination of others, they make sense. And that's what you need to start to learn, is where does it make sense and how does it make sense to use the different derivative options. And of course, trading can be complex, but I mean, don't let the information you might have learned in the past, okay, which is all the Greeks are unimportant to what we do, okay? Greeks are more for floor traders that can get an edge on one side of the market, and then using the Greeks, they can lock in some profits. We don't have that opportunity. As a retail trader, which I am just like you, I'm a retail trader, we can't take advantage of that. So you don't need to know delta, gamma, vega, theta, and rho. You know that theta, if you don't know what it is, it's just time. So I just have to say time decay. And delta is the only one we really want to know. And if you understand that the at the money option, no matter what date you're looking at, is approximately 50 deltas, okay? And delta is really the expected movement of the stock. If you have a 50 delta option, the stock moves $1 up, that option should go up 50 cents. And of course, as the stock goes up, so does the delta. But in the meantime, again, these are secondary to the things that you need to be aware of, like trading psychology, okay? You know, one of the problems with people that trade or get involved in the markets is everybody's got an opinion, including myself. But do you have the ability to get away from your opinion and let the market teach you and trade where the market wants to go, not where you want the market to go, okay? That is something that you have to remember, can you trade where the market wants to go, not where you want it to go? And if any of you have seen me on TV or in some of the interviews I do, I am on record, and I stay on record of saying that this market at some point is going to sell off 50 to 70%. Okay. However, my positions right now in my short-term trading accounts are all long this market right now. Okay. So again, are you able to get through the fear of loss? Are you able to get through your own opinion? Can you get through the superiority complex of thinking that you know more than the market? You know, there's an old saying that amateur traders want to be right, professionals just want to make money. Which one do you want to be? Okay, so you have to learn to manage your money. You have to learn to understand how the market functions and how the market trades. And we're using options as our investing vehicle because they're the easiest and give us the most opportunity to use a lesser amount of money so that we can get started. But also you have to keep in mind that money management is a very big key to what we do. And although leverage is a great tool, okay, you have to also understand that you cannot get over leveraged because that will create margin calls. If you saw the moving trading places, margin call, gentlemen, you cannot afford to put yourself in a position to have over margin. Trust me when I tell you that if you learn to grow your account properly and you use proper risk management tools, then you will have an opportunity to make a lot of money. But a lot of money doesn't come overnight. A lot of money comes by starting, let's say, with one contract, getting to 2, getting to 4, and so on. And we're very strict on the type of money management you use because you have to make sure that you understand where your losses are. Now, we do not use stop losses whatsoever because every trade that we design, every trade that I recommend has a built-in stop loss, okay? The construction of the trade, which you'll see shortly, is already designed to tell you what the maximum amount of loss is on the trade. and knowing that if I put a trade on today, the maximum loss is X. Next week, the maximum loss will be less, because again, the design of the trades that we do are designed to reduce risk each and every day, okay, while giving us an opportunity for unlimited upside potential. Don't lose money you can't lose. Again, if you're trading or investing with the mortgage money or the car payment or the grocery bills, don't trade. It's not good for you. You're not going to make it. You're only going to lose your money, and then you're going to have to find new money to pay for the other stuff. Live within your means. Again, trading capital should be capital that is on its own. That's not part of your monthly income, not part of your monthly bill paying, not part of your kid's allowance. It should be money that is earmarked to trade. And that's how you can become a professional trader down the road, when you can prove to yourself that you can make money, and you can make money regularly. And then once you can start drawing from that account, then you can then start to be a little bit more aggressive. But first, you've got to learn those basics before you get there. Now, different strategies that you can use. Like I said, there's millions of strategies, seriously, if you put together combinations. And some of them, what we like to use a lot of, are calendar spreads, okay, and weighted double diagonals. Okay, those are two core trades that I like to use, because inside of both of those trades, there are limited risk, unlimited potential reward. You have the opportunity in both trades to get on one side of the market at some point and let it rip and let it run, and continue to put yourself in a position, which brings into the terminology of rolling. Okay. Now, we do many types of rolls, but one of the rolls, if you're familiar with options, is known as an 80-50 delta roll. Okay, and if you're not quite sure what I'm talking about, I'm going to show it to you right now. Okay, if you look, we'll use the spiders for this, just easier. If you're using, okay, and you have an option position on right now, so let's say, for example, for Friday, July 21st, coming next week, if you own the 444 call in the spiders, that is an 80 delta option. An 80 delta option is almost like the stop. Okay, if you owned this and wanted to lock up some of the capital, but did not want to get out because you felt that the direction was still correct, you can simply create a vertical spread, and you can sell the 444 call. And we're going to go back to, and what you'll learn with me as I trade the at the money options, I'm going to go to the 449 call or the 450, either one, and I'm going to take $4.06 out of profit out of this trade, but yet I'm going to remain in the trade and remain long, so that I do not have to give up the opportunity that I can go further in the next week, but yet I can put money in my pocket versus just selling the entire position and going back later and saying, boy, I wish I would have kept it, I was right. Okay, and those are one of the tools that we're going to use on a regular basis. Another part of the rules is when you're doing like weighted double diagonals or you're doing calendar spreads, there is a short option involved or a short pair of options involved. For example, if you're doing a call calendar, you're long a call out in the future, and you are short a call in the weekly, or in our case a lot now, the dailies, okay? And you are rolling those dailies every day, so that's a different type of roll, okay? And I'm just gonna skip forward for a minute. These are current positions that are live today. They're on now, they've been on for a while. And what you can see here is we have what started out in the QQQ, a weighted double diagonal, okay, that at the time when it was open, we had the short 370 call and the short 362 put for the daily. In this case, it would now be Monday. And we have open in August 18th expiration, when the trade started, 2 372 calls and 2 360 puts. Well, obviously, the markets have had a monster move to the upside, and we are now long 1 372 call, short one 370 call. And now we have rolled one up and taken out $870 worth of profit on this trade, bringing our net risk down. The 2606 is the maximum risk. So the risk in this trade now is $1,800, a little under $1,800 with about 30 days to go. And since my average collection is somewhere around 70, 80 cents to $1, by math alone, I should be able to collect the rest of the debit without any movement and be able to get paid off on this trade. And of course, I'll show you on the Qs, which was a trade there. Q. Okay, so if I take the Qs and I have the 17th, whoops, I got the 17th I have, which is the 372. I'm going to set this up. Give me 1 second. I wasn't for sure what I was going to do here, but I'm going to just set up a trade for you. Okay. And we're going to take the 372. Oops, 372. If I knew how to push buttons, I'd be dangerous. 1, 2, 3. 62, 372, 362. Okay, so let me reverse this out. So I'm going to take right now from Monday to Tuesday, I'm only getting 25 cents. Okay, from Tuesday to Wednesday, it depends where the markets go. If the markets continue to go up, guess what? I'll get the 25 cents and I'll also get more profit on a long call. Okay, plus the fact that if I actually went out right now today and looked out into the future and went to the August expiration, which is where my extra long call exists, okay, my long call, which is the 370 call, okay, or excuse me, 372 call, is worth $14 right now. Okay, so I could actually, in theory, if I wanted to, take off the extra call at $14, still collect between 25 cents and $1 a day and make money that way and take all of my risk out of the trade, or I continue to hold that call and roll that call and play with it however I choose to. So again, those are choices and those are things that you learn within the market. But as you can see in the example of Google, we made money on both sides of the trade. We rolled up and we rolled down so far and continue to be involved in this trade and allow it to work for us as we continue to go forward. Okay, so I think that I think that this is something that you want to look for, and you want to learn to understand that you're using different reasons and why I'm going to do something. But we know the minute we put these trades on, okay, that we're getting ready to move forward. We're getting ready to roll forward. Okay, and we know we're going to bring down and reduce our risk on every trade, every day, or every week. And at some point, the math weighs out. The minute we put the trade on, if everything works the way we want it to work, then we know that there's a profit locked in. Now, again, obviously, there's not all going to be profits. There's going to be some losing trades there, but you know that the top of your risk is going to be reduced each and every day or each and every week as you move forward. Okay, and as we look into our results, so these are live. These are from this morning. I do a live webinar every Saturday, which you'll be part of if you become a member. Okay, and these are results that we have on older trades. Okay, and what I'm showing you here is this was the QQQ double diagonal weighted. This was a double calendar. Both of them made money. Now the reason you see the plus here is that this is the choice that I gave members this morning, is to whether you want to sell out that extra call and lock up the profit right now. And they certainly, my recommendation is that they do so, because now this particular trade is over on this Friday the 21st. So better to take the cap now, because you know that the time is going to eat away at the position versus holding on and praying for a bigger move. Okay, and of course we've got 4 rolls left in each of these. That's every day. And then of course Las Vegas Sands was another case we had, and I asked a direct question We have a trade that has $46 worth of risk on it right now. We can close it for a profit by taking the extra call, but our risk is nothing. It's $46. So do we take the profit of $50, which is what it would be, or do we hold going into earnings, which is this week, and take a chance and risk $46 at the max, which is really not, to me, there's no way this could lose money. But on a math question, does it make sense to lock in a $50 profit, risk a $46 loss, or take a chance for a big score either up or down? What would your answer be, just out of curiosity?
Take the gamble.
Take the gamble. Mathematically, it says take the gamble. Okay, the math says that you can't lose money. It's almost impossible to lose money in the position you're at right now. With a $46 cap, with the rest of the trade around it, it's almost impossible. So it makes sense to take the gamble. Okay, so trading is about being able to make those decisions. And fortunately, not like when I was on the floor and I had to make them instantaneously, but I get to make them as I get to evaluate it and look at them overnight if I want to, because the decisions don't have to be made immediately. I know that there's a dramatic event coming out in the next couple of days, okay, that I have to make a decision, okay? So anyways, what options can I trade? You can trade any options, but obviously in index, in equity options, you're going to trade either the stock options, you're going to trade the ETFs, or you're going to trade the index options. Okay, now index, the difference between equity options that you trade and the ETFs that you trade, those are American style, which means you can have early exercise, which is really not a big deal, but people get nervous about it for no reason. Or index options are European style, which can only be exercised on the day of expiration. Okay, so again, you get your choice of whichever you want to trade, and my suggestion to you is to trade wherever there's liquidity. If you got liquidity, you can trade whatever you want. Okay. Now, what strategy should I use? Well, buy calls or puts, sell calls or puts, buy debit spreads, sell credit spreads. Well, if you're asking me, I don't ever buy naked calls. I don't sell naked calls or puts. I sell spreads, or I don't buy spreads, except if I'm using the calendar part of it. To me, you want to sell credit, and if you want to buy debit, you want to buy it out in the future in which you're selling credit against it. Okay, buying a straight option, a straight call option, or a straight put option, to me, is a losing proposition. Okay, just me. Okay, you have so many ways to create a better trade for yourself. And being a floor trader, we didn't take straight options. We traded around a spread. We were locking in, continuing trying to lock in profits. Okay. Again, you look at the charts. Calls mean you think the market's going up. Puts mean you think the market's going down. But remember, if you're buying them, you're long a call or you're long a put. Okay. Interesting, right? Because people get confused sometimes. I'm short the market, but I'm long an option. It's kind of confusing. So in your own knowledge and in your own working, if you make a mistake, just think about it before you exit a trade, because you may think you're doing one thing, you might be doing another, because you're buying both and it can get confusing. Okay. Never sell naked options. Now, I know some of you probably sell naked puts, and I go, well, that's kind of foolish when you can create a better trade for a lot less money. Because if you sell a naked put, like an Apple at $190, you're putting up $19,000 for every 100 shares, for every put you sell, to collect that premium. And certainly you could make the same trade within pennies of the same credit, but put that margin requirement at $3,000 or $5,000 versus $19,000. So you tell me which makes sense, okay? Plus the fact that if you ever get trapped with a short call and the markets go to Pluto, you're not sweating it out trying to chase it down. Just ask all the guys and gals that went broke from optionsellers.com years ago that were short call options when the market was exploding higher. Okay, again, trust me when I tell you, whether you become a member or not, okay, my objective is to make sure that you are always protected and to make sure that you have an understanding of where your risk is. And I'm telling you, whether you become with me or not, make sure you know exactly what your exposure and your risk is. Because if you don't, you're going to put yourself in major jeopardy in the future. And in someday, it may work every day until it doesn't. And when it doesn't work, guess what's going to happen? You're going to blow out and be just another statistic of another person who blew out of the markets. Okay. So you want to remember, what did I miss here? I missed something. Hold on one second. I missed something that I wanted to do. Okay. Hold on one second with me. Sometimes I wonder, you know, I made a mistake here. I'm gonna have to correct this quickly. Hold on one second here. I want to show you. These are trades, okay, that are this week's trades. I'm putting these out. I put these out this morning. Okay. These are trades that I put out this morning. Okay. Ribbon. Okay. Now, why am I using this? Because it's got earnings coming out. I'm using a weighted double diagonal, so I'm selling this week. I'm buying in August. Okay. And I know that the stock is in somewhat of a consolidating mode after exploding higher. And this stock figures to have a huge move one way or the other once again, especially with earnings coming out. So what the hell? Why not take a chance, because it can explode up or down? Either way, I get to make money either way. Okay. I don't see the chat box. I don't know. I see it. Okay. Here's another trade I'm giving out this week. Goldman Sachs. Okay. They got earnings Wednesday morning. Okay. Same idea. Okay. We're going to be able to sell premium against it, and we should be able to make money on this trade as well. The diamonds. Okay. We just had a trade that's going to expire this week on the diamonds. So we're going to do it out. We're going to do it that way. And of course, Roku earnings. And we just finished a big winner on Roku. So again, these are things that we're looking to do and make sure that we put ourselves in the best position at all times. Okay. That's what this business is about, is being in position to be successful. Okay. And if you would like to join me, okay, you can take advantage now. Okay. Every Saturday, we do a weekly webinar of training. We give out different trades. We run a number of trades out there. Okay. And right now we've got about 20 trades open. Again, you don't have to take them all. It's just a question of what you can handle. Okay. Every day you'll get an update, at least one in the morning, telling you where we're doing, what we're going to do. You get our Monday night strategy call, which is just a general market overview in which you get to participate in. And you can learn how to use options properly for $99 a month, which is bubbatrading.com/options, or $1,000 annually, which is bubbatrading.com/opt-year. And with that, those who join today will get my books, both books that I've written in PDF form, and you will also get a 6-session option course that I've done for a brokerage firm, okay, of training from options from the beginning. So it's bubbatrading.com/options for a monthly, or bubbatrading.com/opt-year if you'd like to join us. And again, if you have any questions, please feel free. And Rob, I got you back on schedule. See how good that was?
Bubba, you're 5 minutes early, but Norman's next, and I know he's in attendance. I want to
give Norman all the time he needs.
Hey, Bubba, I got a couple of questions for you.
Yeah.
It's great to see you. First of all, Bubba knows options. So if you're interested in options, you want to take advantage. But I got two. You said that you don't want to do naked puts because of an Apple, because naked. You don't want to sell. You don't want to sell the call because it could go to Pluto. You said.
Well, here I'll give you. I'm gonna explain. Good point you brought up. Here's Apple, right? Okay, here. Apple, AAPL. Okay. Oops. I'm the terrible typist. Okay. Here's Apple, right? So if I want to sell, let's say I go to August 18th, right? I get August 18th. I'll sell the 180 put. Doesn't matter. Whatever one you want. So I'm selling the 180 put. I'm getting $1.64, right?
Mm-hmm.
Okay. So I got to put up 19,000 margin for that $1.64, right? I have to put up the price of the stock, right? That's what naked put's going to be. But if I do this instead, if I sell a vertical, okay, and I sell the 180, 140, okay, I'm getting 8 cents, I'm getting 10 cents less, but my margin requirement is 4,000 instead of 19,000, which is better.
Yeah, and you're not opening yourself up for something to go to Pluto. But my question is, do you still consider Pluto a planet? That's what I was going to ask you.
Well, you know what, I do, but they don't. So what?
I do. I know. And my second question is, you mentioned weighted double diagonal.
Mm-hmm.
Is that anything like a double secret probation? Like
It's
Animal House?
right.
Anything similar to that? No.
That's from Animal House, double secret probation.
That's right. I always confuse the two. Anyway, listen, it was great to see you. I'm glad you came in before me.
It's always great, and I know you'll kill them and teach everybody some good stuff. So,
just to throw a Robism in there too, that $46 risk on holding through earnings. If you can risk $46 with an open-ended profit potential of maybe 1,000, you're getting 20 to 1 on your money. Pot odds, brother. It's always a good. That's always a winning proposition. Even if you lose, the times it win will more than make up for it.
Hey, Stud, you can always correct me. I just was using the number as a general price of the stock of 19,000, so it was no big deal. 18,000 was right. I mean, it's okay. You can correct me.
I didn't want to correct you on the air and anything like that, but it's the required security or liquid in the account is the price of the strike you're selling, not the current value of the stock.
Right, so basically it was, instead of 19,000, it was 18,000. That's all. Not a big deal.
No, and cool. All right.
Anyway, everybody, thanks for your attention. Glad to be here. And Norm, great to talk to you. And I'll talk to you guys later.
Great info, Bubba. You're one of my favorite presenters. I really love trading options myself. It's what I do. Great stuff. We know your service is perfect for all investors, and I appreciate the fact that you gave me an account in the book. The book was great, including those with limited experience, time, and funds. Thank you for making our members such an attractive offer today. And always, I have to say, I loved your program for high school students. That's something to be proud of.
The poker room. I'm waiting for you.
I'm a solo dad of one with full custody, and I don't get much time off. But, ladies and gentlemen, have a great one, Bob. Okay. That was Saturday Options Call with Todd, Bubba, Horwitz, the weekly options trading. You can learn more by clicking on the link in the chat box or going to bubbatrading.com. Bubba is truly a great guy, if you can't tell by how well I get along with him, and has over 40 years experience. Come back and see us soon, Bub. Have a great weekend. And that brings us to our next presenter, Mr. Norman, who is already having a conversation with Todd. He's been a trader and trading educator for over 4 decades, has over 1 million views of his 4-minute drills for traders video found on YouTube. He's a former commodity specialist for Payne Weber and has managed extremely large trading accounts as a commodity trading advisor. Here to present their money, your profit, the pros and cons of prop trading is Mr. Norman Hallett of the Disciplined Trader. Welcome to Trader's Corner again, Norman, and let me give you some privileges. There you go, Norm. You should be good.
I love Bubba because those floor traders, they all sound the same. They all seem to have that New York accent, and and they're action people, but they learn what pressure is, and so I actually saw the last half of Bubba's stuff because I always thought that he was a fun presenter, and he didn't disappoint today. So thanks for having me, Rob. I'm glad you're in town. You guys have been traveling all around the place. I see you on Facebook all the time.
No, I do my thing. I got a family in Florida. I frequent Las Vegas. I'm just outside of New York, and like I said, I got that 2-year-old son, and he's going to experience the whole world.
Oh my God.
And don't sell yourself short. You're a fun presenter too.
Yeah, well, and you're about to witness that. Listen, thank you everybody for coming. I've got a new passion. Of course, my passion has always been helping traders with their mental and emotional issues, because I think that's the real missing piece. And Bubba mentioned it more than most traders mention it, because it really is the key. Most people have a pretty good trading plan, pretty good way of going about it. Some would make more money than others, but they could all be successful. The missing piece, though, is the mental part. But I've looked into this prop trading, started about 6 or 8 months ago, the idea of having somebody else give you their money you can trade it and get 90% of the profit. I mean, is that real or not? And that was the question that I wanted to answer for myself. And I wound up diving in and really producing courses and so on it, because I do believe that that prop trading will be the death of simulated trading. I mean, why practice trading just to risk your own money when you can practice trading and risk their money? It's really profound. I'm going to show you some of the things that I've learned. I'm going to give you a couple of things that, a couple of reasons that that others stay away from prop trading, and I want you to decide for yourself. So this is the pros and cons of prop trading, better known as how to pass a prop trading testing and get funded. So let's get going. Here we go. I got a promise for you. I will lay out the pros and cons of prop trading, and by the end of this presentation, you're going to have a clearer idea of whether prop trading is for you. So grab some water, and also grab a paper and pencil, because I'm going to give you two links. I'm going to do the thing that salespeople, professional sales trainers tell you never to do, and that's give them two things at one time, because people like just one thing to focus on. But I got two good things for you, so get ready. Here we go. Let me give you a brief overview of prop trading if you're unfamiliar with it. Firms will give you from 50,000, 100,000 to all the way to 300,000. I've seen on the initial effort. 300,000. They'll fund your account, and you're going to earn 90% of the profit. In fact, with Apex, which is the basic firm I'm going to show you, because that's the one I've decided to work with after inspecting many of them. They actually giving me 100% of the first 25,000 that I earn. So, but how can they give you all the money, or most of all the money, and still be in business? Well, I'm going to show you how that is. The pros of this arrangement. First of all, you're using their money and your profit. If you and you get all the profit, or at least most of it at 90%, but the first 25,000 you get all of it. So, why wouldn't anybody do that? I mean, it's a tremendous pro. Think about it. If you add up all the money that you've already lost in the market attempting to make money, or just the time and effort of your struggles and the amount of money that you lost during that, it's never going to add up to the fees that they're going to charge. I'm going to show you some of those fees, but the big pro, of course, is, I mean, you can trade 150,000. I'm trading one account. I've got a few that I've passed. I'll show you. Trading $150,000 account, 250, 50,000. I've got different accounts for a reason. I'll show you that reason in a second. But I mean, I have that money in my own account, but why should I risk that when they can give me more and much more? I'm going to be trading a lot more than that, because I've pretty much fallen in love with prop trading. No reason to, because I'm a little closer to retirement than maybe some of you. But I have a special presentation that I urge retired people to look at prop trading. I mean, why risk the money that you made? Risk their money. All right. Millions are being paid out. I mean, there is proof in the two firms that I'm going to show you, and the one that I've decided on, they've already paid out millions. In fact, Apex, the chosen firm, has paid out $8 million so far this year, and $4 million in the last couple of months. They just keep on increasing as more people are joining them. Here's some of the cons. I mean, that's the carrot that I've given you, but the cons are there also. There's fees during the evaluation. I'm going to show you those fees. $300 a month as you test. Once you pass, there's only one small fee, and then that's the end of fees. So all the fees really are in the beginning while you're testing to be funded. There are monthly fees. As I mentioned, if in a $50,000 account, you're paying $167 a month. In a $150,000 account, you're paying $297 a month. I'm going to give you a discount code, so you can pay a lot less than that if you're going to want to do this. But the fees are are there at 100, but even at 200 and even at $300 a month to be funded for $150,000, to pay that for a couple of months while you're getting funded and then get funded, and where they're giving you 90% of the money that you're making from trading $150,000, they never compare to what you're capable of losing on your own money. So the fees are there, but they're really nominal compared to what's going to happen as you pass and then trade their money. There are also reset fees, and the reset fees are there's a red line in trading when you're being evaluated that you don't want to cross. I'm going to show you what those red lines are, and you don't want to if you touch those lines, then you've blown out your account, so to speak, and you got to start over with your testing, and that costs you $80. So again, another fee if you keep on blowing out your account and retesting. And really, in the beginning, you may do it a couple of times. I don't think so, but if you do, so you've paid 200, and then you've paid a couple of 80s. But when you get to trade the $150,000 or $50,000 account, you're gonna take out $1,000, $2,000 a month, I think, fairly easily. And I'm going to show you a way to do that. And you got to know that I think the biggest con here is that 90% of traders fail. The odds are that they know that 90% of traders are going to continue to pay these fees and not fail because they're not, and Bubba mentioned it, I'm sure every trader that it's going to present today mentioned it, it's the mental part. And if you can't get that together, you're not going to be successful with your own money or with prop money. And the idea is that they know that at the prop, they know that most traders, as Bubba said, they're more into their ego of being right than just following their trading plan. So another reason why I like Bubba's stuff, because he focuses on the right thing. Anyway, 90% of traders fail, so they know that these fees are just going to keep coming. They don't need your 10% for the 10% that fail. In fact, the 10% that pass, they want them to make as much money as they can, so that we can give them testimonials and they can attract the other traders where 90% are going to fail. So you need to move out of the fail area and into the success area. And I'm going to rely on you to do that on your own. If not, of course, I've got things on the mental and emotional part, but I always build the mental part into my trading plans. I've written several books on trading plans which focus on bringing them together. You're not going to hear a lot about that today, but I do want to mention that if you're not doing something for your head, maybe go to the disciplinetrader.com, take a look at what we have. But I want to emphasize that that's the major con. I mean, these monthly fees and reset fees, I mean, if you take 2 or 3 months to pass, it's nothing compared to what you're going to earn when you're doing the same thing that you did to pass with their money and earning 90% of it. All right, just a little bit about my experience. Again, I just started this about 6-8 months ago. I passed Top Step's $100,000 testing. I've passed Apex's 50 and 150 a couple of times on each one. But I wanted to show you also, and this is the certificates they give you. So it's like high school. They give you a certificate to urge you on. And here's when you request money, and with Apex you can request money twice a month from your profits. Here's $1,000, $2,000. I've had more since this, but I wanted to show you that they really want to encourage you to keep winning when you win, and of course to keep trying when you lose. But listen, I've done this. I've realized the best way for others to do it, and that's what I'm going to show you right now. If you don't know me, I've been in this business 4 decades, written several books and so on. You can find most of them on Amazon. I worked for Payne Weber, may they rest in peace. Didn't work for them long because they were more of a sales organization than they were a trading organization. They hired me as a commodity specialist, only lasted about 1.5 years, and said, whatever they're doing, I can do on my own. So that's what I did. Well, before then, I ran one of the largest option firms in the country. That's why I can tell you that Bubba knows what he's doing, because I know options myself. But I'm mostly a futures trader. I think it's a little simpler to understand for a guy like me, maybe for you. I formed the Hallett group when I left Payne Weber, where I primarily just ran my own trades with my own money, and also traded for others that had $500,000 accounts and more. and over. The minimum was that. So I was making 20% of what I earned for them as a commodity trading advisor. I was moving the trades through my own introducing brokerage firm, and so I made a little money there. But the idea is that, I mean, I know the tension of trading other people's money and making only 20%. Here I'm trading their money and making 90%. Actually, the first 100% of the first 25,000. So, you know, to me, it was a no-brainer. The last 20 years, really, I've focused on helping traders with the mental and emotional part. The disciplined trader, it's really what put me on the map. More about that some other time. Let's get into what it looks like as far as I don't have a clock in front of me, believe it or not. So you're gonna have to give me some warning, Rob, when I'm getting close. I'm just gonna keep going. Here's Apex's.
Norm,
Yes.
you want a 10-minute or a 5-minute reminder in the chat?
Give me both if you
Cool.
would. Okay.
Cool.
We have this is the 50,000. I recommend the $50,000 account. The best math is actually the 150. For different reasons, I'm going to give you my reasoning. They all work. They're all trading other people's money and so on. But I like the 50,000 because you only have to make $3,000 in order to pass and qualify. And your red line is at 2,500. You don't want to cross 25. You want to break that 2,500. So this is, and I like it's not the best math, but it's good math. And I want you to pass quickly. I want you to get those first couple of. I want you to open your checking account. They send your money right to your checking account, and I want you to get it full circle. That's why I really think that starting with $50,000 is going to make it's the easiest to pass and the quickest to run full circle, because once you start seeing the money in your account, you start saying, hey, how much bigger can I go? And I'm going to show you a couple of ways to do it. The 150 here, it's really the best math. You have a deep red line in the $5,000, and you got to make 9,000. Here in the 50, you have a 2,500 red line, and you've got to make 3,000. So it's easier to pass. This one gives you a little bit more leeway having a deeper red line. So I like the math better here. I can get into more depth at some other conversation, but either one, any of these are going to work. But I would focus on these two. Start here at $167 a month, and I'm going to give you the first thing I'm going to give you is a link so that this is not $167 a month. It's $31 a month. It's 80% off. So I'm going to give you that link in a second. But I wanted to show you just what this is all about. You can trade as many as 10 contracts, or I mean, who would trade 100 micros? But they you know, they're revenue up here. But you can trade 10 contracts. Really like the currencies, incidentally. In the futures market. Now I'm talking to you about the futures market. There are prop firms that deal in stocks. I think there are some that deal in options. Most of them deal in futures. Okay, so I like these two. I just wanted to show you kind of what they're looking for you to, what you need to make, and the red line that you can't breach. Once you make this, you have to do it again. You have to, then you do it for real with their money. And once you pass the threshold, everything above that is cake, is your profit. Okay, so I just wanted to show you some of the difference. You can look on your own when I show you the link. Here's the link I want to give you. This is for 80% discount, so it's not 100. This is a link, thedisciplinedtrader.com/Apex. They gave me a big ugly link to give to my people, but I've used this link. It'll forward right to the big ugly link for you. And if you use this link, instead of $167 a month, you're going to pay $34 a month. And I think that's with the tax. So, and if you're looking at the 150, you're going to pay $61 a month. So that's a huge difference. So if it takes you start with the 50 and it takes you 2 or 3 months to pass, hey, you're giving them $100 to qualify for 50,000. That's a pretty good deal, and it's probably even a better deal at 150,000 to only have $61 a month. So either one. But again, I like you to start with the 50. Not that I want you to stay there forever, but because I think this is the better math. But I want you to get the money. I want you to experience what it is to get paid. Okay, so there's the link. You're not gonna see this. You can actually click that link and it'll open up it'll open up your browser, and then you can come back to the presentation here, but you won't see this link again. Okay, so I wanted to make sure I spent a little time for you to either take a picture of it with your cell phone, click on it, or just write it down. thedisciplinetrader.com/apex. Okay, so let's keep going. You got that down? If not, then you'll just go to the Discipline Trader and go to the contact area and send me an email, and I'll send you the link again. But here it is for you. Okay, so I want to give you a few tips on how to pass and get funded. So this is a very interesting distinction, and I showed you two firms. One is Top Step, and the other one was Apex, which is the one I've chosen. Even though what I'm going to show you here is in favor of the Top Step. Okay, so here's Top Step, and I'm going to use the $50,000 account. Again, you've got a $2,500 red line. You don't want to get below that, and that red line follows you. Incidentally, if you go to 52,000, that red line is now you can't go below 49.5, if you know what I mean. Okay, but let's look at my example. You're trading your $50,000. Let's say you have an open trade equity of, you have a trade on, put on a trade, you're up $1,000. So now with open trade equity, you're at 51,000. And you let the market come all the way down to break even. That red line remains 2,500 with Top Step. Okay, they allow you to give back a lot of money and still have that same red line. Okay, Apex doesn't allow you to do that. They count that against you. That same $50,000, if you have that open trade equity, and while this trade is still open, you have a $51,000 phantom value to it, but you let it come all the way down to break even, they're going to hold that against you. And now you may say, why would I take that instead of the other? Well, I think if you train yourself to do this, okay, not to let big profits go, because that's a big problem with traders. And in the trading plans that I sell are loaded gun, which again, and is another conversation. I've kind of built that quality, and I'm going to show you a little bit of how to do it with another tip. But they're the biggest Apex, and when I want to choose the biggest and the ones that have paid out the most. There's a lot of firms. There's probably 500 firms that are doing this. Some of them won't be here tomorrow. These guys have been here for years, and I mean, I think Apex may have been here for a decade, and Top Step been here for a while also. So I want the biggest. I want to know I'm going to get paid for my effort. I would stick to these two, and I prefer the Apex because I would rather see you start trading the right way than allowing big profits to go. Okay, the remedy, how to solve this right here, this negative factor of Apex, if you want to call it that. I think it's positive in the end, but you want to start with multiple contracts and scale out. Okay, that as opposed to building contracts, adding to a winning trade, I'm not into that. I'm into getting a responsible trigger that works, and then letting it and putting on your contracts right there. Have a small design risk with a nice stop, nice close stop, and then scaling out as you make money. That's the way to trade. That's how professionals trade. Others, but Bubba, he traps money. We all have our way of trapping money, and in futures trading, scaling out is the way to trap money. Okay, so remedy 2 is if you're only using one contract, okay, use it, make it a scalp. Now, I'm not a scalper. I've never been a scalper, but I've learned to be a scalper when trading other people's money. Okay, and I've learned that I've been doing this 40 years, and I have downplayed wrongly the aspects of scalping. I know there are some that scalp all the time. I don't do that. I will never do that because I want to give myself a chance for that big move. So when I trade, I like to put on at least 2 contracts, use one as a scalp and one is what I call a runner. I'm going to show you a little bit about that. But here's my tip 2. Okay. This was actually taken at the very beginning when I started a few months ago, but I didn't have another slide to put in this. But here's a $250,000 account that I was trying to qualify for, and where you got to make 15,000. This is a $150,000 account where you've got to make 9,000, and here's the 50,000 where you've got to make 3,000 before you hit the red line. Well, I'm just showing you this just because you want to trade multiple contracts, and the reason you want to try in the end, again, start with the 50, pass it, get money in, but then the next step is to look at multiple contracts. Years ago, a very successful attorney sat me down when I was a young whippersnapper and said, look, you got to have multiple streams of income. And in a business, you need multiple streams. And if you need to frame your trading as a business, and this is multiple streams of income, okay? And so if something crazy would have happened to any of these, or you didn't make enough to be able to take out in one, you could be doing that in another. So you want to have multiple streams of income. And if you happen to blow out one account, which may happen, you've got two others that are making you income. So if you're setting this up as a business, and I believe that you should, I believe that there is a long-term income potential for prop trading. Okay, but again, start with 50. Now I will say something that's going to freak you out. I've looked in and talked to some of the people that are making tens of thousands a month from this, and what they're doing, and some of them formerly had $5,000 and $10,000 accounts. Okay, so I'm of their own that they were trading. What they have are 15 and 20 $50,000 accounts that they've qualified for. I mean, once you do it once, you realize how to qualify. And I'm saying to you that why would anybody have 20 $50,000 accounts? Why? Because there is a tool that you can use that you put on one trade, and you can distribute the same amount of trades in as many of your accounts as you want. So they take half their accounts and do one trade, and another half of the accounts and do another trade, not opposite, but different trades that are triggered. Maybe they'll do one in the Japanese yen and one in gold. So this is, it's a business, it's a fraternity of people who are using other people's money in a smart way. But again, just start with don't get into it too deep. I just wanted to tell you that there's a future in looking at this as a long-term business. I don't think I'm ever going to trade 20. 10, yes. I got 5 now. 10, I'm going to go for, because I just got the tool and I'm going to utilize that tool. So I'm learning as you're learning. I mean, I'm not learning trading. I've known trading for years, but I am learning how to manage other people's money, how to manage this prop trading into a long-term income, and not be victim of all or nothing. And that's all about the accounts. Now with Apex, I have multiple accounts. With Apex, they give you 100% of the first 25,000. You've got to trade at least 7 days. Even with the $50,000 account, they don't want you passing in one day. You know, they don't want people who had a lucky trade. They want to see consistent, okay? And they have tons of people that have gotten funded, okay? So many times I've passed in 3 or 4 days, and had to just put on a trade, take it off real fast, just to have a trade a day for the next day. I mean, you need to be consistent, and you can be consistent with this, okay? There's only 10 days for the first and ongoing pay. What I'm saying is that you can ask for your pay twice a month. You can ask to get paid out of your account of your profit. And it's only going to take 10 days for you to receive the money you request. Now, this is, for me, it's been 4 or 5 days. So this is an outside figure. You can request money in the beginning of the month and in the middle of the month, and they'll pay you 5 to 10 days later. That's all I'm saying. And that's one-time fee. Once you get funded, there's a one-time fee, and it's not a crazy fee. It's like $120 for your one fee of $120, and then there's no fees for the life of your $50,000 account. Okay, I'm giving you a lot of numbers, but I want you to get into this, because if you're trading 5, 10, even, it doesn't matter. I've been trading much more money than that in my own accounts. Why should I risk my own money when I can run a business through Apex, literally? You want a frequent, reliable trigger. That's one of the key, because the faster you qualify, the less fees that you'll pay. So the more triggers I get if it's not only fast but reliable, the quicker I'm going to pass. A good trading plan will likely have more winners than losers. So it's a high frequency of trades, as many signals as you can get with signal, it just makes sense. But that still it's more important to have a trading plan that wins over time than forcing frequency. So I have some reliable triggers I can get to you in our system. But if you have a frequent trigger, good for you. If you have a reliable system, just use that. Okay, reliable. What I mean by a reliable trigger? You want to find your best trigger. Okay, you want to take a look at the triggers that have resulted in profits, especially ones that give you early movement in your favor, and you want to prioritize them. You want to find your best trigger, and you only use that one. Okay, you have to have the patience to wait for an A+ trigger, and sticking to A+ setups means fewer trades, more profits, and less transactional costs. Okay, I think I've said enough about having a frequent, reliable trigger. I'm going to show you one here in a second. And the fourth tip I have is always start with at least 2 contracts. Mentioned that already. You want to treat one as a scalp and one as a swing trade. Okay, this way you can grab a profit early, and if the market comes back, you've already moved your stop to break even once you take your scalp. So on your second position in a 2-contract approach, you're going to break even on that. So it's not going, that red line is not going to follow you like it would follow you if you just went for big trades all the time. Okay, if you're trading 3 contracts, I like you to use 2 as a scalp and 1 as a swing, where you can make as much money as you want. I guess I should call that day trade. I'm sorry, I didn't mean to have that. It's 2 scalps and 1 swing trade. Okay, so if you're trading 1 contract, or if you're trading 5 contracts, I would say 3 should be scalp and 2 swing, because you want to favor grabbing the money when you can. Okay, but you want to keep that big end there. When I say scalp, I don't mean 2 or 3 increments of movement. I'm talking about 8 or 10 increments of movement. Okay, I'm not talking about ticks. That confuses some people, but I'm just talking about every the S&P trades in 25-point movement, so 25-point increments. I'm talking about at least 8 or 10 of those. Okay, so I think I've made my point. You want to do some scalping, but you want to leave for lewd and lascivious, because that's really where the big money is made. You want to keep doing the scalps so that red line doesn't follow you, and then you want to bust open with the day trade. Okay, so here's a frequent, reliable trigger that I like to use. It's what I call it's one of our loaded gun triggers. There are a couple of them. I want to give you one here. This is a unsure motion. In other words, during this 5-minute period, I like to trade the 5 and 10, and sometimes the 2-minute bar or candle charts. This is indecision followed by a decisive move, and if that happens through one of our chosen EMAs, and let's say it's an 8 or a 9 in this example, an 8-bar EMA, exponential moving average. If it crosses onto the other side, this is a trigger for a long trade. Let's show you a couple of that. Let's see what that looks like with the S&P. I just hope I'm not going too fast here, but I've got a lot to say. I really want you in this. If why risk somebody else's money? Okay, so here is the trigger that I talked about. Here is I'm going to call it the 8-bar exponential moving average. This is the S&P, and this is, I'm sure, from a 5-bar. This is at 5-minute candles. But you see, you went from indecision, a bunch of small candles, to a strong movement through the 8. This is a short. Okay, so what you would be doing here was selling 2 positions, treating 1 as a scalp and 1 as a runner. Okay, and what I like to do to measure my scalp is I like to look at the length of this bar, and I like to project it down. So you would have taken your scalp right in the maximum area here, and then moved your stop from up here from whichever is the highest of the 2, a tick above that, to break even. Okay, so then you would have been stopped out on this move right here to break even. So you would have had your scalp here. All right, let's take a look. Here's the next signal. Okay, I love this because we're going against the double bottom, and you're getting your indecision here, followed by a movement through the 8, and then you're putting your stop here. Nice short risk. You're putting on 2. You're immediately almost taking the scalp, because again, I'm measuring the body, and I'm taking my scalp here, moving to break even. But look at what happens here. And you know, how far do you move? You know, as long as you're staying on the correct side of this 8, we like to stay in. There are rules that we have. I'm not going to discuss the rules. I am going to just to show you the value of a trigger. But look at the money that you made here just on the one. And here's another one that you would have taken. You know, sometimes we wake up and you look at the market. This has already happened. So you woke up here, and here is another signal on the short side. You got a indecision here, followed by a movement through the candle, through the 8 bar, and look at, you got not only your scalp, which would have been here, and then your break even here, you would have had it all the way down here. Here's another signal here. You can see how a reliable signal can really not only get you your scalps, but in this particular case, we got 3 runners also. Okay, here's a loser. Just thought I'd show you a loser. They're not all winners, but when you lose, you're going to lose a small amount because you're going to measure that against your tolerance. Okay, here's another one where we won, another one where we won. Again, this looks like it may, but your stop would have been down here. Beautiful. Okay, so here's the euro dollar. Just want to show you the value of a reliable trigger. Look at this, another scalp followed by a nice movement here. Another, you know, if you happen to wake up, oh, here's a trigger right here. I didn't notice. This would have been a loser. Okay, I guess that's why I didn't show it to you. This would have been a loser, but okay, you're going to get losers. Here's another one where you've broken through. You get a nice scalp here. Look at that. You get again a big bar, so a big ask as far as the scalp, and then you've got another one here, which you got a nice winner here. Here's a nice loser for you. So you're going to have losers, but look at the difference between the losers and the winners. Okay, here's another nice scalp. All right, so I want to show you something. I want to offer you something that really brings all of this home. Again, I think there's a long-term income potential here with prop trading. Okay, long-term income potential. Okay, this course that I'm going to offer for you, okay, to you at a crazy low price. I want you to get into this, because why should you be losing your own money when you could be losing their money and then making money from their money? Okay. Oh, the first piece, this has 5 pieces in this how to build a substantial long-term income course that I want to send you. And this is not a complicated course. Okay, it's a quick course. Each of the videos, each of these pieces have videos. And the videos, I don't think they're 15 minutes long, maybe 20 minutes long on the longest one. So you can do this whole thing in an hour and a half. Okay. Overview and clear advantage of prop trading. The second is the importance of the right kind of trigger to pass the evaluation. I've shown you one of the triggers. I want to get into more of that, and I want to show you exactly how to manage them a little bit more. Okay, but again, the right kind of trigger. I've already exposed to you that it's a reliable and frequent trigger, but I want to give you more than I've given you here. Okay, the third piece is how to handle the drawdown rules so that you can trade with relaxed confidence. This is an important piece, because you don't want to, that red line follows you. You know, if you start with 50,000 and you're up to 52,000 and all you need is another 1,000 because all you need is 3,000 to qualify, it starts to get a little bit nervous. Now, all of a sudden, from the original 48,000, remember you started at 50,000 and the original line was actually at 47.5, 2,500 below your starting point. That line is going to follow you. So when you're at 52,000, that red line is now 49.5. Okay, I hope I'm not confusing you with the math. Okay, but know that that's following you, and somehow it starts to, you feel like you're getting choked even though you've got plenty of room. There are some mental things that go on. I want to solve those for you. I want to show you how to handle the drawdown rules so that you can continue to trade with relaxed confidence. I want you trading their money and getting 90% of the profit. The fourth piece is how to run your trading as a business, because when you see some of these rules that I'm going to give you to put into your trading plan, you're going to want to do a lot of this. You're going to want to say, hey, how much money are these people really making? Well, I've looked into it. The 10% are making big money. I mean, the 5%, half of those 10% have really figured out how to frame this as a business. I want to show you what that looks like. Okay, I want to show you how to run this prop trading as a business. And the last piece is I want to show you exactly how I got funded just the first time on a $50,000 account. I want to show you how I got funded in 10 days and how it took me 21 days to get funded, actually 17 days, but I gotta count holidays to get funded for the 150. And I'm doing it much faster now because this was all experimental the first time I saw this. I was never followed by a close red line. I want to show you how to put that in the rear view mirror and keep looking ahead and not worrying about that. This is exactly what I did to get funded the first time in 10 days and the second time 4 days and 7 days. And I want to show you how to do this. It's not, and look, if it takes you 20 days and 30 days, you know, and because you're by definition a nervous wreck when you trade, I want to show you how to get out of that. But it may take me a couple of may take a couple of views of this to shake your head a little bit and say, hey, there's a way to do this that I don't have to be so nervous about it all the time. Okay, so I want to show you how exactly I got funded. This is how to build a substantial long-term income. Normally, it's $497. That's what I went out and I offered it at the beginning, but I'm chopping off $300 here. And for you, it's going to be $197. Okay, so all you have to do is go to the disciplinetrader.com/income, disciplinetrader.com/income, and use the coupon code income. All right, that'll take you to the course, and you can read all about it there, showing you a lot about it here. Use the income coupon code, and that 497 is going to turn into 197. I want you to understand the logic. I want you to understand how to do this, and I want to do it for you in this step-by-step way, so that you do it smoothly rather than, you know, doubt whether it all works. It works. It's working for me. It's working for the 10% that have done it, and I want it to work for you. I mean, why risk your own money? Okay, I want to show you a couple of people who have been through this course, and this is Clark, who's I call him a natural fighter. I'm sorry for that pop-up. Norman, thank you so much for your expertise and insight on prop trading. After blowing out 2 prop auditions, he calls them auditions, for excess drawdown, in other words, he hit that red line, I now see how right you are, and I'm back in the game and staying disciplined. And now he's back in the game, doing the things that he should do. You know, listen, this is an experienced trader who really needed to tweak what he was doing, and that's all he needed to do. And so Clark is on his way. I call him Superman for obvious reasons. Since Norman created this course and also provided all of his experience as well as his tips and hints of how to do it as a professional, it's provided me with a new way to look at everything and a very good place for me to start. Jeffrey, although when he said start, he meant start with prop trading. This guy is an experienced trader who's new to prop trading, and he got on the fast track very quickly. In fact, he beat, I think in the beginning, I think it was Jeffrey beat some of my records as far as how many days it took to qualify. Again, it's not important. What's important is qualifying. Josh, who's the newest person who's been working with me, who's actually bought recently the Discipline Trader, not the Discipline Trader Mastery, but that's the mental program that we offer, but the Loaded Gun Simple Trading Plan, because he's a comeback guy, and he's new to prop trading. He's got no prop trading experience. He says, I haven't traded in many years, and now I'm retired. I've decided to start over again, and he wants to thank me for the help in the videos. But Josh is getting closer and closer as we're now working together with the Loaded Gun. And listen, there's a lot of different ways to cut this, but there's only a few good tips, I think, that make it much easier to just pass this thing and start getting paid. And Josh was appreciative of that. I wanted to show it to you. So again, how to build long-term trading income with prop trading. And here is the overview. I'm sorry I keep getting those pop-ups. I just don't know how to get Skype off without, I'm a technophobe like you, so this is not complicated stuff I'm showing you. They keep popping up. You'll have to teach me, Rob. Rob knows the technical stuff. Anyway, the first piece, again, overview and clear advantage. I want you to understand what you're getting into and why you should probably get into it, especially if you got small money. Okay, the importance of the right kind of trigger. I want to give you more on that, because the more triggers you get, the faster you're going to get there. It's really very simple. How to handle the drawdown rules so that you can trade with relaxed confidence. I don't want you looking backwards. I don't want you worrying about the red line. And how to run your prop trading as a business That's going to be an important step for you as you grow in this. As soon as you pass the 50 and get your first deposit into your trading, you're going to say, I want to do more of this. How does that work about, those multiple accounts? Those guys that have 10 and 20, $50,000 accounts. I'm going to show you how to do that. So how to run your trading, prop trading as a business, and exactly how to get funded in 10 days. Okay, that's really kind of putting it all together for you in one video. So again, $497 is not going to be your price. It's going to be $197. All you got to do is use this. You can actually click on it. I think it's a clickable link. DisciplineTrader.com/income, and all you have to use. I'm sorry about that again. I gotta work on that. That's unprofessional, and I'm sorry. DisciplineTrader.com/income. Use the coupon code income. What's our time, Rob? I know I'm getting close. Did you not warn me of the 5-10 minutes?
I sent you a 10 and a 5-minute reminder. You technically have 4 left. If you want a tip, I would hit Control Alt Delete and kill the what's your chat software?
Yeah, it's Skype, really.
Yeah, you hit Control Alt Delete, pick Task Manager, and kill Skype. And it'll keep your pop-ups from coming, and then you'll have to relaunch Skype after your presentation. And I noticed who one of them are, and you make sure you tell my favorite Chica who says hi.
I will. I will.
Oh,
okay.
Norm, can I give you a reco on something else?
Sure.
Scaling in and out. Absolutely. Buy multiple contracts, and if it gets real close to your stop loss, sometimes I even double down to skew my risk reward. And, don't be afraid to take profits, and don't be afraid to lose profits. Every trader is closed on a pullback to see that it continue in their direction and lost money. If you haven't done that, you're not a real trader.
Yeah, I agree. And the thing is, you need to experience some winning. That's most traders, all they've experienced in the long term are a little bit of winning and then boom, a lot of losing. I think when you have a frequent reliable trigger, you can do some of the things that we've just talked about, which is take some quick profit, because a reliable trigger to me is one that gets off to a fast start. It may not work out in the long term, but that's why you take the scalp. And I show you that sometimes it doesn't really go as far as you want for the scalp. There's certain hesitations that a market does. I cover that in the right kind of trigger, where you don't need to have the full. Just take the profit, move your stop to break even, and if you get stopped out, you're not going to lose money on that second position, and that red line is going to not follow you. Why is it not going to follow you? Because what you took as the scalp is the same amount as you let go when you let it go to break even on the second one, and it cancels each other out, and the red line stays where it was, but you've got more money in your account. So there's ways of doing this, and Rob, you and I have been kind of experimenting with this together in a way, but I think our growing appreciation for prop trading, you're going to hear a lot about it in the future. I think it's going to eventually eliminate the idea of sim trading, because why bother? When you can be successful in simulation, and the result is you just got funded for $50,000 or $100,000. It's a beautiful thing. So
no, I absolutely agree. And with the discounts that are offered by these places, for $31 a month to have the chance of making real money instead of paper money, it's absolutely brilliant.
That's it. And I've only been called brilliant one other time, and that was my wife. So I appreciate that.
Now I know why you married her. You want to adopt a kid too?
Well, that's we're having a 42nd wedding anniversary.
Congratulations, man.
And so she's the brilliant one, especially in the early days of trading, when I walk out of my office and she could tell whether I had a good day or a bad day. Don't talk to me.
I've heard you speak very highly of. I think it's Tisha, and yes, she sounds amazing. And Norm, I don't mean to cut you off, but I was told not to have too much of conversations on air.
I understand. Who's next?
The Buy Side Global guys, I think. I didn't recognize the first name, but
okay.
Norm, great. I want to thank you for being here. Their money, your profit, the pros and cons of prop trading. I give credit where credit's due, and those evaluations are not easy to pass, and they do that on purpose. So congrats on passing multiple, and I'm sure you can teach others how to pass.
Yes. All you got to know is the kind of tips and tricks. Thanks again, Rob, for the opportunity.
Hey, great info. I see you've done your due diligence as usual. It's always great to have you, man. 1 million views on YouTube. Ladies and gentlemen, Mr. Norman Hallett, who you can find at thedisciplinetrader.com. I put his links in the chat box. If you're interested in being mentored by a professional with 40 plus years experience who can pass a prop trading evaluation and show you how to, look no further. Norm, always a pleasure. Enjoy your weekend, sir. Well, ladies and gentlemen, that brings us to our next presenter, who I am going to go ahead and give the privileges to. The misfit entrepreneur. Oh.
That too, Rob.
He is the best-selling author and investor and founder of 12-Minute Trading. He's also the founder of the top-rated podcast, The Misfit Entrepreneur, reaching audiences in over 100 countries. He started 12-Minute Trading almost 20 years ago to create professional trader-like income without putting in professional trader-like time by stacking the odds in his favor. His unique way of approaching the markets has helped him achieve win rates of over 90% annually, and he's published his track record going all the way back to 2013. Here to present, and I apologize, I saw the first name Dave and thought wrong, professional trading income in just 12 minutes a day is Mr. Dave Lukas of 12-Minute Trading, not the other Dave of Buy Side. Welcome back to Traders Corner, Dave.
Hey, thanks, Rob. I appreciate it. It's a
No
pleasure
problem.
to be here with you and everyone today at Traders Corner. I'm excited for our time together. We're going to go on a little bit of a journey today and look at markets and trading in a little different way than most are used to. But I can promise you, by the end of our time together, it's all going to come together and make a lot of sense for you, and maybe even change the entire way that you look at trading and investing in the markets. But first, I just want to make sure, can everybody here see my screen okay? And you can just type it like in the questions box that, yes, you can see it. So I just want to make sure that you guys can all see everything okay, or even the chat if it's available. So then just type a yes in there. If you can see the screen, should see a just an initial screen, says simple strategy for creating income in less than 12 minutes a day. Perfect, excellent. Thanks, Frankie. Red rum, I like that. Thanks, guys. All right, because of time, I'm going to hold questions until the end. I'll answer as many as I can then, but feel free to type them in as we go, right? As they kind of hit your mind, and you got a question about something, type those in. I'll get to those at the end, and we'll get into all this today. I've got a lot to share with you guys. So, all right, here we go. So we all know the story of the tortoise and the hare, and what's the moral of that story? Going too fast out of the gate is rarely sustainable. Slow and steady wins that race, right? So how many people apply that to trading, right? How many people apply that to trading? Most don't. Most traders are like the hare. They're trying to have it all right now. So let me share some interesting stats with you. 80% of all day traders quit within their first 2 years. Among all day traders, nearly 40% day trade for only 1 month. Within 3 years, only 13% continue to day trade. After 5 years, only 7% remain. The average individual investor underperforms a market index by 1.5% a year. Active traders underperform by 6.5% annually. And day traders with strong past performance go on to earn strong returns in the future, though only about 1% of all day traders are able to predictably profit net of fees. Profitable day traders make up a small portion of all traders, 1.6% per year in an average year. After seeing those stats, I can understand how it may be a little discouraging. And I heard Norm talking about how a lot of traders lose money. They make a little bit and they give it all back and then some, right? That's a typical trader, life cycle. And that's why you see, most traders are gone within the first 2 years, right? And you guys can probably relate to some of these stats. I know I can. I was just like most traders in those stats when I started out. What I'm going to share with you today is a different way of looking at the markets. In fact, for many of you, a different way of looking at trading as a whole. But those of you who've been around the block for a little while are going to really immediately probably see the power in the trading philosophy and the strategy that I'm going to share with you today, and really the business of it. If you want more consistent income from your trading, you have to have a strategy for consistent, healthy returns. Again, it's that tortoise and the hare story. Would you rather consistently win and build and compound that money, or have one big win, give it all back on the next 10 trades and lose some, and then have a win and then, constantly play that game, right? You don't want to do that. Slow and steady wins that race over and over. And that's why when you look at like the wealthiest investors of our time, people like Warren Buffett, Carl Icahn, Ray Dalio, and others, their approach is smart, healthy, and consistent income. In fact, Warren Buffett loves insurance companies because they are boring and they just print cash, right? They find that edge, they use it to their advantage, and they create that asymmetric risk and reward. And that's why Buffett's famous for his 2 rules, right? Rule number 1, never lose money, and rule number 2, never forget rule number 1. So part of what I want to do today is really put you in the driver's seat, show you the complete package of how to set up a consistently profitable trading business, complete with my own trade examples and strategies, and really kind of take you down that path. Let me share a few things though before I jump into that I really wish that I learned when I first started trading. Number 1, it doesn't have to be hard. It doesn't have to be complicated, and it certainly doesn't have to take a lot of time. When most people start trading, they think they need all this sophisticated software, chart setups, 15 monitors, and on and on. It's complicated the way a lot of people teach it. And as humans, we tend to make things more complicated than they have to be. I've been guilty of that as much as anybody else, but I really learned the lesson of the power of simplicity a number of years ago, and it's paid off 100 times fold for me, not just in trading, but in my businesses that I built, in really all areas of life. In fact, when it comes to trading, I'm not embarrassed to admit that I still don't know most of what the Greeks and combinations like double diagonal spreads or reverse iron albatrosses actually mean. I found the more complicated that I made trading and investing, the less money that I made, and the more effort that it takes to manage. So on the contrary, the more simple the strategies with a slight edge, the more money I made. Did you know that it's incredibly easy to put the odds of winning in your favor just by the types of trades you select to do? I'm gonna let that sink in. Before you ever place a trade, did you know that just by the type of trade you choose to do can put the odds in your favor? Did you know there's strategies that make money for you no matter which way the market goes? Have you ever wondered how companies like Goldman Sachs and others just seem to print money? And lastly, have you ever thought there has to be a better, easier, less time-consuming way to make money in the market? You see, as a retail trader, as an investor, and even a day trader, your goal should not be to beat the big guys, because in reality, you can't. You can't be faster than the pros, the quants. They spend millions of dollars to lay fiber optic lines to their trading floors, so trades execute faster just by a few hay seconds, right? But what you can do is win by trading in the margins, not with them, not against them. And that's really what I'm going to share and show with you as we get into this today. You're going to learn how you can beat the big guys because you're smaller and more nimble and you don't have to play their game. But first, a little background. Yeah, that's me about 20 years ago. I started my first business with nothing. I had to work 3 other jobs to make ends meet. I was doing kids' birthday parties on the weekends, dressing up like Blue's Clues and other characters. Was serving at a high-end steakhouse and bouncing in a nightclub. My typical day would go from about 5:30 a.m. till 1 a.m. For a short time, I lived in my Mazda until I moved into my aunt's basement and eventually slept on the floor of an apartment. There's a pic of the Red Avenger, as I used to call her there. My business did eventually make me some money, about $1,000 a month after expenses, and the other jobs helped me to pay the bills, but I was nowhere near where I wanted to be. And I sat down one day and I thought deeply about where I was, and I realized that I knew that I needed to learn what I did not know. So then I decided to take action on what to do about it. And I went on a over 5-year journey really to learn from the most successful and wealthy that I could get in front of. During this time, I sold that first business. I made essentially nothing on it. I went to work in the Fortune 500 space and sales and actually was very successful. But I spent really every extra moment and weekends learning and traveling to meet people like Zig Ziglar, Tony Robbins, Brian Tracy, networking to meet with millionaires and billionaires. And really all with one goal, was to learn their best secrets, the processes, the things they did consistently to achieve success really in all areas of life. And as I learned these things and I put them into practice, I started to have even better results. I started investing in real estate and other businesses, some of which I still own today, and really teaching people what I had learned. And after enough prodding, I wrote a book about it that's called The 10-Year Career, and it became a best-selling book on Amazon. And because of putting what I learned to practice, I've been fortunate to do business with, speak to, and work with many of the world's largest companies and organizations, and travel the world to dozens of countries and places, as well as have companies that have been on the Inc. 5000 list of fastest growing companies and the Entrepreneur 360 list 6 times. But the greatest journey of my life happened about 14 years ago when my wife and I decided to adopt, and eventually several years later traveled to bring our daughter, Hannah, home from China. If anyone here has ever adopted before, you know how much time the process takes, and especially international adoption, you know how much it costs to do everything needed to bring your child home. At the time, I was really highly invested and leveraged. I had pretty much sunk all of my wealth into what became later my largest company, and excess cash at the time was harder to come by. And I was really determined not to have to like take out a loan or finance my daughter, you know? So I got back into trading the markets, and my goal was to create a strategy that I could do really alongside everything else I had going on. I was working about 80, 90-hour weeks at that point that really could help fund our adoption. And the 12-minute trading strategies were the result. And nowadays, I've been fortunate to sell some of my largest businesses built over the years, and in a way be able to semi-retire, but really now focus my time and attention on helping people just like you create financial independence through trading the markets, as well as enjoy spending more time with my family and pursuing one of my passions, which is Ironman racing, which I've been fortunate to get to a point where I'm ranked top 5% in the world. So it's really, in fact, amazing how racing the world's most prominent endurance race has really helped me become a better trader and cement some of the principles that I'm going to share with you today. So let's jump into those. I'm going to cover everything in 3 parts today. First, I'm going to share the secrets of the rich that I learned over my 5-year journey and how they relate to trading, and the 12-minute trading philosophy with you, and how really in just 3 simple steps, you can change your whole world in trading. Second, I'm going to discuss the power of simplicity by showing you the exact charting setups that I use every day to create cash flow across multiple different strategies in the market. And then lastly, I'm going to walk you through one of my most popular strategies that I teach, the double-double strategy, showing you how I put the power of simplicity to work. So let's jump in. All right, part 1, secrets of the rich. In all of my work with top investors, business leaders, entrepreneurs, I learned a few very important things. The successful and wealthy think differently. The successful and wealthy do things differently. And the successful and wealthy understand that success is a process, and there are certain secrets to get you to higher levels of success exponentially faster, but they also play the long game. I'll add that in. So secret number 1 is your mind is your most powerful asset to become wealthy. Your mind's your most powerful asset to become wealthy. Your ability to think and find ways of doing things that either build upon what's been taught by those that have come before you, or to take a concept and create a new way of doing it that gives you an edge, is something that we as humans have a unique ability to do. I found that many of the rich and most successful don't always invent entirely new ways of doing things. Instead, they look for ways, small or large, to improve upon things and gain a slight advantage. The best investors do just this. They know even the slightest advantage can give a massive edge, a massive return on risk in a lot of cases. And that was an important lesson for me to learn, and was really critical in creating the 12-minute trading strategies, because just by asking how can I create an investment strategy that consistently pays me a great return and doesn't require me to spend hardly any time doing it, because at the time I didn't have that much time, and really that I can manage from my iPhone, spurred me to start looking at how I can take common trading strategies and make them more effective for me. All right, secret number 2, the rich focus on results. The rich don't work for time, they work for results. And this is an important lesson for investors, as it doesn't matter how much time you spend in front of a computer screen looking at charts. What matters is results. You know, I really have a confession to make. For all that I've done that I do, in some ways I'm pretty lazy, especially when it comes to creating wealth like in the markets. I want to put in the least amount of time possible and get the most results possible. In trading, that means really making that most amount of money with the least amount of time. So for some people, that's really hard to grasp. I'm from the Midwest. I live outside Columbus, Ohio, and we've got that Midwest mentality that you work hard, you work long hours to get success. And in today's age, that's just not the case. People become wildly successful just by having a large following on Instagram, YouTube, or TikTok. I know people that work really, really hard, but they never really get ahead. You not only have to work hard, but smart, and you got to make sure that what you're working on is the right vehicle to drive the results that you want. The actual time that you put in doesn't really matter to anyone. And this was very important in creating the strategies that I employ, is you're going to see that some types of trades give you so much more of an advantage that just by choosing to trade them, you not only stack the odds in your favor, but you can also cut the time you spend in front of a trading screen down by 80% or more. All right, number 3, the rich look for leverage. This is one of my favorites, and it goes with the last secret of focusing on results. Leverage, simply put, means to do more with less. In order to grow your results larger and larger, you must be able to leverage your time and resources to do exponentially more. And that means get the results of 10 hours of work in 5 minutes. And you can do that every day. We do that in trading every day. One of my double trades, or the amount of contracts I do, is more than most people make in a week, or in some cases even a month, right? And so my results and the results of people that I've taught over the world have really proven this. And so leverage can come in a lot of forms, though. Businesses build systems, intellectual property, things like trademarks and patents, even like rental property, books. This presentation, the recording, can be done once. You guys can watch it over and over. That's a form of leverage, right? And then, of course, the stock market. So let me give you an example of how it relates to trading and investing. There's not much leverage in buying and holding a stock or an option. If you think about it, if you buy a stock or an option, how do you make money? It's not a trick question. For a stock, it has to go up. For an option, it has to go in the direction you bought it for. For example, if you buy a call, the underlying has to go up. If you buy a put, the underlying has to go down. But if you think about it, a stock or underlying can really go 3 ways. It can go up, it can go down, or it can stay the same. And most retail traders without an edge just jump in and just, they buy one or the other, hoping to make some money. And so that means that just by straight up buying a stock or an option, you've got a 33% chance of making money. Now, to put that in perspective, the odds of winning a hand in blackjack at a casino in Vegas are 46.36%. In some cases, you're literally better off taking your money to the casino versus just buying a stock or an option. All right, secret number 4, last of the 4 secrets. The most successful and wealthy are in control of their lives and their wealth. They do not let it be dictated by outside sources or events. They take full responsibility for their actions and their results. And to me, when I finally understood this, it meant that when it came to building a business or trading strategy, or really anything, that you have to do everything you can not to leave any stone unturned. You have to set things up to account for everything and have control over the whole process as much as possible if you want to be consistently successful. And that's why it wasn't just enough to learn that like buying a stock or an option, a lot of times just a bad idea. It was creating a system around all aspects of the trades that I was going to do that would make the difference. And that brings me to part 2, which is the 12-minute trading system. In this section, I'm going to show you how to set yourself up for better success, your trading, your investing. I'm also going to show you a unique way of looking at investing in the stock market that you're really probably not going to hear anywhere else. All right, with that said, let's jump into this. So once you start to and decide to become successful and wealthy, one of the best forms of leverage is to study those that have made it and use what you learn from them to help you accomplish the same results. So when you look at the Forbes 400 wealthiest list, immediately something sticks out. The vast majority made their fortune in one of 3 ways or a combination of them. They either owned or built businesses, they did it through investing, or they did it in real estate. And successful market investors really understand the other 2 areas. They understand how to build a business, because really a great trading strategy should be a business or set up like that. And they understand real estate, which has a lot of leverage. So they look at how they can create the leverage in the market. And so they use those principles from those areas to succeed in the markets. They leverage those secrets to help them win at a higher level. And a trading business really, like I said, should be the same. Right? Great businesses are really a collection of the systems and infrastructure that work symbiotic with each other and can continue to grow and produce on their own without the founder or the owner being there. You should be able to trade and be able to walk away from a screen and not have to worry about it, and your business works for you, creating income, right? Otherwise, you're just creating a trading job for yourself. Wouldn't you like to have a trading business that works for you without you having to be there every second looking at the market or worrying about your trades? Would you like to be able to better fund the life you want? I know you would. And with that in mind, the 12-minute trading system can be summed up in 3 simple steps. Step number 1, put the 67% odds in your favor before you ever make a trade. Real traders know how to find and maximize an edge, and that's what we do at 12-minute trading. When I realized that you have a 33% chance of making money in buying, the first thing I thought was, who has the 67% chance? Because that's who I want to be, the sellers. I only sell options because it turns me into the house and not the gambler. I'm basically selling to the suckers in the casino, and the house over time always wins. When you sell something, you also get paid. So I'm also getting paid up front to take on any risk. And lastly, back to the secret to the rich, selling gives me control. As you'll see in just a few minutes when I take you through my double-double strategy, I don't have to be right in calling a stock or a market direction. I play in the margins where the others don't. Step number 2, you increase those odds by having a solid tested set of rules for entry, defense, and exit. Over the years, I've developed specific criteria for entering trades that helps me to maximize my trades, giving me an over 90% win rate. And I track and share all my trades going all the way back to 2013. But with an over 90% win rate, that means less than 1 in 10 or so are going to have an issue or get in danger or be attacked. And while it happens rarely, I've got a whole set of defensive rules that I employ that helps to ensure that I stay profitable. And so lastly, I have clear profit targets for exit that I stay disciplined with. And that's a key for traders. A lot of traders will have a profit target, but they'll stay in too long. And anybody who's ever had that happen, where you've got a profitable trade and then all of a sudden it turns and goes against you and you're losing when you could have gotten out of your profit target, knows what I mean. So staying disciplined with that is really important. Number 3 is focus on consistent cash flow through base hits and not home runs. See, I focus on consistent, repeatable returns, month in and month out, base hits, as I like to call them. And I achieve them over and over again. And those base hits add up to home run-like returns over time, and they make for a nice, consistent cash flow business without the typical roller coaster ride of winning on one trade, like we talked about earlier, giving it all back the next, and so on, like most traders experience. I've proven these strategies can and do win over 90% of the time, even in bear markets. In fact, as many of my students know, even through last year, year to date, many of our strategies, including the double-double, had less than 1% of trades even get attacked, right? And that's the power of selling options, because you don't have to be right. You don't have to call a direction or hope for it to work out. You can make money no matter what the market does, no matter which way a stock or index goes. And yes, you can do it in less than 12 minutes a day. And for some strategies, I trade just once a week to achieve my goals. All right, so to sum it up, by choosing to sell options, I put the odds in my favor at 67%. I increase those odds to over 90% through how I enter and manage trades, including using my proprietary indicators and time-tested rules. I effectively become the house selling to the suckers in the casino, creating consistent cash flow from the markets, and I do it in less than 10 to 12 minutes a day. And guess what? You can do it too. Had to work a good old Rob Schneider cameo in there somewhere. He seems to make cameos and all kinds of stuff. Hopefully, though, you're starting to kind of see the power of looking at trading this way, and this brings me to part 2, the power of simplicity. You know, in trading the markets for almost 20 years now, and really figuring out a lot of what I've already shared, I've also realized several really important things. Traders make things much more complicated than they have to be. I think this is a trait of human nature in general, but I found the more simple that you make a trading strategy, the more successful you will be. I think Einstein said it best, saying, make things simple, but not simpler. When I show you the double-double strategy in just a couple minutes, I think you're going to understand this really, really well. Anyone ever have a chart that looks like this? I used to do this. This was me in the earlier days of trading. I thought the more indicators that I had in a chart, the smarter I was, the better edge that I have over others. But what I found, I was actually in stage 4 of the famous Trader Progression by Bo Yoder. If you ever get a chance, look that up, Trader Progression by Bo Yoder. And it's called the Squiggle Trader stage. And here's a description of it. Let me know if you guys can relate. In this stage, you begin an obsessive study of every method, every indicator that's new to you. You buy every book, attend every course, sign up for every newsletter and advisory service, register for every trading website and every chat room. You buy more elaborate software, you buy off-the-shelf systems, you spend whatever it takes to buy success. Unfortunately, you stack so much onto your charts that you become paralyzed. And with so many inputs, you can't make a decision, particularly since they rarely agree. So you focus on those which you agree with the direction of the trade you've taken, and you typically lose. You guys relate to that? I've been there. Everyone's looking for the holy grail chart setup or methodology. I'm here to tell you it doesn't exist. The closest thing to the holy grail is between your ears, your control over your mind and your emotions. That's another talk and presentation for a different day. And so the more indicators we put on a chart, the harder it is to trade successfully. I learned this lesson after several years, and I simplified to just 2 indicators, and I focused my efforts on price action. And for this, after doing this has really helped me to equate to those 90% win rates for a decade plus, and really through last year's bear market as well too. The more often we trade, especially based on emotion, we lose. The last realization that really is most important is, especially when it is moving existing trades around due to market movement. We've just had a massive rally that seems to have no end in sight, right? And when you start moving things around and you do it based on emotion, the more you lose. When you abandon your rules and your setup because of emotion and feeling, you make more mistakes and you enter more trades to fix those mistakes, causing you to exacerbate the problem and lose more. In fact, the biggest winner actually is your broker making a ton of money on trade commission fees. All right, so what I want to do now is I want to show you my chart setup and explain how I use it for my strategies. Like I said, I use the same chart setup for 5 different strategies, short through long term, based on energy, Bollinger Bands, and price action. So let me pull up a chart screen. I'm going to jump into that for you. Which one is it? That one? Not that one. There it is. All right, let's make sure. Just again, guys, type in the chat box or the questions box. Can you guys see my chart screen? Just make sure we got it. Yes. Awesome, excellent, great, thank you. Okay, so you guys can see this chart of the SPX. It's been one heck of a rally that we've had up here, right? And what you see at the bottom of the screen, this is my proprietary energy indicator. So we call this fractal energy. It was created by myself and some other professional traders, gosh, almost about 15 years ago now. And the idea was to create something that showed when a chart was going to trend, to give us an idea of when we were going to get a trend on a chart. Now, it didn't tell us which way it was going to go. It just told us if there was enough energy in the chart to trend. And so we would use that and we would trade off of that, right? And I found that it works really well in conjunction with the Bollinger Bands, right? So you'll notice that anytime that you're near the upper Bollinger Band or you break up into the upper Bollinger Band, you typically come back inside the bands, right? That's how the bands work. I like to think of them like the ropes of a boxing ring, right? Where the boxer gets pushed against the ropes, they bend, they don't break, they throw the boxer back in the ring. And so what you typically will look for using this indicator, and all the students that use our services get copies of this like Thinkorswim and stuff to download and put the chart setup in. But when you're up in this 50 to 60 range or above, you're typically fully charged. That means you're ready to trend. When you're down in this 35 to 30 range down in here or below, that means you're exhausted. The trend is over and you're at a point where you're going to have to pause and either go sideways or go back the opposite direction in the way you came, right? And so you can see how this played out perfectly as we got here. We have this fully charged chart. This is the daily chart, 1 year daily chart, fully charged chart, right? We were right here and we broke out and the trend released higher, right? We got exhausted down in here, right? And then the trend pulled back, charging that chart back up. And then we got to a point where we were ready to trend again. And we did that, right? And so that's how the energies work. The colors are something of my own design to tell me when we're near the upper Bollinger Band, we get the magenta color. Whether we are charged or exhausted, right? When we're near the upper band, we get the magenta color. When we're near the lower band, we get the yellow color, whether we're fully charged or we are exhausted. One of my favorite setups to sell into is when we're at the lower Bollinger Band and completely exhausted. So like back here's a great example of that. Lower Bollinger Band, completely exhausted, and we're typically going to go back the other way. And we did that here. And so what I'll do is I'll sell into that. Like I'll sell puts or put spreads into that, let it run away from me. And this works for every stock, every chart. This isn't just relegated to the indexes. I trade the indexes a lot just because they smooth things out, right? With individual stocks, you have to be wary of event risk and earnings. Like we're getting into earnings season, so you have to be careful trading on stocks because you know, even if you've got a good setup here and that sort of thing, sometimes earnings can tank that, right? So you just have to be careful around that stuff. That's why I like indexes for that. So that's how I use these, and that's what I look for. I look for those setups, but I also, as you'll see in the double trades, you know, use price a lot. I use price and price action and understanding price movement a lot to set up things. And I also have done incredible analysis with our mastermind group that actually know, like I know what the max swings on a stock or particular index is in a given amount of time. Like I know the most it's ever gone higher or the most it's ever gone lower, and I can set my trades around that. So we'll talk about that more in a minute. So hopefully that gives you an idea of just using these indicators, how these two indicators, just the energies, the Bollinger Bands, along with price, really can give you everything you need to trade trends, to, you know, find setups, do all that stuff. And that's kind of what we teach. Again, simplicity, right? Makes it very, very, very easy to, yep, it's there. No, it's not. Yep, it's there. Let's take it. No, it's not, right? So that's really what we spend a lot of time doing and teaching people to do. Getting out of that old habit of things, you know. So, all right, let's go back to the presentation and dig into this a little bit more. All right, so I think you guys can see the presentation again. Just want to make sure, just type yes in the questions box. Looks like yes, yes. All right, good deal. Cool. All right, so jumping back into this, let's jump into the double strategy, right? So there's 5 different strategies that I actually employ as part of 12-minute trading weekly advisory service that really cover everything from weekly cash flow to passive hands-off income over, you know, 4 to 6 months. I'm going to show you one of the most popular ones that I use, and I really kind of a bread and butter that I use for monthly income, and it's called the double. So what this strategy is, it's an iron condor strategy designed to maximize cash flow. It's designed to stack the odds in your favor for income over a 4-week or less period. We target a return of 4% return on risk. It's traded every single week. Trades are set up typically on Sunday evenings, although with the events we've been having lately, I've been doing it more midweek or later in the week, and just, you know, sending the alerts out on that stuff. But most of the time, Sunday evenings, and you're done in 10 to 12 minutes. Setup is good to cancel orders. And trades typically fill Monday AM, and the average actual time in the trade is 2.1 weeks. So why is it called double? The strategy is designed to double the trading capital allocated to the strategy in the course of a year. Simple math, if I'm making 4% minimum return on risk every 2 weeks, that compounds to a little over 100% return per year. Now, obviously, that's the goal. As I mentioned, with a 90% plus historical win rate on trades, that means not every trade is going to work out. But how many of you would be happy with a 70% return or 50%, heck, maybe even 30% on your money in the course of a year, spending 10 to 12 minutes a week to set up your trades, right? I think you'd be pretty happy with that. So let's talk about how these trades work. All right, so this is a chart, okay, of the Russell. I've done my best to try to make it so you guys could see it okay and put it on the white, but really, this is as an example, we'll go through, you'll get it. I set these trades up primarily on the indexes or index ETFs. I use the SPX, the NDX, the RUT, the SPY, IWM, the Qs, the DIA. And so this is a chart of the SPX the RUT from this week. This is the actual trade setup that I did on Friday and sent out to my students, right? So it's a real trade from, you know, really this week. And it's I mean, as of now, it's still there, right? So like I mentioned before, working with my mastermind group and other professional traders, we've really done an exhaustive analysis on the max movement in a given time frame for each index. So I know what the max move up or down is really over the last 5 years for all the indexes in timeframes from 1 day to 1 week, a month, out to 6, even 12 months. And so remember me talking earlier about increasing my odds, not just by selling options, but my rules for entering trades. You know, that's a part of increasing those odds. I look for the chart that allows me to place my trade outside those max move levels and still pay me my 4% return on risk. Also, do you remember from the beginning me speaking about, you know, the simpler we make our trading? Obviously, we just talked about that. Those 2 indicators, the Bollinger Bands primary energy indicator, help me with this too. And so for the double strategy, I like to set my trades not just outside those max move levels that I spoke about, but I also want to make sure they're outside the upper Bollinger Bands and lower Bollinger Bands on the daily chart. If I can get them on the weekly chart, even better, but on the 1-year daily chart at the minimum. And as you can see on the RUT daily chart on the screen, the upper Bollinger Band is at 1946 and the lower is at 1809. For the trade that I use for this is the iron condor. And for those of you that don't know what an iron condor is, it's simply selling a call spread and a put spread on a stock or index that's the same size width in the same cycle. For example, for this trade, sold for August 11th cycle, which is about 4 weeks out in trading days. I sold a 10 wide iron condor on the RUT, meaning that my risk is $1,000 per contract. My goal is to make $40 per contract, right? I want a 4% return on risk. I do different sizes each week of these though, ranging from 10 to 50 wide based, for different sizes of accounts. Since I know that I need to be at or outside the weekly chart Bollinger Bands and also outside the max move parameters, which you can see on the screen are 2092 on the call spread side and 1790 on the put spread side, my job is to see if there's a setup that allows me to do that and get my 4% in net credit. So when I look at the options chains, which obviously yesterday, and I can see that I can sell the August 11th, 2023, 1750 by 1760 put spread for 40 cents, which is below the lower Bollinger Band at 1809 on the daily chart and well below the 1790 level based on the max move data. In fact, the nice thing, you find a lot of times you can get way outside those levels with these. Right now, we have a lot of low volatility. When that volatility kicks up, oh, it's a dream for this trade. It's just, you're setting, things, like this might have been 50 to 100 points further out when volatility kicks up. And we're probably going to go back into volatility here in the next month or two seasonally into August, September. We see that. So it makes these trades even more fun. But you'll notice that although my target on the trade is to make 4%, I'm selling this side of the condor to pay me $40. But remember, I've got the other side to still sell and get paid on. And that's one of the great benefits of the iron condor, which I'll expand more in a second. But first, I'll discuss the call side. So when I look at the options chains, I can see that I can sell the 11th of August, 2110 by 2120 call spread for, I got 30 cents for it. It's after hours, it looked like it was like 25 to 30 cents, but I ended up getting 30 bucks for it, which is well above that 1946 upper Bollinger Band on the weekly chart and well above the 2092 level based on the max move data. I lopsided this a little bit. The RUT's going into an uptrend, so I gave myself a little more room on the top, and still put myself in a good position on the bottom. And so as with my put side though, my target on the trade is 4%, right? So I'm selling this side of the condor to pay me 30 cents. So my total credit from selling the condor is going to be $70 per contract or 7% return on my risk of $1,000 per contract. And that's really the beauty of the iron condor. You can profit off the same risk on both sides. A lot of people will sell, just put spreads or call spreads, and these do really well, especially like in a, I do that too. Like we get in an uptrending market like we've been, it's easy to sell those. I do those on a shorter time frame, and just sell them and let the, every week and let the market run away from them. But that'll change at some point, right? So you can do directional, but one of the things that I found is that they miss the leverage of the condor, really allowing them to profit from the same amount of risk on both the top and bottom side. In fact, professionals, traders will tell you that the best defense for a call spread or a put spread is to have the opposite side on. So a lot of people don't know this, but your broker won't set aside an extra $1,000 risk for both sides of the trade when you set it up. And that's what gives you that leverage. And the reason this happens, if you think about it, is if you're going to lose on the trade, right, which is where the price goes through your sold strike at expiration, that's when you are losing on the trade, right? The price can't be in two places at once. You can't lose on the top side and the bottom side at the same time, right? And so that's why your broker doesn't set aside extra capital or anything like that in your account. You can, effectively use both sides and make more money. And that's another form of leverage, and it allows you to make, even more on the trade if you so desire. If you remember, one of the secrets of the rich was they look for leverage to help them succeed. Iron condors help you do that. I like to get $70 to $80 per each 10 wide condor in the double-double strategy, and sometimes more than that if it makes sense, because it allows me to exit earlier. So I use some of that credit to buy back the trade early, and then I turn around and I put the money back to work with another new set of double-doubles. And that's why the average time I'm in one of these trades is 2.1 weeks instead of the 4 weeks that I've sold it out to. every day that the price is not at the strikes of the condor, because they're an option trade, they have time limits to which they expire, they're losing value. And after a couple of weeks or so, I can buy them back for 10 to 20 cents, exiting the trade early, ensuring my 4%, really a lot of cases more, profit goal. And once I'm in the trade, there's nothing that much for me to do with it, but really let time work on it until it exits per my orders. And as I kind of said earlier, I do have trade management rules. I've got defensive rules that I use to ensure success on the trade. I don't have time to go into all that today, but hopefully you can see the power of this real simple strategy to create monthly income in an easy and consistent way, really with minimal effort each week. So let me sum this up for you. Per my analysis of the daily, weekly chart, Bollinger Bands, and max move data, I choose the best index ETF to sell the double iron condor on each week. I sell in 4-week cycles using the weekly and regular monthly option cycles. I set up my trades as good to cancel orders, typically Sunday evenings. I target a 4% return on risk for the trade, typically sell my positions to give me a little buffer of credit. And I use that buffer to buy back the trade for 10 to 20 cents, usually in about 2 weeks. And once in the trade, there's really nothing that I really need to do but let time kind of work on it for me to exit until it gets to be that price to buy back, right? What are your risks? One of the sides of your condor could get attacked, and that causes you to lose that side. It's not impossible, but the trade, the double, is actually set up to start with an over 95% chance or better of winning. And like I said, I have defensive rules that I employ well before being attacked. This run up that we've just had, and we were just looking at on the chart just a little bit ago, I've adjusted some trades in the cycle just ahead of time up, and actually made some more money doing that just to, give myself a little, an even better chance, and just to make sure that, they don't get attacked. And they've been closing out and everything else with that, right? So we've got these defensive rules that we employ so that we ensure that we can still profit and win on these trades when we get some of those larger moves like that. But for the most part, these are designed to withstand a 10 to 12% move in the span of a few weeks, right? Which is pretty rare to get. So that's kind of the nice thing. So with all that said, can you see the power of this type of strategy? Can you see that it can give you leverage in the market, allow you to create steady monthly income instead of just buying a stock or an option and hoping that it goes the way you want it to? One of my early mentors told me, Dave, hope is not a strategy, right? So can you see how understanding the system can provide and really help you control over your income and provide those great returns? And then lastly, and most importantly, can you see the power of using a strategy like the double to create really that investing system that can work for you consistently with just a small amount of effort each week? This is a great strategy that complements directional trading. If you're somebody that loves to day trade and stuff, this is just another way to create that consistent income on the side while you're day trading and stuff like that. We've got a lot of people that do that and stuff. So you can have a professional trader like business without spending professional trader like time. Using the power of leverage, focusing on utilizing trading strategies that take me 12 minutes or less a day to manage, I figured it out, and now I trade the system and strategies like the double and others that I've shared with you that allows me to enjoy life, create great income, really do it from wherever I want in just a few minutes a day. So how does it break down to 12 minutes? A lot of people ask me this all the time. Well, 6 minutes to analyze, check the charts for the key levels and the Bollinger Bands. 2 minutes to check the options chains to make sure they're given the required return. 1 minute to set up a trade, really less than that. You guys know it takes about 2 seconds to set up a trade. 2 minutes to check in and see when it's filled. 1 minute to add my good to cancel order for the exit. And really it can all be done from my smartphone and or iPhone, wherever you are. So, all right, so let's summarize everything from today that we've talked about. In part one, we talked about the successful and wealthy think differently. The successful and wealthy do things differently. We talked about the 4 secrets that set the successful and the wealthy apart. And lastly, we discussed the power of bringing these together to create a winning system. In part two, we also covered in part one, how the super rich make their money, how the top investors learn from the businesses in real estate worlds and use that information to help them better succeed. We learned the 3 steps to create trades that win over 90% of the time. And lastly, you learn that by setting up a trading business built on selling options and stacking the odds in your favor, you do not have to be right and you can still profit. Part 2, we talked about the power of simplicity, right? Traders make things much more complicated than they need to be. Constantly ask yourself, am I making things too complicated, right? Simplify, simplify, simplify. the more indicators that we put on a chart, the harder it is to trade successfully. So figure out those ones that really matter and that really make a difference, right? And just pare it down to those ones. And the more often that we trade, especially based on emotion, we lose. So be careful of that emotional response trading, right? Be careful of that. This is where you need rules and stuff to come in that tell you, this is what I do when this happens, right? And then lastly, how using chart energy, Bollinger Bands, price action have helped me to achieve over 90% win rates annually. And then in part 3, we reviewed the double-double monthly cash flow strategy. We discussed the leverage of iron condors and benefits of them when used for a strategy like the double-double. We discussed how this can be done in 12 minutes or less each week. And we also discussed how you can easily set up and manage a strategy from really anywhere using a smartphone, creating consistent income in the markets. By now, you're probably wondering this, but what if I told you that you could put a secret of the rich to work for you and have even more leverage in that everything I just went through could be packaged up, done for you, delivered on a weekly basis to your inbox, complete with video analysis, trade setups, access to me and my team? Would you be interested in that? Well, that's what we provide our students in the 12-minute trading advisory weekly service. You literally get to look over my shoulder, trade right alongside me and my team each and every week. The service includes 5 different option selling strategies, from selling weekly options for income, monthly options like double-double, up to 4 to 6 month cycles designed to be much more set it and forget it as much as possible. The goal is consistent passive income with little to no effort, base hit after base hit. And if you're new to this style of trading, maybe you haven't done this before, we provide all the training that you need, as well as live sessions with me and our other experts throughout each month to help you learn and become successful. I have worked really, really hard to make 12-minute trading weekly advisory service the most comprehensive and best value service in the marketplace. We deliver everything. It's a service that includes 5 different short and long-term strategies, weekly advisory newsletter. This comes complete with market overview, my personal trade setups that I'm doing each week, along with a weekly video analysis of the market and the actual trade setup. So this is me going through the charts like I just did a little bit ago, showing you the setup, why I'm taking it, how I'm placing my trades, all of that so you can see that. And then I do a midweek update. Every week it's like a check-in. Hey, here's how we're doing for the week. Here's any changes that we're gonna make. Here's any updates that we're gonna do. Here's what I'm seeing, right? And then trade alerts for any move I make before I take action. This is always something that always angered me about different gurus, service providers, that stuff out there, is that they would alert a trade, but they'd already taken it like, 20, 30 minutes before, and it's not there anymore, right? So what I do is before I make my moves, I send text alerts as well as email of the alerts that I'm going to do for any trades that I'm going to enter, exit, make any moves on, anything like that. Comprehensive student portal comes complete with video training on every aspect of each strategy, the system, other resources to help you continuously improve your trading skills. And then we do live training sessions weekly, actually throughout the month, where I teach on different strategies and where you can attend, ask questions, get guidance. And we do special members only events and things like that too, which is a lot of fun. And we do it all for just $97 a month. Literally one contract of one of the trades that I do on a weekly basis pays for the service for the month. And for all of you, for attending today as a special gift, I'm going to give you guys a free trial to really kick the tires. It's a free all access 2-week trial. If you want to continue after that, like I said, it's just $97 per month. You can cancel at any time. You literally have nothing to lose. Like I said, one contract of the trade strategies that I do every week pays for it. And so we really try to deliver as much value as we can, just above the cost at this point in my career. It's more about really helping people learn this stuff and really make a difference for them in their financial future. It's a skill set you can learn, you can pass on for generations, in generations really. And so it's a lot of fun doing this with everybody around the world and stuff these days. So free all access. Again, get in, kick the tires if it's for you. Awesome. If it's not, I totally understand, but at least you can get in there and check it out. So just 12minutetrading.com/TC. Again, it's 12minutetrading.com/TC. So happy to answer any questions now. Rob, do I have some time?
Dave, I apologize, but I'd like to ask you to provide an email address to answer questions away from the webinar. You did run a little over, and I'd like to be courteous to our next presenter.
Yeah, I tried to bang through it. So, hey guys, it's really, really simple. Support at 12Minute Trading. just send any questions there. We'll get them answered. Team standing by. So just any questions you have, send them over. But grab that free trial, check it out, and would love to hear your feedback. So thanks, everyone.
Hey, thanks so much, Dave. Apologize again for jumbling the first names. They're actually two presenters from now, but
No
great
worries.
presentation.
Thank you so
You have
much.
my interest. You may see me with your free trial. And ladies and gentlemen, if you're interested in producing professional trader-like income in less than 12 minutes a day and increasing your odds of winning to over 90% in just 3 simple steps, Mr. Dave Lukas of 12-Minute Trading has a strategy for creating passive monthly income in the markets right now. You can find out by clicking on the link I put in the chat box for you. Thanks again for joining us today, Dave. Have a happy Saturday and weekend. God bless.
Take care.
Be well. Well, ladies and gentlemen, that's going to bring us to our next presenter, who's a decorated former Navy fighter pilot and graduate of the Navy Fighters Weapons School, Top Gun. He was also selected by one of the largest options trading firms in the world to be their managing director of strategies. He's the founder and CEO of Option News Network, and in 2010, he founded Top Gun Options to train retail investors of all skill levels how to trade options. He's trained over 10,000 people to date, and here to present from Supersonic to Psychedelic, investing to save and change lives, is Mr. Matt Whiz Buckley of Top Gun Trading. Welcome back to Traders Corner, Whiz, and thank you again for the service, brother.
You bet, man. Thanks. All right, folks, let's go ahead and get airborne. I'm going to absolutely blow you away today. There is no way what I'm about to tell you in the next 45 minutes you thought you were going to hear today. I'm going to tell you how you can not only save and change the lives of your fellow human beings, but you can also profit. That, ladies and gentlemen, is a win-win-win. It's what we call a self-licking ice cream cone. So let's go ahead and get airborne and talk about how we can save lives, change lives, and potentially profit. Mission objective by the end of this brief, I'm going to demonstrate to you why this sector is about to explode. How many times have you gone to a cocktail party or whatever and heard like, hey, what's the next hot stock tip or what's the next hot sector? Done for the rest of your life, because this is the only sector, and to be honest with you, it's probably the last one that could potentially save us, and how you can potentially profit off of all of that, whether it was crypto, NFT. What a joke. I saw a couple of weeks ago, Justin Bieber bought like that whatever ape JPEG for a couple $1,000,000. It's worth like 40 grand. I can't even believe somebody's like, it's worth 40 grand. I have some magic rocks in my pocket. The metaverse, Zuckerberg spent $12 billion gone, flash in the pan, stupid. And Threads is also rolling over, along with AI right now, a glorified chat bot that's going to kill all of us. All of those pale in comparison to what you're going to find out today. No distractions, silence your electronic nicotine. Let's go ahead and get airborne. As you just heard, my name's Matthew Buckley. My call sign's Whiz. Flew the F-18 Hornet for the United States Navy. About 15 years, graduated from the Navy Fighter Weapons School. That's a lot of big words for Top Gun. And also deployed to Iraq for Operation Southern Watch. Did some Operation Noble Eagle and Enduring Freedom. So that's my background. What's this have to do with trading? Everything. You don't join the Navy to get rich, folks. You join the Navy to, well, see the world and also deliver justice to bad folks. Always interested in finance, though. In the background, while other guys were sitting in the ready room drinking coffee, I was reading the Wall Street Journal, figuring out how to invest and make some money. As a young aviator, I just started applying everything I learned flying a fighter jet, having a strategy, implementing tactics, contingency planning, right? Knowing when they get out of a good or bad situation before it got worse, and managing risk. Now, some of you are probably sitting there like, that's a picture of Whiz inverted at Top Gun, and he's talking to me about managing risk. Yeah, I am. As a fighter pilot, as an options trader, I want to minimize and eliminate all known risks so we can succeed. As my wife would love to tell you, Whiz loves himself a lot and doesn't want anything bad to happen to him, and she's right. More important, I just don't want to fail, right? So I applied all of that to my trading with incredible results. But unfortunately, Top Gun Options came about as a result of a tragedy. Morning of September 11th, getting ready for my first flight as a pilot for American Airlines. I left active duty Navy, got hired by a reserve F-18 squadron flying out of Naval Air Station Fort Worth, and I was packing for my trip. My wife came in and said, "You better come look at the TV." Airplane hit the World Trade Center. I said, "I'm busy, woman, packing for my trip." And I said, "It's probably bad weather in a small airplane. Come on now." And she just looked like she had seen a ghost. I went out there and saw what you all saw. Beautiful day in New York City, big smoking hole. As I was going through my mental aviation checklist of how that could have happened, saw the other plane hit. I immediately knew we were under attack. I raced out to Naval Air Station Fort Worth, got out there with one other F-18 buddy. We ran next door to the F-16 squadron, Texas Air National Guard, I believe, the SPADs, 457th Fighter Squadron. 4 of their F-16 pilots made out there, and we briefed to get airborne and fly combat air patrol as the Pentagon got hit. Absolutely surreal day for me. Intercepted a small airplane a couple days later near prohibited airspace in Texas that made national news. What's this have to do with trading? Everything. After the attacks, about a week later, I got a photocopied letter from American Airlines HR that said, "Dear crew member, you're furloughed," which means you're fired, right? It's a polite airline term. Laid off. Didn't have a lot of money, man. What little money I saved from the Navy, we put into our first house since we lived in base housing. So I had to get serious, man. I had to go, dude, what are you going to do? I focused on my trading full time. Everything I learned as a fighter pilot was making me a pretty damn good trader. So guess what happened to me? I popped up on the radar because I was doing so good of one of the largest volatility arbitrage firms headquartered right there. You all should know that building if you watch Spider-Man, right? In the Chicago Board of Trade. That was our trading floor right there. As you can see, these big windows right there. I helped build a hedge fund when we were there. I helped build the brokerage firm Options House. Some of you might have traded Options House. It was fun. I also built from my own hands, man, the Options News Network, ONN.TV, essentially the CNBC for options, right? You know, John and Pete, before they got booted from CNBC, used to pay lip service to options. We lived it 24/7, and I had an absolute blast, giving folks like you all a behind-the-scenes look at what was going on in the options market. I jokingly tell people, hey, man, I was Eddie Murphy in trading places. I was Valentine, right? Little old dude from the streets up to the big leagues. I will tell you for a fact, there is no such thing as the smart money. We are the smart money, folks. Trust me. When I got into a room with people that were supposed to be the smart money folks, they put their pants on the same time as you and I do. We'll get into that more in a couple seconds. This is us before we left Chicago. Why do I use this picture? Because I'm a hell of a lot older, because great time in my life leaving Chicago to start Top Gun Options. This kid is going to officer candidate school for the United States Navy in a couple months. This kid's going to CU Boulder, Navy ROTC. They both want to fly jets for the Navy. And my daughter Keely is 15. She's a cheerleader. She's not allowed to leave the house until I'm dead. So that's me. Let's go ahead and get airborne. What do we do here at Top Gun Options? Two sides of the fence. Training. In the training environment, we have a paper trading where I teach people how to trade options. We have a program called Solo Amazon, and then we have something called Full Throttle. This is called a Chinese wall, right? On the other side of the Chinese wall, we get into execution. I put my real money at risk, and we have what are called investment clubs. One is called the Hunters. You could join later today when I get done. And one is called Max Afterburner, and that is our lifetime membership. So that's what we look like. And we do our live trade briefs Tuesday, Wednesday, and Thursday at 10 a.m. Eastern. Okay. Real quick, wrote a couple books, From Sea Level to Sea Level, going from the cockpit to the trading pit, and then COVID crash. How do I know we're the smart money? Because on January 22nd, 2022, I looked into this camera on my laptop and said, get out. 2022, right? COVID, right? Donald Trump looked into, 2020, I'm getting my years messed up here. Exactly. Donald Trump was in Davos. Do you remember what happened during Davos as COVID was getting ready to hit? The smartest hedge fund in the world, right? what's that guy's name? Who said cash is trash. He looked on CNBC and said cash is trash. January 2020, folks. Then Donald Trump interview with Joe Kiernan, CNBC. Last question in the interview. Mr. President, real quick, what's this China flu? Dumb question, Joe. Why you asking me? Wasting my time. I trust G. Good dude. Great backswing. Not coming here. Dumb question. I told everybody at Top Gun Options to get out. I said, buy puts on the S&P 500, get long volatility. He's lying. How do I know he's lying? I have an incredible network. Military, hedge fund, political. I had a deep throat in the White House. It was like, dude, get out. You know what I did? I told everybody. You know what senators did? They lied. Nothing's coming here. Everything's fine. And they picked up the phone and did what? They called all their best friends and their family and told people to get out. What did Uncle Sam say? Oh, well, they cleared them of insider trading. I did outsider trading, and I wrote a book about it because I made millionaires at Top Gun Options. Little old ladies in tennis shoes, we nailed it. Real quick, I also have one of the top, it's in the top 2%, I believe, of all podcasts on the planet. Why is that a big deal? There's 3.3 million podcasts. We have the Max Afterburner podcast, sponsored by our foundation called No Fallen Heroes. And that's what we're about to talk about right now. Whiz, what does this have to do with trading? You ready? I started the No Fallen Heroes Foundation because of the COVID crash. Filthy money. It'll be easier for a camel to pass through the eye of a needle than a rich man enter the kingdom of heaven. I threw a ton of money over the fence and started a nonprofit. Why? Well, real quick, ladies and gentlemen, Irish Catholic kid from South Jersey, South Philadelphia, 6 kids in my family. We were that typical Irish Catholic family. I was an altar boy, Catholic school, altar boy. My brother, who was the oldest in our family, and then my 2 sisters, Marilyn and Monica, were all attending Villanova University. And the 3 of them, when my sister Monica was a freshman, were at a fraternity party. And my brother and my sister Marilyn said, hey, we're going back to campus. Do you want to come with us? And my sister Monica said, nope, I'm going to catch a ride with these guys. 5 people in a Fiat, blew a stop sign, hit by a truck, and my sister was thrown and broke her neck, and she was killed instantly. Destroyed my family. Absolutely destroyed my family. Destroyed my faith in God. Type of God kills my sister and destroys my family. My dad died years later of a broken heart. He dropped dead of a heart attack, and I'm convinced it was a broken heart. So most people do not, most politicians, rich people, the elite that are, of course, funding wars like Ukraine and all the other stuff, their kids don't serve the military. But people like me do, middle class, lower middle class, we go into the military and we carry those traumas into the military, don't we? The military doesn't screen you for traumas and say, well, you have some trauma, let us heal. So when I went into the military, I carried in a lot of trauma, some child sexual trauma, which we don't need to get into, but not a great childhood, right, folks? Then what happened on active duty? 15 years of flying fighter jets, 16 deaths, best friends, acquaintances, in-betweens. Not one combat loss, 16 deaths in fighter aviation of people that I knew. And then 3 suicides. 3 F-18 brothers put a gun to their head. There's my best friend in the world, Eric Swenson, Captain Eric Swenson, Swede. He was a groomsman in my wedding. That's our wedding right there. 5 kids. Swede had, and he put a bullet in his head. So you know what I said? I got to do something, man. I got to do something. My transition from the military to the civilian world sucked. Going from a fighter squadron, folks, where you trust your squadron mate with your life or they're gone, right? It is life and death trust. I went from the military to Wall Street. People would push their own mother in front of a bus to make $1. It was horrible. Wall Street, you can keep it, folks. So I had some pretty serious dark nights of the soul, lying on a bathroom floor type of thing, alcohol, drugs. I was disconnected from source. I was disconnected from myself. I was disconnected from God. Right now, today, ladies and gentlemen, 22 to 44 veterans take their own lives every day. The government says maybe 17. You know what? 2 small community colleges back in November, Duke University and the University of Alabama, dug into the numbers, and they said it's actually closer to 44. You know why? Because Uncle Sam only counts violent suicides, like, oh, he shot himself in the head. They were not counting what? They don't count what? Oh, no, man, that guy drank himself to death or he overdosed on drugs. So what does this have to do with trading? Everything. How many of you have read the book Lone Survivor or watched the movie with Mark Wahlberg, Lone Survivor? The story about a Navy SEAL team inserted into Afghanistan to go after a bad guy. Only one guy lives. His name is Marcus Luttrell. Okay. Mike Murphy. Lieutenant Mike Murphy was awarded the Medal of Honor because of this mission. They named a ship after him. Well, guess what happened? When I made a ton of money from the COVID crash and I said, I have got to do something about veteran suicide. I did not know what I was going to do. 3 best friends killed themselves. Swede, what do I do? Well, guess what I did, folks? I heard about some Navy SEALs and Special Forces guys going down to Mexico to do psychedelic assisted therapy. And I got the opportunity. Hey, Whiz. I mean, what an invitation, right? Hey, Whiz, do you want to go to Mexico for a weekend and do drugs with Navy SEALs? I'm like, sign me up, man. Who would say no to that? I had no idea what I was in for, and it saved and changed my life. If you've seen the movie or read the book, you know that that is Marcus Luttrell right there. If you know anything about Black Rifle Coffee, great company, that is one of the founders right there, Jared Taylor. There's an All-American from Iowa who was suffering from horrific CTE. He played in the NFL for 8 years and was dying. And this is another Navy SEAL veteran. Ladies and gentlemen, there is not enough time for me to sit here for my limited time to tell you what happened that weekend. But let me just give you a brief summary. 12 to 14 hour experience with medicine called ibogaine. It is from iboga, which is a root from Gabon, Africa. I was able to experience my father and my sister again, and I healed decades of trauma. They didn't go anywhere. They're right here on this webinar. They're in the sun. They're in the gentle breeze outside my office window right now. They're in my daughter and in my children. I healed decades of trauma. Everything. I was given a clean piece of paper. I got home, man. It's been, I was, not that you can be a good drinker. I was a bad drinker. I could not even, after the ibogaine journey, could not even look at alcohol. It was a complete system reset. These two don't even look like this anymore. You look at Jared Taylor on Instagram, he looks like he's 15 again, like getting ready to go in the Air Force. He's lost about 50 pounds. He's completely different. Folks, I got back and I said, this is the way. This is how I'm going to end veteran suicide. And this is a big deal for me, folks, because guess what? I'm not an airline pilot, right? I got out one day at the airlines and I lost my job, went to Wall Street. But guess what? A lot of veterans who are flying for the airlines have to do what, ladies and gentlemen? Lie. When you leave the military with your back hurting, tinnitus, your ears, and depression and anxiety, and maybe a little too much drinking to numb the pain, what do they ask you on the FAA physical? Do you have any of those problems? What do you think the answer is? Nope. So, folks, this is a big deal. with not just veterans in general, but also aviators. So I actually started something called the Top Gun Fighter Foundation, but I changed the name because I was too kind of fighter pilotish to the No Fallen Heroes Foundation. And we provide healing grants to veterans, first responders, and their family members to heal. Now, ladies and gentlemen, what's this have to do with trading? Everything. This is the next explosive sector. I'm going to brief you on a conference I just came back from in Denver a couple of weeks ago, but as soon as I get back from Denver, the Wall Street Journal. Magic mushrooms, LSD, ketamine, the drugs that power Silicon Valley. The next day in the Wall Street Journal. As psychedelics become more mainstream, here's what you need to know. You probably have heard the term microdosing and this, and it's all the rage. Or MDMA, getting ready to be legalized, rescheduled for therapeutic use, ladies and gentlemen. This sector is exploding. And you can even see it. It's pretty funny, in the media too, right? If you watch Billions, Bobby Axelrod, right? He and Wags did an ayahuasca journey and all sorts of stuff like that. And Bobby Axelrod is based on who? Stevie Cohen. So Stevie Cohen a couple of weeks ago said, hey, I'm investing $5 million to help psychedelics go mainstream. And then what happened? Look at this. Blake Mycoskie. You know who Blake Mycoskie is? He started Tom's Shoes. $100 million. This was a couple days ago. This was 3 days ago. This dude is giving $100 million for psychedelic therapy, ladies and gentlemen. So, leading with, first of all, this sector is saving and changing lives. I, Edward Matthew Buckley, call sign Whiz, have never been a better father, husband, and human being. Had some dark nights of the soul, and they were all forgiven. Now, as we talk about investing, I'm going to warn you, right now, the best analogy I can give you is this is the internet 1999 or 2000. You ready for this? There's an Amazon, there's a Google, there's a Netscape, and there's a pets.com, right? You invest in two of the right names and you're rich, and you invest in the two of the wrong names and you're broke. All right. So the public psychedelic space, there are public companies. I'm going to show you a couple that are trading these names or are, doing this research and get ready to explode. So it's a little bit of the Wild West, right? And we'll take a look at the names in a second here, but I've got to warn you. So, but little risk, little reward, medium risk, medium reward. Take some risk. I'm telling you, it's going to be insane. How about that? So we're going to talk about some psychedelic names, but I'm also going to tell you some other places you can invest that is around the sector. I have to disclose this right now. I'm in what's called Healing REIT. Okay, let me just bring up our most recent prospectus here. This is called everybody, you guys are investors. A REIT is what? A real estate investment trust. So ladies and gentlemen, when, not if, MDMA is rescheduled for therapeutic use in the next 6 to 12 months, this space will explode, period. But you're not going to be doing MDMA in your current doctor's office, with the National Geographics from 1978 or fishing magazine and wax paper on the couch, on the, whatever that crappy leather thing that's falling apart is. So we are buying up properties around VA hospitals and other hospitals because, folks, this prospectus, well, I don't know. I could share it to you. I could maybe email it to you or something like that, but shows all the trials that are going on, everything, the schedules. But folks, it also shows you that for the infrastructure does not exist right now. Okay. And I'm going to tell you, look at this. MDMA therapy will be a large source of new real estate development, estimating 16,000 new clinics in about 8 years, folks. This is going to explode. Now, the reason I'm bringing this up, it's a private REIT. I mean, look at that room right there. That's not your doctor's office, right? So the reason I'm bringing this up right now, even though our REIT is closed and we're probably going to go public here next year is I'm going to tell you this. Let me get down to this slide. Where is it? Let's just say, and I'm also going to say this about Big Pharma. Let's just say that these are the largest REITs in, public REITs. Let's just say, wink, wink, nudge, nudge, elbow, elbow, that some of these names are waking up very quickly to what's coming in this space. So just because my REIT is closed doesn't mean that some of these names, wink, wink, nudge, nudge, wouldn't be a fantastic idea to maybe scoop up now, because the infrastructure simply does not exist. Okay. Now let's talk about, and I'm sure you're sitting there going, all right, Whiz, let's be honest. The 500-pound elephant in the room is who? Big Pharma. Guess what, folks? They can't stop it. You know why psychedelic? I mean, Oregon's good, Colorado's good. Currently, right now, I'm taking vet and first responders to Costa Rica and Mexico. Now I'm going to be taking them to Colorado, legal in Colorado. I get it's still, quote, illegal on the federal level, but ladies and gentlemen, you know why? Let me give you the definition of a Schedule I drug. You ready? No therapeutic use and a high risk of addiction. That is literally the definition of a cigarette. It'll kill you, no therapeutic use, and they're insanely addictive. Cigarettes legal. The ibogaine that I did that saved my life is illegal? Go figure, folks. Of course it's going to be illegal. Big Pharma and the alcohol and tobacco lobby write big checks to senators and congressmen. They can't stop it. Big Pharma is doing what right now? They speak with forked tongue like, well, a lot of research needs to be done into this. Why? They're in the background trying to do what? Patent, trademark, do all sorts of stuff. But ladies and gentlemen, last time I checked, God, source, creator, whatever word you want to use, is a pretty cool pharmacologist. You can't patent a root and you can't trademark a fungus or a toad. So Big Pharma, I'm bringing this up because if you're like, well, man, I don't know about the names he's about to show me, they're lottery tickets. I can't, it makes my skin crawl saying this. Big Pharma is going to wait for the Wild West to settle down in the space and then come in with their size 12 boots and scoop up all these psychedelic companies. I guarantee it. How do I guarantee it, ladies and gentlemen? Because I am Bobby Axelrod from Axe Capital. I was at Psychedelic Science 23 3 weeks ago in Denver. It was massive. A couple of years ago, this thing had like 2,000-3,000 hippies and Rick Doblin from MAPS. 13,000 people this year. The governor of Colorado, former presidential candidate and governor of Texas was there. Aaron Rodgers was there. Movie stars, athletes, veterans, hippies, everybody all pulling in the same direction, ladies and gentlemen. I guarantee you next year in Denver, Psychedelic Science 24 has about 20 to 30,000 people there, because I believe, not me, Rick Doblin and MAPS is saying, Whiz, 6 to 12 months MDMA, legal for therapeutic use, explosion, absolute explosion. So how do I know? Well, guess what, folks? There's me, and then there's the No Fallen Heroes Foundation. I sponsored the damn dinner. Guess who one of the other sponsors were? Atai Life Sciences. I got to meet and hang out with the CEO of Atai, Christian Angermeyer. You know who is a massive investor in Atai Life Sciences? Peter Thiel. Okay, really, really good dude and smart investor. So, ladies and gentlemen, right now, I can debrief you after attending the MAPS convention, or it was called Psychedelic Science, right? And with MDMA phase 3 trials coming, this is the way, and this is the space that is going to explode. Right now, there are 2 lines on a chart, folks. One of them is going straight into the ground, straight down. And you know what that is? That's us. That's the world. That's the United States. I have to watch the news and do all my research so I can trade and be successful, but we're going straight down. The next line that's going up to intercept that straight down line is the rise of these healing medicines and names. When I got back from Psychedelic Science, right here, look at this. I got back from Denver I did a webinar with my Top Gun Options members, and I said, buy a tie with both hands. Buy it like there's no tomorrow. It went from $1.45 to $2.50. Now, well, Whiz, that's a really cheap stock. Yeah, it is. Let's go take a look. When it came out, folks, it was a $20 stock. What happened to it? What do you mean what happened to it, folks? What happened back here? Biotech and everything imploded. The damn stock market imploded. These names right now, folks, are lottery tickets. Okay? These are the type of names where you will wake up one day in the near future. Breaking news, a tie announces fill in the blank, the stock's up 500% type of thing. These are exactly like biotech. Compass is another great name. Look what happened exactly after Denver. Got back from Denver, buy this with both hands. It went from $8 to 11. Pulled back a little bit, it filled half that gap. Ladies and gentlemen, these names, a compass and a tie are both names that I would buy with both hands. Now, if you, well, Whiz, that's trying to pick individual winners, might be a little dangerous. Here's what you need to look into then. Write this down. PSIL. It's a psychedelic ETF. It's got a basket of the largest psychedelic names. There you go. Cybin, Compass, MindMed, Celios. This one doesn't have a tie in it. I'd buy a tie on my own. I do own a tie, and I own a lot of a tie. So, folks, PSIL is an ETF that tracks all these psychedelic companies. Okay? I am telling you, after being in this space, I didn't do this, right, to profit. I started a nonprofit with my own money and to save lives. But here we are 2-3 years later, and I'm like, whoa, this sector is going to explode. MAPS, as a matter of fact, has a nonprofit arm and a for-profit arm. So I don't feel bad in the least bit of potentially profiting off of this incredible healing medicine. Aaron Rodgers is you've probably seen him in the media, and just about everybody else talks about the life-saving nature, the life-changing nature of these medicines. And folks, these medicines, let me remind you, they've been around for thousands and thousands of years. It's only us, thank you, Richard Nixon, in the 60s and the 70s, like, oh, you don't want to go to Vietnam and kill another human being? It's because you might be doing these things that actually allow you to see people as souls and not the enemy. Geez, who would have thunk it? Now it's illegal. Awful. Absolutely awful. I strongly recommend that you watch, if you haven't already, it's on Netflix. You can binge watch it. It's 4 episodes. It's called How to Change Your Mind. It is an incredible book by Michael Pollan, but they made it into a nice little Netflix series, How to Change Your Mind. Binge watch it, and it will give you more insight into this industry. This is not stopping. I guarantee you, and this isn't this is the next hot stock tip. This is it. I guarantee you, this is it, ladies and gentlemen. I have done this. I have done the work, and this is the way. Now, real quick, because I want to keep these guys on time, even though the guy in front of me went over. Top Gun Options, folks. I know this space, okay? Before I even thought about, like, you know what, maybe I'll teach my TGO members about I was leading with my heart and my truth. We give healing grants to first responders and their veterans and their family members. So I'm leading with my heart on this, but guess what? I'm also Gordon Gekko at the same time. I can teach you how to potentially make money while also saving and changing lives. I'm not going to rip through these case studies, but folks, a couple of them are, I've had several investment advisors over the years. None of them have paid much attention to my account. Much better off following Whiz and learning slowly on my own. Since we started our investment clubs, a couple $1 million in profitable trades. Started with Whiz 4 years ago, made 450 grand in that time. Haven't said it in a while, but thanks, Whiz. Whiz joined 12 days ago with a small account, up 6 grand already. So proud to have joined your squadron. Mark, see you 10. Very happy to be here. Thank you for your honesty. I will not always agree with you, but never for one moment do I doubt your sincerity or your love of our great country and your deep desire to see your clients kick ass. Folks, the smart money's getting their ass kicked. We are knocking the cover off the ball here at Top Gun Options. These 3 skill-based model portfolios, the primary brief is every Tuesday at 10 a.m., 129 grand. I took this screenshot before I got on the brief. $107,000 just trading the S&P 500. A little bit of Amazon, Goldman Sachs, and volatility. Our weekly options portfolio, again, crushing it trading the S&P 500, 80 grand. Got some Amazon, Lulu, Bud, Target, and some Apple. And then AR, the accelerated retirement portfolio, is $66,000 again, trading the S&P 500. All of our trades are categorized and on file, so you can check our performance. Losing trades happen. Our objective is to win the war, right? There are some unknown unknowns, and just to be clear, even though you didn't see any red on those year-to-date performances, there are losing trades in those, right? But net, we're more profitable than that. If you started with me 12 years ago with about 10 grand at TGO, you're a $6 million man at this point. 70, allow me to round up, 70%-ish annualized return. But you can start, I think it's $1,000, open a brokerage account, $2,000 maybe for margin, but any account size. I mean, what would you do with $6 million in 12 years? I already showed you what I did with my money. This is from February. We took the first 2 female fighter pilot veterans to do the medicine. Rosie, Notre Dame graduate, F-15E Strike Eagle pilot, and then Kristen, she's a doc. Talk about an underachiever. F-14 Tomcat pilot, became a doctor. So they both went to Costa Rica with us and did the medicine, and so did Smurf. Smurf was an F-18 pilot who ejected at 695 miles an hour. It'll be quicker to tell you what didn't break as opposed to what broke. And all 3 of these individuals are completely different human beings after the medicine. That's our director of medicine operations, and that's my beautiful bride, Susie. So that's what I'm doing with my money, folks, because you can't take it with you. Own a couple fighter jets, though. If you're ever in South Florida, I'll take you up in one of our No Fallen Heroes fighter jets. I love putting a ladder down and giving my members a once-in-a-lifetime experience. I'm going to give you some solid training. We mainly trade options here, but as I just showed you on this brief, we trade stocks too. And it's the options. Those stocks that we just talked about are under 10 bucks. I don't trade options on stocks that are under 10 bucks because they're options in and of themselves. Okay. So, I've been you. I was a lowly lieutenant in the Navy this is how old I am. Before the internet, Al Gore invented the internet, I was reading books on options, right? So I made Top Gun options for people like me. So here's what you're going to get today. Access to my live trade briefs. Usually in the accelerated retirement brief, when we're talking about longer dated trades, is when, we talk about the psychedelics. But you're going to get access to all this stuff today, along with our investment club. It's called the Hunters, where we're in here all day trading back and forth. You get all my trades there. Whiz, I work. Well, 80% of our traders work. You don't have to be here in the live sessions. I send out text alerts. I send out email alerts, and all my trades are posted in that Hunters live chat. I'm so geeked, been a subscriber for almost 3 years now. This is the first time I've been able to attend live. There's a screenshot of a text alert. So I send out a text alert. You get an email as well. I'm going to give you access to our training, right? Step 1, this is the market all the way up to session 8. These are iron condors. Building block approach, copied from Navy fighter pilot training, where we can take a dude or a lady who's never even seen an airplane and in a short amount of time turn them into a fighter pilot. So here's what you're going to get today. Access to the Hunters Investment Club, the 3 skill-based briefs, Tuesday, Wednesday, Thursday, the 8 training sessions, and the 3 skill-based manuals. And let me go give you the brief or the link right now to join. It's only, if you want to give us a test flight for a month, it's $295 for a month. I took a sniper shot on Friday that made $2,000 in the S&P 500 with 1 trade. So, we are, Try it out for the month at $295, folks, but you're going to want to upgrade. Remember, with this, you don't get access to the hunters. Okay, so if you want to try that investment club for a couple months, it's $497 a month. But this is where 80-90% of our TGO members are in an annual membership. It's only $29.95 for a year. It's a 50% discount. So these two things over here get you into that investment club called the Hunters. Do this for a couple months, check us out, and then upgrade to an annual. Okay, but if you really just want to kick the tires, it's only $295 for a month. You know, going out to a nice dinner down here in South Florida and with a bottle of wine, it's a hell of a lot more than that. So for the price of a nice dinner down here in South Florida, you can get airborne with what we do. Finally, before I turn it on over, if you just literally want to check out what we do with the most basic thing, I do a live trade brief every Monday at 10 a.m. where we just trade Amazon. It's called, obviously, Solo Amazon, and it's just $97 a month. This literally is the gateway drug to find out what we do here. I don't talk about psychedelics in this one, but this can be let me just see if this guy is a complete idiot for a month. $97, definitely cheaper than a bottle of wine. Or you do a Solo annual membership and save 25%, and it's only $897 a year. So I'll leave those links up in the chat box so you can check it out. This would get you into the psychedelics on this page, and then this would get you into Amazon for really cheap if you just want to kick the tires and hang out for 30 days, okay? Even though the guy in front of me went late, I'm a professional. I'm going to finish on time, on target, put a bomb right through the bullseye. You can potentially help save and change lives and make money in the psychedelic sector. There is no doubt it's not coming, folks. It's already here. It's up to you whether you want to get in and get airborne. Have a great rest of your day. Happy hunting. Make sure you hedge, and fights on.
Whiz, man, I gotta say, when you came back, I expected the usual presentation, and granted, it wasn't the happiest of stories, but man, do I want to thank you for sharing what you did, and did it give me even more of an appreciation for you? You know,
Thanks,
always
man.
on point, insightful, relevant, you know, and I really respect the discipline and spiritual aspect of investing in psychedelics, and I may or may not have taken a screenshot of when you had the list of tickers up.
There you go.
But you know, they're life-saving and changing modalities that can potentially heal, you know, PTSD, TBI, depression, anxiety, alcoholism, drug addiction. You know, I've got a family full of vets and a friends list that has them on it, and I wasn't able to do it myself, but nothing but appreciation and respect for those that serve the country or wear a badge otherwise.
Awesome, brother. I appreciate it, man. And we'll see you next time.
Oh, and I think I'm going to be down in South Florida in December. I want to ride in the plane.
Dude, give me a call, man. Make sure you eat a banana for breakfast, man, because it's going to taste the same coming up as it did going down.
I will definitely appreciate that advice. And I do have a way to contact you. So, you know, if it does happen, I would like to, you know, get to your locale, shake your hand.
All right, brother. Have a good day, man.
Have a great one. Thank you for making such an incredibly generous offer. Ladies and gentlemen, you can find Matt Whiz Buckley at topgunoptions.com. We wish him a great weekend, and God knows he deserves it. Oh, let's get, okay. With over 150 years of trading experience on our panel today, our next presenter has been trading futures for 10 plus years. He's been a proud customer of buy-side global indicators for 5+ years, and over his trading career, he's educated and mentored hundreds of both beginner and experienced traders. He now educates traders on how to become more consistent using the buy-side global suite of products. Ladies and gentlemen, here to present, learn our $500 a day trading strategy with Buy-Side Global Trading Room is Mr. Gary Edwards of Buy-Side Global. Welcome back to Traders Corner, Gary.
Thank you, and hope everybody's having a great day. Is everybody seeing a screen that says $500 a day strategies and secrets?
See your PowerPoint and hear you loud and clear.
Okay, good deal. Wow, talk about a tough act to follow. I don't personally know Matt. I followed him for years. He's a really cool and dynamic guy. So best to Matt for sure. He's got a really cool foundation going there. Okay, welcome to the Buy-Side Global $500 a day strategies and secrets webinar. Excuse me for just 1 second. We're glad everybody is with us today. It's going to be a fun time. The first thing we have to do is go through our disclaimers. And you know, this website is neither solicitation nor an offer to buy or sell futures or options. No presentation is being made that any account will or is likely to achieve profits. The hypothetical rule, just because things have worked in the past, doesn't guarantee they'll work in the future. However, these are strategies that we trade every day and have been trading for a while. Bottom line is, don't trade with money you can't afford to lose. Don't use the house fund. Don't use the college fund. Use risk capital only. And please write this down. This is all of our information. Our website address is www.buysideglobal.com. Email is info@buysideglobal.com. Any questions you have, and during business hours, our number is 435-659-8581. My name's Gary Edwards. I've been trading for 10 years or so, been using Buy-Side Global indicators for over 5 years, have trained hundreds of traders and helped them transition into more consistent traders. I have an extensive background in trading strategies. In fact, strategies are one of my strong point strategy in training, and have participated in indicator development. I'm just kind of the all-American guy next door, have a background in retail automotive. The hours were terrible, and working holidays, really interfering with family. I have kids who had activities and was missing a lot of them, and so I was trying to find something that would help supplement income, and so that I could cut back on some of the hours in the store. Our agenda for the day today is we're going to talk about why most traders fail, what separates the successful traders from the rest, what you really need to do to success, how we can help you, and hang around till the end. We're going to have a special offer for everybody attending the webinar. Here's some quotes from failed day traders. And most people, and probably a lot more people who have done this than would like to admit, have blown up an account. Blew up my account today, and it's because they got in too big of a hurry. They were revenge trading, probably not really ready to even be trading real money yet. This is a process, and you need to take some time to learn what you're doing. Here's another big one, and I can relate to this one as well. I've spent so much money on indicators, but none of them have a good win rate, or maybe I just don't know how to use them. Indicators alone are not going to make you money. Indicators are very important. We definitely use them. They help us apply our strategy. They help us with timing, and they help us with exits. But trading indicators by themselves is never going to make money. I mean, if there was an indicator out there that gave you a signal, told you to go in, gave you a signal, told you to go out, and made $1 million every year, well, then everybody would have that indicator and everybody would be doing it. So, indicators, again, very helpful, essential to what we do, but by themselves are not going to make you money. I don't think day trading really works. I give up. And yeah, it can be a very frustrating experience, and a lot of people do give up. In fact, 95% of all traders fail and quit within a year. They lose all their money. Again, 95%, usually within that first year, sometimes less. Some people get past that depending on the work they're willing to put in. But again, this is a process. You have to get training. You have to spend time with people who know what they're doing, and then you have to put in time on your own. This is a typical example of kind of how the trading industry is out there. Most new traders, they take a course or two, think they have a strategy, really haven't tested it in the market, and they just jump in and start trading. And as most people know, that's not a good way to go. And that's why it's such a high percentage of traders fail. The smarter ones, and there are a lot fewer of them, are the ones over here. They take the time to learn. They practice in sim. They trade micros with their real money till they get a feel of what it feels like to trade real money. Because I can tell you right now, there's a huge difference between trading real money and trading in sim. Trading in sim's essential. You've got to learn the process. Sim helps you recognize the setups as they're occurring. Now, anybody can look at a chart after the fact and say, oh yeah, there was a setup and wow, look how great it did. The hard part is recognizing the setups as they are setting up on the far right edge of the chart. And that takes time. Sim's a great way to learn and improve that skill. And then you need to practice in sim. And if you can be consistently profitable, and I'm not talking having a couple good days, I'm talking about consistent, over a minimum of a month, you need to be profitable trading in sim. Because if you're not profitable trading in sim, you're never going to be profitable trading real money. So that's a good place to start. And then once you start trading, it's not a bad idea to trade the micros. Micros were a nice add-on to the futures market, and it allows beginning traders to get their feet wet trading real money, but not being exposed to huge amounts of risk. And then once you're profitable trading micros, then you can jump into a full-size account. Trading is a skill, and it's a skill that you can learn. And it, like any skill out there, it's essential to learn it before you start practicing it. And it takes time and effort. Just like doctors, engineers, plumbers, electricians, they don't just read a book, sign a paper, and then go start practicing in their field. They go through, in some cases, years and years of study, and then internships and training. And then after they've experienced their field, they get better at it and they're able to start practicing in the field. Well, day trading is the same thing. You've got to take the time, get some education, spend some time practicing what you're learning, get good at it, and then you can start applying it. It's all about having the right focus. Most people, when they enter the markets or are thinking about being day traders and futures or options traders, whatever type of trading you like to do, most people, they're going in there with the mindset of, I'm going to go in and this is how I'm going to start making a bunch of money. And that's the wrong focus to have. Focusing on making money most of the time will lead to disaster. Your initial focus needs to be on learning, getting some education, getting some training, and then practicing and mastering a skill. Take one setup, practice it over and over again, trade it in sim, and get to where you're really good and successful with that one setup. You're able to recognize when it's setting up on the hard right edge of the chart. You're able to apply it, and you're able to be consistent with it. Because when you try to make money immediately, that's the wrong focus. Learning what you're doing and getting better at it is the focus you need to have. Some of the reasons traders fail, and the big one is lack of training, and you could also put on there lack of patience. And patience comes with training. You've got to learn a strategy, and there's tons of them out there. There's hundreds of ways to make money in the markets. There really are. But you need to find one, get training, practice it, and get good at it. You need to find a consistent strategy. A lot of people, they take some course and, it's a breakout strategy. Anytime you break the previous day, high or low, whatever, those strategies are not consistent. You need to find a strategy that over time has proven to be consistent. Again, the markets are the markets, the big money, their whole goal is to inflict as much pain on as many people as they can. I mean, that's just how the markets work. So nothing is ever guaranteed, but the markets and the patterns, they do repeat. So you need to find a strategy that over time has proven to be consistent. And then as you practice in real time in sim, it stays consistent. And then that's a strategy that you can master and learn and apply. Another big thing is people are not willing to put in the work. And this does take work. It's like any other business. You've got to take the time, put in the work, spend time getting training, spend time back testing. I consider myself a fairly consistent trader, and I still back test at least an hour and sometimes more every single night. You've got to, there's no substitute for screen time. Unfortunately, we have some good tools these days. You can run market replay on Ninja, for example, and there are ways you can practice and hone your skills. You've just got to be willing to put in the time and do it. And then this is a big one, and this is the one that leads to everybody blowing up their accounts. It's more important to manage your risk than it is to be concentrating on making money. Because if you're managing your risk and you have a consistent strategy, the money will come. You need to stop trying to find shortcuts. Like any skill and any business, there's no get rich overnight kind of thing. You've got to take the time, get the training, learn what you're doing, spend time with people who know what they're doing, and get good at it yourself. There are no shortcuts. There's no get rich quick schemes. If there were, that's what people would be doing. And then indicators and tools are powerful, but only if you know how to use them. And like we talked about earlier, indicators by themselves are not going to make you money. They're very helpful in what we do. Obviously they have a use. Even your big hedge funds and the big money players, they still use indicators. And so they are a big part of what you do, but by themselves, they're not going to make you money. You've got to learn how to apply them to a strategy that they work with. Like any other high income skill, you need to learn, practice, and paper trade until you get it right. You need a proven and consistent strategy. You need a complete trading setup. You need a trading plan. And that's another thing. You'd be shocked at how many, especially beginning traders out there, literally do not have a written out trading plan. If you don't have a plan for the day and you're going to try and just fly by the seat of your pants, you might as well just go to Vegas and start rolling the dice, because it's very similar. You need a plan. You need to know what to expect and what you plan on doing every day. Yeah, market conditions, they change daily and they change intraday. So you have to adapt as you go, but you need to have an overall general plan. You need a mentor. I don't know anybody who has gotten consistent at doing this that hasn't learned from somebody else that was already consistent. Watch us trade every day. We trade in the room live. We use our strategies, and you can watch how we do it. And then, as I said earlier, trading is a skill that you can learn. Anybody can learn. I learned it. I'm not a math whiz. I'm not a rocket scientist. You can learn it, and we can train you. And this is the Buy-Side Global Premium Trading Room. We have a trading room that we operate every day. And in the room, we're going to show going to share and teach you our proprietary trend-based trading strategy. I personally am primarily a trend trader. I take very few counter trend trades and take very few reversal trades. I leave some money on the table sometimes, but I found that when I'm trading with the trend, one, I'm more consistent, and two, I'm more relaxed. And the products that we trade and the markets in general right now, especially volatility is pretty decent. There's enough price movement range in a day that you can catch some of it. You don't have to catch the whole move, but you can catch some of it, end up with a decent profit for the day. Again, our goal is to try and hit $500 a day. And like I said, the way the markets are moving these days, you have enough opportunity just trading with the trend to potentially hit that number. We've developed and perfected our strategies over the years, and for a lot of years. I've been doing this around 10 years, and I've spent hours and hours and hours of screen time developing, learning, and trying to perfect what we're doing. And then our students use our strategies in the room and on their own every day. We have found strategies that definitely have the potential to be profitable and have proven to be so over time. And they're rules based, and we try to apply them in what we do every day. You can come into the room, watch us trade these strategies in real money every day. Again, we trade on the screen every day. And as we were speaking about earlier, risk management is everything. It's one thing to enter a trade. It's a whole nother thing to manage a trade. Managing a trade is more important than actually entering a trade. You need to know when to let it run. You need to know when to get out, and you need to know when it's not working. Everybody takes losses, everybody. And it's okay to take losses. It's part of what we do. The thing is, don't take big losses. People, they enter a trade, starts to go their way, then it starts going against them, and they start hoping it's going to go back, and they let it ride, hoping that it's going to go back, and maybe they can at least get back to break even or start making money. Hopium is the worst disease you can catch in trading. If you're wrong, you're wrong. It's okay to be wrong. I enter a trade, it doesn't go the way I want it to, I get out. And that's the mindset you need to have. Get out with a small loss versus letting it turn into a big loss. Because if all your rules are met and all the criteria is met, and you take an entry based on that, it should go your way fairly quickly. And if it doesn't, then that means on this particular setup, you're wrong. And it's okay to be wrong. Just don't be big wrong. Because this isn't gambling. We don't just roll the dice and hope something good happens. We have rules, we follow them, and that's the key to good risk management. Our goal is to average $500 a day. Watch us trade our strategy live. We don't always hit $500 a day, but then we have days where we hit quite a bit more than that. The goal is to try and average 500. And we try to do that trading small size. I never trade more than 3 contracts, and I mostly trade 1 and 2 contracts at a time. We want to keep our exposure to risk low and then try and maximize our profits. Why did we develop a $500 a day room? Well, we tried to come up with something that was reasonable, and that's the problem that many traders have. They way overestimate what they can make at the beginning and then underestimate what they have the potential to make once they get good at what they're doing. We wanted to set up something that gave us a reasonable goal to achieve. And if your goal is to make $10,000 a day, while that definitely can be done, that's not really a reasonable goal to have. So we tried to set a number that was achievable and more reasonable. And if you can average $500 a day after fees and commissions, that'll come out to about 100 grand a year, give or take. And most people think, hey, if I can pick up an extra 100 grand a year, that would really change my life. It would make my family's life better and make my life better. And we try to limit the number of trades we take a day. We have a strategy, it's rules based. We try not to take more than 4 trades a day. We don't want to be bogged down in commissions and fees. And also, we want to make sure that we filter and take the very best setups, the setups that give us the highest probabilities. And that's the hardest part in this business is, you can sit at a screen sometimes for hours as the markets move sideways and back and forth and swing up and down, and you never really get a good trade setup. You never get a setup that really meets your rules. Now throughout the course of the day, you're going to, we trade 2 or 3 markets. I primarily trade crude and gold, a little bit in the ES, but primarily crude and gold. And between those 2 markets, there's enough price movement range during a day, that we'll get, 4 or more good, high probability, quality setups. And you just have to be patient and wait for them to come to you. And like I said, that's the hardest thing to do. I find myself, especially as a room monitor, because I know everybody in there is looking to make money. I even find myself sometimes forcing trades because, that's what the people are there for. And the bottom line is that usually doesn't work out real well. It's much better to just be bored and patient and then take the high probability setups as they come. And this is just an example over the last few days. I took this screenshot, a week ago or so. This is a Top Step account that I'm working in, and this is kind of what we do. This first day, our net P&L was $987. Second day, our P&L was $480. The next day was 6 something, and then we had a $1,400 day, and then another $600 day. And we're averaging over $500 a day, and that's the goal. We're not going to make $500 every day. We're even going to have some days where you might be down for the day, and it's okay to have a down day. What you don't want to have is a blow up day. It's small losses are just part of what we do, and that's okay. Don't worry about that. The goal, again, is to try and average a profitable way of trading. Here's an example of some of the charts that we show in the room. This is a 240-minute chart, and you can see it's bearish. All of our moving averages are down, all of our momentums are down, and then this is our 30-minute chart. And the 30-minute chart, really for day trading, is my anchor chart. I really, well over 90% of the time, trade in the direction of the 30-minute chart. And when the 30-minute chart and the 240-minute chart are in confluence, especially when these 2 charts are in confluence with a daily chart, then those are the opportunities that you have to catch bigger moves in the market. When these charts are in confluence, those are the times that we, in our trades, give them a little more room to run, because our expectation is that we'll get some bigger moves. When they're not in confluence, we can trade still, but we trade with much tighter stops, take our profits quicker, and trade with smaller size, because when they're not in confluence, the probabilities of catching the larger moves are lower. Not that they can't, you can catch a big move in a day, even when these charts aren't matched up, but the probabilities are lower. And then this is our trading chart, and this is our chart based on trades we took that were being filtered by those two previous charts. And you can see, you consolidate a little bit, and then we caught a really large move to the downside. And again, we had bearish 240 and a bearish 30-minute chart. And those are the times that we look to try and catch these larger trades. Now, on this particular day, we actually had a setup right in here, and it did hit our first target, but then we got stopped out. And then we had the big support break, and then that's when it really started running. And again, we filter those with our higher time frame charts and then our strength and pulse indicators. This is one of the trades that we like as a trend direction trade. You can see we were making lower lows, lower high, lower low. Then we came up here, we made a pivot. We made a higher pivot low, and then we broke to a higher pivot high on a blue cloud with our strength indicator confirming and our pulse indicator confirming. And this is what we call a blue cloud trend direction trade, because you can see our cloud is blue. Now, this is not an Ichimoku cloud. This is a proprietary cloud that we developed for following trend. We primarily trade long when it's blue, short when it's red, and not at all when it's white, primarily. And again, this is what we call a blue cloud trend direction change with confirmation from our strength indicator and our pulse indicator. And then this is a red cloud support break. You can see our cloud is red. We broke support. You see we had kind of a sloppy double bottom right here. We're in a downtrend. We're making lower lows, lower high, lower low, then a little bit of consolidation right there. And then we had a support break. Our strength indicator is down and our pulse indicator is down. And we have a red cloud. And it really is pretty much that simple. Again, we look for short setups based on the trend cloud, and then we confirm them with our two indicators. This is what we call a wick out of the trend cloud. You can see we were in consolidation. We broke to the downside, pulled back into a red trend cloud. We made a wick bar out of the cloud. Our strength indicator is down, our pulse indicator is down, and we have a short setup on a red cloud. And these are the setups we're looking for in the room. And you can see in the white cloud, we're just chopping. And so we don't take setups in a white cloud. This is just an example of a trade that I took. This was in the London session, and we were just chopping sideways, sideways, sideways. Our 30-minute chart was making dojis, and our momentum was flat. And it actually looked like it might break out to the upside right here on a blue cloud. And I took a long, and then I ended up getting stopped out. I took a $200 loss, and then everything changed direction, got short, and ended up with my $500 for the day on this next trade. You can see that net P&L ended up being $530 after those two trades. And and those are examples of what we look at in the room every day. It's pretty simple. It's rules based. We apply our indicators to our strategy, and then we take our trades. Here's some things that people have said that are in our room. This person's known me for a couple years. She made significant improvement, and now she day trades every day. she mentioned emotions. Emotions is a huge part of this. And you know what helps you control that more than anything else you do is just hours and hours and hours of screen time. Here's a person that's been trading with me for over 5 years. And once again, you know, she's calmer when we're in the room because we do have a rules-based approach. And so when there's no trades to be taken, we just don't take them. And then when we get a good setup, our goal is to always let our runners run. I try for the most part to enter with at least 2 contracts, sometimes 3, but mostly 2 contracts. We always have a first target that we take profits on. And then we, especially with the volatility that is in the market these days, we always try to let a runner go, and we try to catch a runner so that we can take advantage of the volatility that's happening in the market. This person that's been trading with us for 6 years, and he was a little distracted that morning. He had some other things going on, but you know, he still picked up $619 in oil in a little bit under 20 minutes. You know? And he took our system, you know, and he has his own system, and that's fine. You know, many of you out there are probably trading some types of system now, and you may find that what we do actually helps filter and improve the win rate on the system you're trading. It's okay to combine the systems together. You know, most traders actually do that. Here's a guy, 66 years old. You know, you're never too old to do this. And he's been around for a while and definitely been around the markets for a while. And, you know, he appreciates the fact that, you know, our explanations are clear and concise and our setups are rules based and easy to follow. So, you know, as you can see, you know, our strategies can work for you. You know, if you follow the rules, you know, over time, they have proven to be consistent. And so, you know, we want you to come see what we're doing. You know, come hang out with us for a couple of weeks and see how you like what we're doing. And feel free to participate, ask questions. You know, we'll explain what we're doing and teach what we're doing. You know, I appreciate everybody having been with me today. You know, we really look forward to having you in the room. You know, come join the room. I'm going to have one of our team members, his name's Rob. He's going to step in here now and he's going to explain how to get signed up. And again, thank you everybody for being with us today.
Thank you, Gary. Can you hear me, Gary?
Yes, I can.
All right, thank you. Gary was our long-time customer. The reason it's important for this program is we have been in the indicator. We have been creating and then helping the traders with the indicators for almost close to 10 years since we started back in 2015. Our products are phenomenal. That's why we have thousands of customers. But we always knew one thing, even though we produce and then help with a lot of great products. But one thing we knew that even the indicators, amazing products, won't help the traders succeed. That's why we work with the experts like Gary to fill the blank in terms of what it takes to reach the final destination. Like I said, like Gary also mentioned here, great products, great indicators alone won't make you succeed. What is the missing piece? The training, mentoring, helping you guide on trading strategies, trading plan, helping you every day. Also, there is someone you can talk to when you make a mistake, when you wanted to have any questions. That's why we are introducing the program called Buy-Side Global Premium Trading Room. Here you will have A to Z in terms of the great products, strategies that works, also in terms of how the actual traders are trading. You can see them live in real dollar account, how they are making money, what are the mistakes they are making, how they're adjusting everything. We strongly believe this is what is going to help our traders to succeed, because
Hey
even
Rob,
though
let
we
me
have,
jump in. Let me jump in real quick. Sorry, I wanted to mention that this is not just a lone effort. You know, we have a team inside the room every day. We have other very highly profitable, consistent traders that will also participate. They'll mention setups. They'll answer questions, and they'll share their expertise. This is a team that works together really, really well.
that's exactly right. I think I forgot to mention that as well. It's not just Gary. So you're going to see strategies not only from Gary, the whole lot of group of the big team. Everybody have been trading every day. You're going to see different strategies as well. That's what is going to miss. That's the missing piece that I was talking about. You have to see, watch live in a real trading account to see it there. That's why we are introducing the program, the trading room. Now, can you go to the next slide, Gary?
Yes.
The program we are launching right now, we are launching at, you have access to the trading room morning 8:45 a.m. Eastern to 11:45 a.m. Eastern. You will see and live ask questions. The traders will be explaining why they are taking the trade, what they see in terms of opportunities, everything. You can see their mind talking. You can ask questions. There'll be more coaching program as well. The program is like $195 per month for you to have the full access. I know this is sometimes there's a lot of rooms in the market, a lot of traders out there. How this room is different? Why do you think, why should I trust this room is going to work for me? That's a very, very fair question. That's why we wanted to bring in, how about the 2-week full access for you to come in with no commitment, come in, just see what we do, see how they trade in terms of whether they are making money or not, they are making any additions, they're making risk management, everything you will see. That's why we wanted to give you the access. Okay, sometimes, okay, $99 for 2 weeks, still you may think better, a little bit more, right? That's why we wanted to find out, we feel so confident that this is what is you're gonna help you succeed. So we wanted to make sure you want to get in there. So if you can see the next slide, we wanted to give you the access just for $7. The reason is, once you see what's happening every day, you will feel the confidence, because sometimes seeing is watching live more than listening to my words or anybody words, because a lot of in the market right now, there's a lot of campaigns, a lot of products, a lot of rooms. Some of them don't work. That's why we want to make sure, come and join, watch how we trade, watch the strategies, ask questions. Once you feel successful, once you feel like confident, then you can join our full program, $195 per month. We wanted to give you almost free. The reason almost free, we can give you 2 weeks for free access, but we have seen, like, when we give free access, people don't put the commitment, and then they don't come every day for the 2-week trial. That's why, like, we want to give almost free, but not free. That's why we came up with the lowest possible, just $7. You know, if you go to the next slide, you will see in terms of $7 is barely nothing. You can it's your decision, right? That you can pick a, you know what, I would rather go and have a good burger for $7, or I wanted to put my commitment every day for 2 weeks and see this is something is going to help me to get better in my trading, acquire the life skill. Again, I'm telling you, this is not a shortcut for anything. This is the opportunity for you to acquire the skill that you need, the knowledge that you need in your day trading. So it's even these days you can't get a good burger for $7. I can tell you that one. But here you'll get the full access of our strategies that works, our trading plan that works, the team, they trade every day in terms of the exact timings. You can get any help that you need during that time live. Also offline, we have full support for you to help. This is the once this, we are bringing this $7 offer as a part of launching program, because this is the first time introducing this program in a long time. So that's why for us, for launch time, we wanted to bring in more traders with the lowest cost possible. Once the launch period is over, it's going to go to full price. There will not be any trial offer. I would recommend you guys to take the full opportunity to join us. You don't have to take my word. You can come, join, watch, and then make a decision based on what you see. Okay. Do you have a next slide, Gary? Yeah. So please go to buysideglobal.com/trading room trial. So this is the URL. You can join us right now. When you enter the discount, it'll say $99, but if you can enter trading room as a discount code, please use all capital letters trading room, no space, no lowercase, all capital letters trading room as a discount code. You will get the price of $7 instead of $99. Please take a screenshot in your phone, or if you can write it down, because this is not, it's only for limited time. But if you have any questions, we'll be happy to answer. Let's see if you have any questions. Do you trade?
I think you guys answered all the questions, except for, does Gary call out trades?
Yes, we do call trades, and not just me. Like I said, this is a group effort, and we have other team members that will give trade.
And the other relevant one is, do you guys spend any time on the E-mini?
Yes and no. I mean, I primarily trade crude and gold. We do look at the E-mini, and we are happy to analyze any market anybody wants to look at. Our system is consistent across all markets. The one thing that we're very, very good at is analyzing markets. We're on the right side of the market. I mean, just a vast majority of the time, and we're happy to analyze any product you want to look at. Currencies, indexes, whatever you want to look at, we're happy to throw the charts up there, give our analysis, give you some trade ideas. Again, I primarily trade crude and gold, but the system is consistent across all markets, and we're happy to look at anything anybody wants to look at.
All right, 3 questions that just came in I want to ask before we moved on. Is it web-based?
No. Well, yeah, the room is web-based. I trade on NinjaTrader 8. Our products are for NinjaTrader 8.
Right. One gentleman would like to know that if he signs up today, can he use the trial in August when he gets back home?
Yes, we can.
All right. And is there any software to buy?
You'll be using some of the indicators but for trial, you don't need anything. You can just come watch. You'll see setups, everything in the screen. You don't need anything. As long as you have NinjaTrader, that's the only software you need. You'll be able to get the full benefit from this software.
And somewhere in the recent past, NinjaTrader did become free for retail users. All right, guys. Gary, Rob, I want to thank you both for being here. Great presentation. Your trend and chops detection strategy sounds very effective. I love the strategies that simplify things, and the way the system detects market conditions and manages the trade sounds great. Ladies and gentlemen, if you're interested in Buy-Side Global's trend and chop strategy, their room, their anything, I've placed the link in the chat box. I threw the coupon code in there for you. Please go visit them at buysideglobal.com. Have a great weekend, gentlemen.
Thank you.
Thank you, Rob. Thank you so much.
Be well. Well, ladies and gentlemen, I mentioned at the top of the show that we had a great lineup, and I hope everyone's listening closely, because our next presenter is a graduate of Syracuse University and has been trading the financial markets for the past 15 years. He wears several hats over at Right Line Trading. He's a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. Here to present AI Auto Trader, powered by Next Gen Intelligence, is Mr. Rory Powers of Right Line Trading. Welcome back to Trader's Corner, Rory.
Hey, thank you, Rob. I appreciate that introduction. Thank you very much.
Always so welcome.
I just want to take just a second to make sure that my audio and you can see my screen, hear my voice.
Loud and clear, brother.
Okay, great, great. Okay, hello everybody. Thank you very much for joining me today. I know it's been a long presentation filled with great information, very talented presenters today. And I have a very exciting presentation, a great product. It's called our AI Auto Trader. And you want to stick with me for the next 40 or 45 minutes. And I'm going to show you this system trade on the live market. And it's kind of a mind blower. Let me tell you, Whiz was talking about a mind blower, but this is a little bit different than that. This is a system that, when enabled, is fully automated, and it's based on mathematical modeling combined with artificial intelligence. So stick around. I think you're going to really enjoy this. I just want to take a minute just to satisfy the CFTC. This is for educational purposes only. Trading does come with a substantial amount of risk. You could lose your entire account. Who knows? They might even come looking for you for more. It's a good idea, if you're not familiar with the risk associated with trading, is to consult a financial advisor. I certainly am not a financial advisor. And with that being said, I just want to take just a few minutes up in the front of the presentation to introduce you to the team at Right Line Trading. And I'm very honored and proud to be part of such a talented, educated group of traders and developers. And I'm just going to start very briefly. Our vision here at Right Line Trading is we want to give traders an edge. You know, we're a group of traders too, and we want an edge as well. And that edge, we want to develop software and trading strategies that help predict the future direction of price. And let me tell you, if we can gain an edge in the market and know where the market is going to go in the future, there's different ways that we can monetize that that are really exciting, and we do. First, I'm going to start by introducing our live traders. You know, in this niche, I have an inbox of emails that's filled with Monday morning quarterbacks. They all could tell you what great trades they made, you know, yesterday or the day before. But rarely do you see them calling them out before they happen. Okay, and that's really when it counts, is calling them out before it happens. And that's just what we do here at Right Line Trading. And I think that's what sets us apart from a lot of our competitors. We trade the market on the right edge of the chart every morning, Monday through Friday, and we use our own software that we've developed. So the way we can monetize our software can be done in a variety of different ways. Number one is David Kushner, and I heard Norman earlier in the presentation discussing these prop firms. And man, this is really exciting. You know, it's opened the floodgates. You know, before these prop firms, you had to be rich to trade. It wasn't for the average guy or girl. You had to have an extra 20 or 30,000, you know, sitting around in the bank account. These prop trading firms have changed all of that. For $10 or $20, you can jump in and get in the game now. And you know, you could trade multiple accounts and really start multiplying your gains very quickly without risking any of your own capital. And that's exactly what, on the top right, Mr. David Kushner does. He's currently trading in our prop trader trading room, and he trades 6 funded accounts. And he does use one of the trade copiers that Norman had alluded to earlier. He's working on 2 more accounts, and he's gonna have it at 8 funded accounts very shortly. And he's having tremendous success trading our software using those prop accounts. Secondly, second trader, futures trader, is Mr. Craig Emery. And Craig Emery, he's been trading for about 20 years. He has a similar story to most traders, including myself. He had 20 years of basically frustration, of blowing out accounts, of using indicators that just didn't work. And about 3.5 years ago, he found our software here at Right Line Trading called the Money Flow Tracker, and he uses it to successfully trade the futures markets. His primary focus is on the NASDAQ and the E-mini, and he does an incredible job trading those instruments. And third, we have Mr. David Wise. David Wise is our options guru. David Wise is a professional options trader. Prior to trading our software, he had already been trading options for 10 or 12 years. And I think he's been trading now for 14 years. He's part of the Reddit community of traders. I don't know if you're familiar with Reddit. Reddit is a community of traders that's about 40,000 members deep and strong. And that's a community that all collaborates. They share their winning strategies, what's working, what stock tickers to look at, different configurations. And they learn over the course of trial and error in several years ways to extract money consistently out of the financial markets. David, let me tell you, he has a winning percentage that's right around 90%. And something that I have to mention about David, I heard in somebody else's presentation that, humans have about 16 different personality types, and 13 of the 16 don't lend to being a good trader. Well, David happens to be one of those 3 of 16, where his personality, he has this very calm and confident demeanor. He's a seasoned veteran. He doesn't rely on biases or opinions or what he thinks might happen. When that opening bell rings, he relies 100% on the technical analysis of what the indicators are telling him. And he uses those signals in a variety of different ways to leverage options. And he truly is a talented trader. So let me go ahead and get to behind the scenes. We have a couple of newcomers here. And I'm just mentioning my team members because I think it's important. When you come aboard with Right Line Trading, you're part of our trading family. And we're kind of a niche, kind of a boutique business. And we cater to our members. And we want to be available to our members. And we've expanded our staff to not only continue to optimize the software, but to provide excellent customer support. And we've all made a commitment to do that. So we've just recently added Mr. Jacob Thomas. Jacob Thomas is a college student. He's studying cyber security and computer science. He does have 3 years of experience in customer service. Let me tell you, he's just a likable guy. You can't help but like him. He looks like he's not even old enough to shave yet. This is Jacob right down here. And let me tell you, he's very gifted with AI, and he works together with Sergio, Charles, and Mark in our development as well. We also have Mr. Brock Miller. Brock Miller is also a college student. He spent several years in customer service. He has a deep interest in digital marketing. He does some of our social media marketing. And he's also working towards his formal computer science degree. And at Right Line Trading, he utilizes his expertise to assist the company with technical support, customer service, and social media marketing. So that's Mr. Brock Miller. On our development and technical team, we've added Mr. Charles Sider. Charles Sider looks very young in this picture. However, he has an extensive history, over 30 years of providing global client support and service. This gentleman has a bachelor's degree from UCLA in computer science, and he's an engineer, okay? He pushes the team to continuously seek improvements. He's extremely diligent, and his attention to detail is extraordinary. So we're really proud to have Charles on the team now as well. Now, the development team is actually headed up by Mr. Sergio Rodriguez. I've been working with Sergio here at Right Line Trading for going on 9 years now. And let me tell you something about Sergio. He's an expert at solving problems. You know, he might not know the answer at first, okay, but he will dig in and he will find the answer. He's highly intelligent. He can make complex analysis of price action, market structure, correlative markets. He can all bring it to life on your trading chart and a variety of different indicators that he's developed, fractal indicators, multi-time frame indicators. He's extremely gifted. He has a master's degree in computer science, and he's a personal friend of mine as well. That's Mr. Sergio Rodriguez. If any of you here today are a member of Right Line Trading, I'm sure that you know Sergio. Also, as a main contributor is Mr. Mark Sachs. Mark Sachs, what can I say about Mark Sachs? He's not only is he a personal friend and mentor, but you know, I've worked with him over the last 9 or 10 years, and he's highly intelligent. I mean, maybe one of the smartest people you'll ever run across. He's a graduate from Pennsylvania, University of Pennsylvania. He was in the Phi Beta Kappa Honor Society. He has a PhD. He also has a degree in mathematics. Listen, when it comes to you know, just knowing a little, you know, a lot about just about any topic, it's definitely Mark Sachs. And his contribution to the team now has changed a little. You know, he's the founder, the pioneer of Right Line Trading. But currently he works with our development team to continue to optimize our software. He's also a very talented trader. When it comes to biotechs and he runs the biotech alert service. He has a deep understanding of options. He has his elite options alert newsletter. And we're very, very proud to have him part of our team. He makes our team that much stronger and more talented. And last but certainly not least is the new owner of Right Line Trading. The baton was kind of handed off to Mr. Mark Miller, who purchased the company from Mark Sachs. And Mark Miller has his MBA from Cal State University, and he is a U.S. Army veteran. And I think that's what brings those core values that he brings to the table. Being a veteran and you know, Whiz was talking earlier, and I have a ton of respect for anybody who has served for their country. What a sacrifice that must be. Mark Miller made that sacrifice. He's in the core values that he brings to the team that are very rare in this niche are honesty, integrity, transparency, and listen, good old-fashioned hard work, long hours, and He really instills those values throughout every department of right line trading. Personally, I find his most admirable quality is his spirituality, and we share that, him and I, and he is a true man of God. So that's our team here at Right Line Trading. And if you decide to come aboard today and take us up on our offer on the AI Auto Trader, we'll all be working as a team. That's one of our visions, is to build a community of traders who all collaborate and share and support one another on their trading journey. And what you don't find very often is to do it with integrity and honesty and transparency. And I think that's really what sets us apart. So let me go ahead and keep on moving. Now, the biggest problem that we have, and it kind of lends into what my last statement just was, and I'm just going to backtrack for just a minute. Let me see. Kind of lost my spot. Give me just a moment. Oh, okay. Yes. So I think we all share in, listen, the trading journey is where I left off and where I want to restart. I lost my place for a moment. My trading journey, and I'm going to put it on me because, and listen, I happen to love traders. I've been talking to traders for the last 10 years, probably 6 days, if not 7 days a week. And the reason I love it so much is because I feel the same way. It's almost like a David versus Goliath. It's, the small retail trader against these huge, this huge market that's full of, all types of different challenges. And, a trading journey my trading journey has been filled with a lot of frustration. The frustration for me personally is emotions. My emotions, I sabotage my own trading. I don't know if any of you can, relate to that, but I think you can. I've spoken to a number of people, and the people that I've spoken to, the traders that I've spoken to, share a very similar story. Listen, we revenge trade. If we win a few trades, we're feeling great, and then we'll take a loser, and it'll erase those 2 winners that we took. And then what'll happen is we'll just get into that revenge mode and just start trading like a madman. My biggest problem is, it's a little embarrassing, but it's the truth, and I own it. I like to close the trade and get out too early, and I like to squeeze my stop. If I see I'm up a little bit, man, I want to take that money and run. I want to put it in the bank. But what it does, I can't tell you how many times I've done it, only to watch the trade mature and go on to be an extremely profitable, lucrative trade. Had I just left it alone and not closed it or not squeezed it. And that's really a long succession of blowing out trading accounts. Listen, we all bought indicators that don't work. We've tried tools that we just, sometimes we don't know how to use them. We're not tech savvy, or they just don't work. A lot of these vendors are Monday morning quarterbacks, and I'm not going to throw mud. I just don't think that's appropriate. But if we take an honest look at it, they lack a proven trading methodology. They make it sound like it's going to be super simple, and we find out the hard way that it's not. Well, listen, me and my team, and the reason why I'm so excited is we've made a commitment to bring this to an end. These impulsive trading, this emotional problems, these trading with indicators that lag price, we want to bring it all to an end. Because when you're looking at the right edge of the chart, we have absolutely no idea which way it's going to go. Just like David Wise, I had mentioned earlier, the CPI report was coming out a couple of months ago, and the inflation was running hot, hot, hot. And we just knew that the Fed was going to raise the rates and try to get this inflation under control. So the CPI report was coming out. We knew it was going to be a hot one. And I asked David Wise, because I respect him as an options trader. I want him to make a little money. I asked him, what are you going to do? Where, it's 8:30 in the morning. The market hadn't opened. And, David told me, that he doesn't know what he's going to do yet. When he said that, a light bulb went off in my head, because, that's the problem that we do, is we have an opinion of what the market's going to do, and then the market will prove us wrong. And the truth of the matter is we just don't know. So as software developers, to be able to provide you with a tool that helps predict the future direction of price, and also, just important, to define risk. We want to take entries where the lowest amount of risk is at play. We don't want to jump into a trade only to head into a pivot or an area of support or resistance. Or on a higher time frame, it's headed the opposite way and take a counter trend trade. So we have to have the proper tools that identify exactly where to get into the trade. And ideally, because a number of us are part of those 13 out of 16 personalities, that trading just doesn't agree with us. Okay, I own it, and I can live with it. But this is a solution. This is absolutely a solution. This software does the heavy lifting for you. The AI Auto Trader is a strategy that's housed in NinjaTrader 8. I don't know, does anybody use NinjaTrader 8? Do you guys trade futures, use NinjaTrader 8? Well, if you use NinjaTrader 8, okay, listen, this is a very powerful futures trading tool. They have features that it might take a year or two to become fully aware of all of the powerful tools that NinjaTrader 8 has for futures traders. And the AI Auto Trader is a strategy that runs on NinjaTrader 8. NinjaTrader 8 is now a free platform. Okay, it's free. But several years ago, I think I paid $1,400 or $1,500, but that's not the case now. Now you can get a prop account for $15 and trade on NinjaTrader and have a free platform and free data, and you're in the game. So, and a lot of people ask me, hey, Rory, does the AI Auto Trader trade prop accounts? Absolutely. Absolutely. So why are we so excited, and why do we feel that this is the most advanced auto trader that we've ever developed? Well, it's a number of different reasons. I think without reading the bullets that are on my screen, this has been a process, kind of in a system that has evolved over the many years that we've been working at it. This is absolutely not something that we've just begun trying. This is an evolution of about 12 or 13 years of very hard work and a lot of data analysis, and admitting that we were wrong a number of times. But now we're doing very well, and our equity curve shows it. NinjaTrader has provided us with some great tools that we use to optimize the settings. In NinjaTrader, it's called the Strategy Analyzer. And we have some powerful proprietary indicators that help predict the future direction of price. These are the same indicators that David Wise and David Kushner and Mark Sachs, the same set of indicators that they use to find the trades for their alert services. And this strategy, as I've mentioned earlier, we've got it to where it's fully automated. Okay, you check off that box to enable the strategy, and this will execute and manage the trades on your behalf. Okay, so it is fully automated. Let me keep moving. So what are the benefits from using AI? And I'm going to go really fast. I know it's been a long day for everybody. There's no more overthinking. There's no more revenge trading. All those emotional errors are out the window. What I really like about the system is we have a momentum-based trailing stop. I'm going to show you some of the data here in just a moment. And, you know, numbers, I'm kind of a numbers person. You know, that numbers kind of, you know, you could see, you know, talk is one thing, but the numbers will tell you the full story. That momentum-based trailing stop, I think one of the biggest issues that when I talk to futures traders, they tell me it's the risk to reward. They'll take 2 or 3 trades and then lose one, and it blows out all the winnings that they just worked so hard to get. What you're going to see in the numbers that I'm about to show you is that our momentum-based trailing stop allows our winners to be larger than our losers. Okay, our one winning trade on the average is larger than one losing trade, which is a huge game changer. We have optimized profit targets. Every single strategy that we deliver is pre-formatted with all of the inputs already in place. Right out of the box, you load it up, all of the inputs are there, you'll enable it, and it does all of the work for you. Okay, so there's no more cutting your winners short. I had to put that in for me. And there's no more mismanaged trades or over trading. And I'm going to show you a chart. And this is not a black box system. Okay, I've purchased a few strategies in the past, and when I received them, you know, I kind of enabled the box, and I really didn't know what caused it to take a trade. You know, I just crossed my fingers and toes and hoped to God that it would deliver a few winners. But that's not the case here. Let me show you, let me explain to you exactly. And I heard Norman talking earlier about his trigger, what triggers a trade. And that's kind of what I'm going to go into here is what triggers a trade for this automated system. Number one is our market internals indicator. The premise of our software is to follow in the direction of institutional money. Well, how do we know when institutional money is at play? There's a few different ways that I'm going to go over right now. Number one is the market internals. The market internals are looking at a disparity between uptick versus downtick. It's looking at 16 different market internals. And when institutional money is driving the market in one way or another, then there's a disparity between uptick and downtick. It's also looking at some declining ratios. So these green triangles that you see on my chart are telling you that that market internals is pushing the price of the NASDAQ up. There's a disparity between uptick versus downtick. The second one is the background bias. Now, us being retail traders, there's no way in the world that we can create a trend. These trends are created by these large institutions that are dumping millions, if not billions of dollars into the market. So having the background bias, what it's telling us is that there's a multi-time frame alignment in trend. What I mean by that is I'm looking at a 5-minute chart here. If the background color of my chart turns green on a 10 and a 15-minute, it's also trending up. So we found statistically that when you have a multi-time frame alignment and trend, that your chances of success increase dramatically. So before we had this bias indicator, what most traders did, if they were taking a trade on a 5-minute chart, they might look at a 30-minute chart or a daily chart just to make sure that they're not getting into a counter trend trade, to make sure that the trend also aligned on those higher time frames. Well, these aren't trades that we hold overnight. These are all intraday trades. So we're looking at a 10 and a 15-minute higher time frame. Another one of our ingredients to the secret sauce was that momentum-based trailing stop. And I'm going to show you that in just a few moments. Now, also, I had mentioned earlier that software developers, we have to define risk. One of the ways that a couple of the ways that we define risk are these pivots. These orange dotted lines or red dotted lines up on the top, and then if I squeeze my chart, you'll see one down at the bottom. These are areas of support or resistance. We also have a VWAP on the chart. Now, we just don't trade into those areas. We have it coded into our strategy that we must have the amount of room necessary, the number of ticks necessary to hit our first target before there's an area of support or resistance. So on my entry right here, before it took this trade, it assessed the distance to where this pivot was located. And if my target came after that area of support or resistance, it would not have triggered the trade. Okay, it would have never got me into the trade. So our strategy will not trade into an area of support or resistance. We also have our dynamic dashboard. This writing that you see up at the top left, I can't tell you before we had this how many people would ask us, hey, everything looked perfect here, everything looked perfect there. Why didn't the system take a trade? And I think having this transparency, and if you're just starting out trading, even to have it as a tool, we have people that trade this system on a discretionary basis. All of the parameters or all of the conditions that must be met within our strategy parameters are all listed here at the top left of my chart. Once they are satisfied or met, they turn green. If they have not been satisfied, it's red, okay? Once they all go green, you'll see a green cross, and I'm about to show you the system trade on a live market. You'll see these crosses come up, meaning all of the conditions have been met, and now we're gonna get into a trade. If your strategy's enabled, you do nothing, it's gonna put you into that trade, okay? So let's go ahead and let's keep moving. Because I do want to show you the system on a live market, and I want to show you the type of results that we can get. I don't want to overcomplicate things. This is talking about the triple screen. I've heard the higher time frames called triple sync logic or something of that nature, but I think I've done I like to keep things simple. My father always told me, KISS, keep it simple, stupid. And I don't want to get into some complicated explanation. So I'm about to show you some back test results and some real live trading results. And I just want to be transparent. And the back test is a very powerful tool in NinjaTrader. What it allows us to do is within just a few minutes, we can make different adjustments to our ATM strategies, to our inputs of our strategy parameters, and test them over a month or 2 months or 3 months of data very quickly, very quickly. However, it's not the end all be all. They're not perfect results. They're absolutely not 100% perfect. They do give us a clear indication of which settings work better than others, and they're close. They're very close. You can see on the left are the trades that were taken in a live account. On the right, trades that were in the back test. And there, you know, you could see on some of them, the back test is if this was a perfect world and there was no slippage and there was no market makers and there was no bid ask spread. In a perfect world, you'd get these back test results where when you're trading in a live market, all these variables come into play and they change the results a little bit. So I want to show you one of our better strategies. I was just showing the chart on it, and this is the NASDAQ on a 5-minute. You know, just like we were saying, we have, you know, as humans, 16 different personalities, you know, that, you know, each one of us has one of the 16. I guess some people could have more. But a lot like personalities in humans, instruments, these different markets that we trade on the futures market, has a different personality in its own. The NASDAQ 5-minute, you know, the NASDAQ is like driving a Lamborghini. It's very fast moving, and it's a real challenge to trade manually on a discretionary basis. So this is the NASDAQ, and we ran this test on our current settings that we use over the course of 3 months, from April 15th to July 15th. And you can see here that it was the total net profit is about 12,500. We did that with a winning percentage of about just under 51%. Now, it's nothing to write home about, but let me show you a couple of things that to take into consideration. Our ATM strategy, we take our first profit target at 30. When we hit our first profit target, our stop will go to break even. And then we're in the trade for a second profit target of 75. So a lot of these trades, about 66% of them, do not hit the second profit target. They come back to break even and we make 30 ticks on the trade. Okay? So those are the number of even trades, which were 45 of them. Okay? So those really aren't losing trades, but they're not considered profitable trades. So this 50% in reality is a little bit higher than that. Okay? But the winning percentage isn't this outrageous winning percentage. But what is so impressive and why we're having success with this system is our average winning trade is much larger than our average losing trade. So if we take a loser, it's not going to kill us. It's not going to wipe us out on the 2 or 3 winners that we took. And that's what makes such a huge difference. If I go to the chart, you can see the trades that it actually took. And we have a really nice diversification of different time frames and instruments that we're currently trading on this system. So we have, in addition to the NASDAQ on a 5-minute, we also have a new strategy that I'm going to show you next. And we call this new strategy our golden goose. The equity curve on this, if I show you the equity curve on the NASDAQ 5-minute, it's very smooth. This was going by the half hour of the day on the analysis. So you can see it spread out very nicely. Where some strategies, we change the trading hours depending, what this does, so you know, is it breaks down the profits every half hour of the day. And this next strategy I'm about to show you, having that ability to look at the data and break down hours of the day that are most profitable. And our team meets several hours every week to go over the data. And that's one of the advantages of having a system that's been around for so long. With the experience that we have accumulated data and a good understanding of how to optimize it. So what I was going to show you next is our newest strategy. It's called the Golden Goose. The Golden Goose trades obviously gold. Now, I'm not saying we put all our eggs in the Golden Goose's basket, but this Golden Goose has been doing extremely well. Now that we have some data moving forward, it's going to do even better. And I'm going to show you why. It turns out, gold trades on the COMEX. The gold market or the gold pit begins at 8:20 in the morning. Okay, the early bird gets the worm. 8:20, between 8:20 and 11, this system, this strategy has been absolutely crushing it. Okay, it's been doing amazingly well. Initially our mistake was allowing it to run beyond 11 o'clock a.m. because what we had found was after 11, the same volume isn't at play. It doesn't have the volatility and there's not as much volume. There's no follow through in the trades. So these are the results of gold, same time period, April 15th to July 15th. And you could see over the last 3 months, again, it doesn't have a very high winning percentage, 49%. In reality, you'd have to add these 38 to these 123 profitable trades. I really consider these even trades, even though technically they're not profitable, they were part of a trade that was profitable. So, but the average winning trade was $194, where the average losing trade was $150, which is a really nice difference in our favor. You can see on the charts the trades that it takes. And this is, really right when it likes to jump in. You could see the market opens right about 8:20, and we are going into a pivot. The market internals kicks right in immediately, and it sniffs it out. And this system is great at that. And you'll see in my demonstration how this system just capitalizes on this volatility. But at 8:20, you could see all the conditions of our strategy are met, and boom, it jumps into that trade and hits our second profit target. So that's when it's really exciting to enable that strategy at 8:20 a.m. and before the opening bell, you're up 400 or 500, and you really don't even need to enable the strategies. You could be done for the day. So the gold has been a really great addition. We call it the Golden Goose, and that is absolutely one of the strategies that you would get by coming aboard today. Now, we started trading gold. This is actual trade performance. We started trading gold on June 26th through July 15th. And if we go to the analysis of this, let me see. Okay. And we break it down by the half hour. You could see that most of our money is made right up until 11 o'clock. Okay. So what we've done is we've just sent to our members, and this is part of the maintenance that other vendors just don't do. Some vendors that I've dealt with in the past have sold me a strategy that might have worked well for a month or two. And then when market conditions change, well, they don't want to be bothered. They might be sipping on a margarita in Margaritaville. They don't really care. But that's not the case here. A lot of our subscribers, all of our subscribers are on a subscription, and it really keeps us on top of the game. It's a win-win relationship. We want to keep you. We want to keep the the system profitable. And as market conditions change, we're always going to be optimizing the settings. So what we've just sent out today was we've changed our trading hours. We went back over months of data and we've optimized our trading hours. We're not going to trade into these periods of time where over the last few months, they've just lost money. Doesn't make sense. So we're down to the half hour of the day, optimizing these inputs and strategies. So we know exactly when to enable these strategies, when the start time is going to be and when the end time is going to be. So I just wanted to show you that very briefly. And I tell you, I also wanted to show you because, you know, we firmly believe that we don't want you to be in a black box situation. So what I'm going to do is I'm going to open up a strategy on my NinjaTrader 8 platform, and I'm going to quickly load one of our templates. This is the gold template here. So the parameters of the strategy you could see here. And I'm not going to go through them all because I've mentioned a lot of them, but a few of them I'm just going to take a moment or two to explain why we have them and what their purpose is. Now, I know some people at this point of the presentation, which is only about a minute long, this doesn't appeal to some people. They don't want to get under the hood. They don't really care about how it works. They just want to enable it and make money. And we understand that. We got you. Out of the box, we're going to deliver strategies that we have found to be profitable. Okay. Now there's the other half of you that love to get under the hood. You want to get your hands dirty and you want to try a variety of different things. You want to try different bar types and time frames and instruments. And God bless you. That this is perfect for you too, because there's a zillion variations that you can run in these strategies. So the inputs are very much what I described to you earlier. Our market internals, our background bias. We have our moving averages. We take into consideration market structure. We never want to trade into a counter trend trade. When we take a long trade, the moving averages have to be moving up. And when we take a short trade, moving down. We have a lot of our prop traders love this feature. I love it too because I don't want to take any big drawdowns. You know, if I lose $400 or $500, some of these strategies I have on even less than that, I'm done for the day. I'll see you tomorrow. And you know what? If once I make 800, and usually, most of the time, you're going to hit your profit target, during the daily session with a number of different strategies running simultaneously. But there are days you are going to hit your loss target. It's just part of trading. And the key is to keep the drawdowns to a minimum. So I have my trading hours. We're starting them at gold now. We're changing this to 11 a.m. And we're cutting out all those hours that we were losing money. So in just from 8:20 to 11, this system, when it's enabled, is going to trade. We have a great feature called entry on same bar. As soon as my conditions are met, it's not going to wait for the next bar. It's going to fire a trade. These are 2-minute candles it's leveraging. It's going to fire a trade within the same 2-minute candle once the conditions are met. So it's lightning fast. The conditions of our entry, these are the conditions on my chart that I had showed you that must be met in order for the system to fire a trade. I must have my market internals. And if you hover your mouse over each one of them, it'll kind of explain to you, what each condition is. And I must have my background bias, my moving averages. We respect market structure. A very, very important condition we call the MA diff. Once a trade, once a move, once the money is, we define that money as being driving the price of the NASDAQ up. Well, at a certain point, it becomes oversold. And we're just too far away from the 50 to enter a trade. So we define the price, the distance from our fast line to our slow line, a number of ticks that we want to allow the system to take a trade. So it's not going to get you into an overbought or oversold market. And last but not least, with the conditions are our areas of support and resistance. We must define risk. Listen, we're going to let some of the winners pass us by. We're not going to get into them all. And there's a fine line between pulling in a lot of losers and catching all the winning trades. And really our job is to keep you out of the losers. So listen, I know it's, you know, it sucks, excuse my French, to see a winning trade pass us by, but it's just part of the game. Our trade management, we have trailing stops. You can trade as many E-minis or micros that you want to trade. These are the first profit target, the second profit target. We have a break even at the first target, so we can get you into a runner. On the NASDAQ, we have a really exciting 1-minute strategy that, you know, it runs like a Lamborghini. And sometimes we get 100 ticks on the second contract. So there's a variety of different ways that we can manage our trades. And we've done extensive testing throughout the year because market conditions change and our strategy parameters will continue to change as the market conditions do. Okay, so and then we can fill in the instrument that we're trading. This one happened to have been gold. And then we could set it on any account that we want to set it on. If you have a prop account, a live account, a sim account, it makes no difference. Any account you want. Okay, and then you would click OK, and you would enable your strategy. And you're ready to trade. Okay, any questions on any of that? I just want to take a quick drink of water, and I'm going to wrap it up soon. I've gone over already, but I did want to show you a demonstration of how the system trades on a live market. And I'm going to close the webinar with my video. Part of my special offer today is going to be to become a member of our Discord chat group. We have a great Discord chat group. We have 2 members of our staff that are in there. In fact, the owner of the company, Mark Miller, is in there every day, and he trades his live account, and he's communicating with our family of traders every day. We have our daily results channel, our prop trading channel. We have our update channel, tech support channel. So part of the special offer is you will become a member of our community of traders. And we do offer tech support. So what we're offering today for Traders Corner is our 2-for-1 special offer. Our 2-for-1 special offer, what that includes is both the discretionary and the automated systems. So if you decide to come aboard today, you're going to receive all of the chart templates for all of the different time frames and instruments that we trade. And we have 1 minute, 2 minute, 5 minute, 15 minute, 30 minute, and a variety of different instruments. You're going to receive all of the chart templates, all of the ATM templates, all of the ATM strategies, and all of the automated strategies that you will be able to load up in NinjaTrader. The cost, using coupon code SAVE $100. And Rob, if you could please put my link in there. But using discount code SAVE $100, it'll be a $2.99 a month subscription. Okay. We also have an annual option, which is a tremendous savings. It's really the best value. For $19.97 a year, it breaks down to about $175 a month. Use coupon code SAVE $500. save $500. If you come aboard now, you're going to receive all additional markets. And let me tell you, I didn't get a chance to show you the one that we're developing on the YM. We've got a template coming out on the YM that I didn't really have time to show, but it's getting outstanding results. So the YM is coming out probably next week. And as we add additional instruments, you're always going to receive those free of charge. So I'm going to drop my screen and I'm going to just run this video. And if anybody has any questions, please put those in the chat box. If I do not get a chance to answer your question, please put your name and your number in the chat box or the questions box. Let me just make sure that Rob has put my link in.
I absolutely did.
Oh, okay, thank you. I'm just about done, Rob. 2 minutes. I'm going to close now. So if you had a question, I know time went really quick, but I do want to answer your questions. If you type your name and your phone number, we're not telemarketers. If you ask us to call, we'll give you a call. If you don't, listen, we're not gonna bug you. But put your name and number in. I'll be happy to answer. Also, Jacob is on standby. He'll be happy to answer any questions that you might have. But I wanted you guys to see on a full screen here, the system trading on a live market. In this demonstration, I have the NASDAQ 5-minute, 15-minute, and 1-minute strategy running simultaneously with the ES on a 5-minute. And this was filmed on July 7th or July 8th, I believe. And that was one of, listen, ever since the inflation, these CPI reports are getting better now. And inflation is subsiding, and we're seeing a big comeback. Tech is starting to make a big comeback. Thank God my 401k is too. But it's really been such an exciting time to watch this system. Simultaneously, it's going to calculate all of those conditions that I mentioned earlier. Now, us being discretionary traders, trying to trade a fast-moving market, or try to trade 3 or 4 fast-moving markets, and only entering when all of those conditions have been met. Okay, we cannot do it. You'd have to be like Michael Jordan. It's virtually, I think it's impossible. The excitement that this system brings, does it take losing trades? Absolutely. Do we have red days? Of course we do. But let me tell you, when the market starts moving like it did, I think this was July 8th or 9th, and they were pushing the price of the S&P 500 and the NASDAQ up. This thing was, I mean, it ran up the score like you wouldn't believe. I think we made $3,000 or $4,000 that day. So it's an extremely exciting system. It'll trade these markets all together at the same time. I'm sliding over in the video the results that were up to July 7th, I believe. So the first week of July, we were up about 3356. And right now we're up about 5,000 midway through the month. So it's a very exciting system. And I just wanted you to see that. And listen, I don't want to take any more of your time. I really appreciate everybody's attention and your time. Listen, if you've suffered frustration in the past, if you've blown out trading accounts, you're not alone. You're not alone. There is hope. This system can make it happen for you. It can be a game changer. It has the potential to do it. And I hope that you'll give it a try. For $2.99 to give it a try for a month, we will make you a believer. We'll make you a believer. We'll make you part of our family for life. So I want to thank everybody. I'm going to answer just 1 or 2 questions on what size account. Ben, if you're trading a live account and you want to trade the E-minis, you want to have at least 5 or 10,000. 5 would absolutely be the bare minimum, but I would recommend maybe 7,500. If you want to trade micros, have a couple thousand in your account. Give yourself a cushion. Okay, if you're underfunded, you get these margin calls and all types of problems that you can run into. So it's better to have a little cushion there. You can run it on as many tickers, Shannon, as you would like. We run it simultaneously on gold, NASDAQ, and the E-mini. That's what my video was showing. That's funny, RK. RK says, with a win rate of 90%, we want to hear about David Wise's trades. Well, we'll send you an invite to David Wise's presentation. Okay, everybody, listen, I see there's more questions and some phone numbers. And listen, as soon as Traders Corner ends the webinar, I'm going to jump on the phone and I'm going to give the numbers. If you left a number, Rob will share them with me and I'll give you a call back. God bless you, everybody. I wish you much success in your trading career. Thanks again for joining me today. God bless you.
Hey, thank you, Rory. That strategy looks amazing. We've been hearing about your automated strategy, and then it's just been crushing it lately. And the example you gave pretty much proves it. Ladies and gentlemen, if you struggle with human error, overtrading, inconsistent results, and blowing out trading accounts, then Rory Powers over at Right Line Trading has a solution for you. You can learn more by clicking the link. You might have already signed up. If not, Rory says he'll give you a call shortly, which he usually does. And Rory, thanks again. Have yourself a great weekend, sir. Ladies and gentlemen, that'll conclude our July Investor Summit. The staff at Traders Corner wants to thank you all for joining us today. It's been an information-packed event, and we hope you enjoy the rest of your weekend. Have a wonderful evening, a safe everything. Thank you again for being here. All the presentations will be posted on our YouTube channel tomorrow afternoon. An email may follow with a link to it, and they might be available from the website at some point. God bless all. Have a great evening.